So guys, we are live. Do let me know whether am I audible to you properly or not. Do let me know whether am I audible to you properly or not so that we can start off with today's session. Hmm. Do let me know whether yes, sir, audible. Okay, sir. Okay, sir. Okay. So, hello everybody and welcome to this very special marathon for CA Final Direct Taxes and International Taxation. That too in entire English. A very special marathon in which we are going to cover nearly 10 chapters of our CA finality and those 10 chapters which you might ignore while studying. This will be a pocket sized dynamo for all of you. If you don't want to study these topics, just listen to them. If you are just thinking of leaving these topics a day before exam, you just have to refer this video. That will be all it. This will be a complete holistic video which not only just covers all the topics, covers the question answers of those topics which are relevant for your understanding towards the subject. With that, I warm welcome all of you to this session. We have with us Ankit, we have Shavani, we have Reddy, we have many other people joining one by one. Sir, this marathon is completely in English. If you understand a bit of Hindi, if you understand a part of Hindi, then there has been a separate marathon that has already been taken last week, completely uploaded on YouTube. You can refer that also. If you are not comfortable with Hindi, then this marathon is absolutely meant for you. Second thing, this is a part marathon of our three-day marathon. First marathon we did take yesterday, which was all about international taxation. Entire international taxation, including all the small topics that were there in international taxation, we did there. In this marathon, we aim to cover small topics like, sir, we have appeals, we have DRC, we have GAAR, we have miscellaneous provisions, we have tax audit, we have black money law, we have ICDS, we have deductions, we have clubbing, we have set off. These 10 chapters we aim to complete in 5 to 5.5 hours, that to maximum. Sir, we got your point. We got your point to the fullest. Okay, sir, absolutely clear. Sir, whatever material you have, it's okay to me. If you have material of any other faculty, sir, no issue whatsoever because income tax remains the same. Sir, if you have any doubt, if you have anything extra, do let me know. I will incorporate that thing in my book. Maybe I may not. I have not seen anything which I have left out in my material. But if you find anything that is not given in my book, do let me know. I will add it in my book. If you find anything extra that is given in my book, not available in your book, do take a screenshot or do write it down so that this will make your book more holistic one and my book also a bit more holistic one. Sir, apart from that, sir, you must have 100 question PDF, a super 100 question PDF that has been circulated by me in my Telegram channel. Sir, that PDF should be with you so that now, whenever I am referring to questions, you may not be wasting time searching for the questions. Sir, you got that point. Next thing, what I want from you all is, sir, just like the video, do comment down, sir. Every time, whenever we complete a topic, do comment down, sir. It is absolutely clear. It is absolutely clear, sir. Clear. That is to be written again and again. This marathon is an interacting marathon. You have to respond for whatever the inquiries I make. Sir, this will make it more lively. This will make it more joyful. Without wasting any time, sir, let us start our topic. First of all is appeals and revisions. Sir, appeals revisions imply there are two parts of the chapter. First one is appeal, second one is revision. Sir, appeal imply, sir, lodging a complaint to a higher authority. If we are not satisfied with the order of the assessing officer, then we want somebody with whom you can complain. Sir, that is called appellate authority. Sir, we have four kind of appellate authorities. Sir, Joint Commission appeals, we have CIT appeals, to whom appeal is to be lodged within 30 days. Over and above that, sir, we have ITAT, in which appeal is to be lodged within 2 months, sir. Or ignore the old date, sir. We have to lodge the appeal within 2 months from the end of the month of the order. Sir, if we go to High Court, sir, appeal is to be lodged within 120 days for only the question of law. So remember, at the time of studying advanced ruling, we had to go to High Court within 60 days. But normally, going to High Court takes 120 days. Appeal to Supreme Court, sir, 90 days from the date of the order. Sir, there are three orders against which you cannot appeal. Sir, what are those three orders? First of all, any order for the interest. Sir, try repeat after me. Sir, any order against interest under section 234 A, B, C, you cannot appeal. Second thing, any of the order of revision under section 264, sir, is not appealable. And third thing is any order of DRC. Sir, you might forget it as of now. I will come back to this topic again when we will be studying the respective topics. First of all, sir, appeal to Joint Commissioner appeals and CIT appeals, sir. Which orders are appealable to Joint Commissioner? Sir, whenever an assessing officer below the level of Joint Commissioner passes any order, you can file appeal against that order to the Joint Commissioner appeals. Joint Commissioners below level officer, if passes any order, sir, then that order is appealable to Joint Commissioner appeals. So what can be the examples of those orders? So that can be, sir, any kind of scrutiny assessment order, best judgment assessment order, sir, income escaping assessment order, or sir, any kind of rectification order, any kind of intimation order for TDS, any kind of ROI intimation, or sir, any order which has been passed by the officer below the level of the Joint Commissioner. Sir, it can be, sir, declaring you SSC in default. Sir, this can be passed. Remember, sir, CBDT, if ever it is required, CBDT may transfer the case from Joint Commissioner appeals to CIT appeals, and it can transfer it vice versa also from CIT appeals to Joint Commissioner appeals. Sir, we got that point. Appeal to CIT appeals, sir. Whenever any order is being passed by the Joint Commissioner, so that order is appealable to CIT appeals. So same examples of the order, any assessment order, rectification order, intimation order, or any other order passed by the Joint Commissioner is appealable to CIT. Sir, within how much time, sir, you have to file the appeal? Sir, you have to file appeal within 30 days. Good morning, Shakti. Okay, we have to file appeal within 30 days. 30 days from the date of order, it can be 30 days from the date of demand notice, sir, it can be within 30 days you have to file the appeal. Sir, whenever you file appeal to CIT appeals or Joint Commissioner appeals, it is called, sir, first appeal. This is for the first time you are lodging a complaint, therefore it is called first appeal. Sir, we got that point. Sir, if you delay in 30 days, if you could not file, you want a extension, sir, extension or condonation is being given by the CIT or Joint Commissioner appeals. Sir, whenever you file appeal, you have to furnish three things. First of all, sir, try repeating after me. Sir, first of all, you require statement of facts. Statement of facts, sir, whatever the cases of the facts are, whatever the situations of the facts are to be furnished. Along with that, sir, grounds of appeal, the basis on which you are filing appeal, the Supreme Court judgments, the provisions of Income Tax Act, the basis on which you are filing appeal, sir, is the second thing to be furnished. It is called grounds of appeal. Along with that, sir, we are required to submit a prescribed fees that we will study later on. All these three things combined together form memorandum of appeal. Sir, statements of facts, grounds of appeal, fees will give us memorandum of appeal, sir. CIT appeals or Joint Commissioner appeals is supposed to pass order within 1 year from the year in which appeal is filed. As we file the appeal, let that year and within 1 year from the end of the financial year of appeal, sir, CIT appeals or Joint Commissioner appeals is required to pass the order. Remember, sir, this is only a recommendatory time limit. It is not a mandatory time limit. So remember, whenever you go to CIT appeals or Joint Commissioner appeals, sir, they will entertain your appeal only and only if you have paid the required taxes. You have paid the undisputed taxes, or sir, if you have not filed ROI, you have paid the required advance tax that has been undisputed according to you. At last, CIT appeals and Joint Commissioner appeals may grant additional evidences. Sir, Shakti Swarab, your efforts are seriously commendable. Taking back-to-back marathon is not such easy. Thank you so much. You're most welcome, Shakti. Most welcome. See what I say, whenever we go to assessing officer and assessing officer did not take my evidences, can I submit these evidences to CIT appeals or Joint Commissioner appeals? Right answer is yes. In 3 instances, sir, these instances are to be learned by all of you. Sir, you can submit additional evidences to CIT appeals or Joint Commissioner appeals. Sir, what are those 3 instances? First of all, when you went to assessing officer and he did not take your evidences, you went and he did not take, sir, you can give this as evidences to CIT appeals. Sir, whenever you went to assessing officer, but you were prevented, some of the gatekeeper, some of the darban at the CIT appeals did not allow you to enter, sir, in that case, you can submit the evidences to CIT appeals. Third thing, sir, you were about to give the evidences, but before giving evidences, sir, order was passed. In all the 3 cases, sir, you can submit the additional evidences. Sir, whenever there happens to be a demand against you, demand order has been passed against you, sir, CIT appeal has power, Joint Commission appeal has power to put a stay to that demand, sir, sir, we got that point. Once we are aggrieved by the order of the ICIT appeals, or if department is aggrieved by the order of the CIT appeals, sir, both of us can go to ITAT, that is Income Tax Appellate Tribunal. Sir, whenever we go to ITAT, sir, there happens to be a single judge bench. A single judge bench. If your total income is up to 50 lakh rupees, then single judge bench is going to hear your case. Normal cases, sir, a division bench is going to hear where there are two judges. One is judicial member and the other one is accountant member. Judicial member is no one but a chartered accountant who is at least having 25 years of practice becomes the judicial member. Accountant member is the one who is a chartered accountant in practice for 25 years. Judicial member is nobody but sir, a retired high court judge becomes the two judges of ITAT. Sir, if your case is very big, if your case is involves more riskier points, more technical points, then in that case, sir, your case may be referred to a special bench which has more than two judges. Sir, remember, sir, whenever a division bench is, sir, one is accountant member, the other one is judicial member. It might be possible that they do not agree with each other. In that case, what is to be done? Sir, they will refer the case to the president of the ITAT, and who in turn will transfer the case to third person, and this third person would act as an arbitrator and would let them decide the finality of the order. Sir, what orders are appealable to ITAT? Normally, four kinds of orders are appealable to ITAT. Sir, whenever we have an order of Joint Commission appeals or CIT appeals, that is appealable to ITAT. Second thing, whenever you receive any directions from DRP, sir, if you remember section 144C, sir, in case of foreign company, non-resident, or in case of transfer pricing officer order, sir, you are required, assessing officer is required to serve you a draft order. You can object to that draft order. An objection goes to DRP. DRP issues the guidelines. Sir, if you are not satisfied with the guidelines, sir, then you can appeal only to ITAT. Remember, you can appeal only to ITAT. Sir, whenever there happens to be a revisional order under section 263, sir, you have to appeal to ITAT. And at last, any other order passed by CIT, PCIT. For example, you are a trust, and as a trust, your registration has been cancelled by CIT appeals, CIT appeals or Joint Commission appeals. Provision says in that case, sir, you can appeal to ITAT. Sir, we got your point. Appeal can be filed by me. Appeal can be filed by the department also. Remember, appeal can be filed within 2 months from the end of the month of the order. 2 months from the end of the month of the order. Try repeating after me. 2 months from the end of the month of the order. 2 months from the end of the month of the order. So earlier this time limit was 60 days, but with effect from 1st October 2024, it has been changed. And you need to remember only the newer time limit. Old time limit is not relevant. You can ignore this limit. Whenever you go to ITAT, so again you submit the same facts, so same statements of facts, grounds of appeal, sir, fees. Along with that, you have to submit here a copy of the order of the assessing officer. Whatever the assessing officer has passed, sir, you have to submit the copy of that. This again is called memorandum of appeal, and at ITAT you have to submit such memorandum in triplicate. So in 3 copies you have to submit. So important point, stay of demand. See, whenever there happens to be an assessment order against the assessee is liable to pay the demand. Whenever there happens to be an assessment order against assessee is liable to pay demand within 30 days. But sir, if assessee goes to ITAT, ITAT can request the stay for demand. ITAT can order stay of that demand. Sir, that stay of demand is valid normally for 180 days. That stay of demand is normally valid for 180 days. Sir, we got this point. It is valid for 180 days. So this can be extended to maximum 365 days. Original plus extension can be maximum extended to 365 days. Sir, we got this point. Original plus extension can be maximum 365 days. Sir, we are aware of that fact. Sir, this extension will be only given to the assessee. This extension was only given to assessee on account of delay not appropriable to assessee. If delay in judgment is not on account of SSC, then only this extension is given for stay of demand. Sir, we are aware of this fact. Sir, after 365 days, what would happen? Sir, ideally stay should vacate. Ideally, stay should vacate, but sir, it shall not vacate. It shall not vacate if delay is not on account of SSC. Not on account of SSC. Sir, what did I just say? Normally, stay of demand is given for 180 days. It can be extended to original plus extension, that is 365 days. Sir, after 365 days of extension, sir, it cannot be extended further. But sir, if delay is not on account of SSC, the stay shall continue. Stay shall continue after 365 days, and this has been said in case of Pepsi Foods Limited. Pepsi Foods Limited Supreme Court judgment says delay can be extended. So delay can be extended exceeding 365 days also, only if delay is not on account of SSC. Sir, we got that point. Whenever you want stay of demand, you have to deposit at least 20% of the taxes. See, whatever the undisputed taxes are, you have to pay. You have the whatever the undisputed taxes are, you have to pay, but whatever the disputed taxes are, you have to pay at least 20% of that. Then only ITAT would give you stay. Remember, ITAT has the power. ITAT has the power to confirm the order. See, if your demand was, for example, 10 crore, ITAT can confirm this. ITAT can reduce this. ITAT can say what the order this has been passed to the fresh assessment. ITAT can set aside also for the fresh assessment. Important point is, sir, ITAT cannot enhance the assessment. Sir, we got that. Sir, ITAT has to pass order within 4 years from the end of the financial year in which appeal is lodged. Sir, memorandum of cross objection or MOCO. We call it MOCO. Choco MOCO chocolate. Okay, MOCO. What it implies. Sir, whenever appeal has been filed at ITAT. For example, there was a case between Rahul versus Assistant Commissioner at CIT Appeals. Sir, in this case, sir, Assistant Commissioner lost. Assistant Commissioner lost, and Assistant Commissioner now wants to go to ITAT. As soon as this application is being filed by the Assistant Commissioner at ITAT, ITAT gives an option to Rahul to cross object. So that Rahul can argue, why ITAT, why you are taking his case, don't take his case, don't case his case. Rahul has an option to cross object the case that ITAT has taken. This is done via memorandum of cross objection. Rahul has power to cross object the case that ITAT has taken. This cross objection, sir, is done in form 36A within 30 days from the receipt of the notice of the appeal, and no fees is to be paid for the memorandum of cross objection. Sir, whenever ITAT delivers any judgment or any of the orders, sir, that order can be wrong in itself, can have some mistakes which are apparent from record. For example, while calculating 2 plus 2, ITAT did total of 5. It is possible, sir, ITAT can do such clerical mistakes, sir, because ultimately humans are only typing the order. Sir, in that case, what it says, sir, ITAT can correct the mistake apparent from record either own motion within 6 months, or sir, it can correct the application by the application made by the SSC, sir, within also 6 months. Sir, ITAT can correct within 6 months. Sir, applicant can also make within 6 months. Plus, ITAT will correct within 6 months of the application from the end of the month of the application. So, ITAT in itself correcting in 6 months, or SSC making application within 6 months. ITAT will be correcting within 6 months from the SSC's application. Sir, every time when I am referring to 6 months or 6 years, it has to be end of the month to be referred. Sir, whenever you go to ITAT, let me try that South Indian accent. Please don't get offended. Please don't get offended. I really love talking in that sense, so don't get offended if I try South. If I do any mistake in the South Indian accent. See, if you file the appeal, this is a stereotype, sir, that you are doing. I will not accept that. Okay. Assess's income is up to 1 lakh rupees, then in that case you have to pay up fees rupees 250 in case of appeal to Joint Commissioner. Or you file appeal to CIT appeals, then in that case 250 is to be paid. So you can ignore these points. So you just have to check if assessed income is exceeding 2 lakh rupees. In that case, 1,000 rupees fees is to be paid for Joint Commissioner appeals and the CIT appeals. But sir, if income is exceeding 2 lakh and you want to lodge appeal to ITAT, then in that case, fees has to be paid 1% of the assessed income. 1% of the assessed income, or sir, 10,000 rupees, sir, whichever is lower you have to pay. Whichever is lower you have to pay, sir. Remember, whichever is lower you have to pay. 1,000 for CIT appeals and 1% or 10,000 rupees, whichever is lower to ITAT. In all the other cases, in all the other cases, sir, you have to take 250 or 500. For example, your registration was cancelled. In that case, sir, you have to take 500 rupees. And if a department goes to ITAT, sir, no fees is paid by the department. No fees is paid by the department if department goes to ITAT. Sir, this is tiring. This is a bit tiring. How do you speak with that accent? Okay. Whenever you go to appeal to you go for appeal to ITAT, sir, remember in that case, sir, you can submit additional evidences. Which evidences were not even submitted at CIT, which evidences were not even submitted at any other place, you can submit those evidences. Provision says, so those evidences can be submitted only if it is necessary for ITAT to take decision making based on those evidences. Second thing, sir, such evidences were not, you were prevented from submitting such evidences, and therefore you will be allowed to submit such evidences. You are allowed to submit additional evidences. So difference between the powers, in normally whatever the similar powers are, we need not to study. Whatever the differences are, we should study that first of all. Sir, does any IT authority has power to enhance the assessment? Sir, CIT appeals can enhance the assessment. For example, you had your order was payable 10 crore. You order was passed against you for 10 crore payable. Can this be increased by CIT appeals to 12 crore? Right answer is yes, sir. This can be increased. This can be increased. But sir, can ITT increase your assessment? Right answer is no. ITT cannot enhance the assessment. Sir, power to set aside and refer back to AO for fresh assessment. See, if ITAT thinks that order passed by the assessing officer is bad, poor assessment, poor order has been passed by the assessing officer, then ITAT can set aside. ITAT can set aside and ask assessing officer to do the assessment again. Sir, but does CIT appeals have this power? Does CIT appeals have this power? Right answer is, sir, CIT appeal did not have this power. But I personally think that this is going to be asked in exam. This is going to be asked in exam. Sir, with effect from 1st 10 2024, Finance Act 2024 amended that if the case pertains to best judgment assessment and that case has been taken to CIT appeals, in that case, the CIT appeals has power to refer back to AO for fresh assessment. This is a gray area. I think this is an amendment. People normally overlook this point, and this can be asked in exam also. Remember, this point is a critical point. Normally, ITAT can set aside for fresh assessment. Sir, CIT appeals normally cannot, but in case it pertains to best judgment assessment, sir, with effect from 1st October 2024, it can. It can set aside and refer back to AO for fresh assessment. Sir, are we clear on that front? Yes, sir, absolutely, sir. Sir, can ITAT rehear its order for the purpose of rectification? For the purpose of rectification, it can hear. But for correcting the mistake, for correcting the entire order, sir, can it rehear? Right answer is no. Can it rehear the order for correcting the order? No, sir, it cannot correct the order, rehear for correcting the order. Sir, can it review the order? Sir, nobody can review the order. Whatever the order you have passed in 2 years back, 1 year back, sir, you cannot review even your order. Whatever order that has been passed is passed. Now it's the duty of High Court to correct it, sir. You cannot correct it of your own, sir. We got that point, sir. We got that point. Only thing important that I told you is now, sir, ITAT can refer back to AO for fresh assessment, but CIT appeals and Joint Commission appeals can refer only in case of sir, best judgment assessment. So this is a key area. If somebody is looking at this video, do give the timestamp of this video so that people who are listening get reminded of it again and again. Sir, appeal to High Court. Sir, for example, we have Shakti with us. Shakti broke a mango from my tree. Now the fact is, sir, whether he broke or not, I have seen Shakti that he took mango from my tree. This is question of fact. Whether did he steal or not, sir, it is a question of fact. But sir, whether stealing is crime or not, whether stealing done is wrong or not, that is question of law. Sir, whenever you go to High Court, you go to High Court for the question of law, and sir, you have to go within 120 days from the order. Remember, sir, you might get confused. Yesterday only we studied a topic called advance ruling, where we were supposed to go to High Court within 60 days. We were given 30 days extra, but sir, here we have 120 days to go to High Court. Sir, High Court has power. High Court has power to review its judgment. Whatever the judgment that has been passed by the High Court, sir, that can be reviewed by the High Court, sir, on the basis of 3 reasons. For example, High Court passed an order 2 years back, and now suddenly some new facts have emerged. In that case, High Court can review its order. Sir, High Court finds out that it has done some mistakes that is apparent from record, then High Court can review. Sir, any other reason that High Court thinks is optimum for reviewing, High Court can review the order. Sir, whenever there happens to be Determination of arm's length price. Whenever determination of arm's length price is at stake, so it is always considered as question of law, not the question of fact. So not the question of fact. So always understand, determination of arm's length price is not the question of law. It is not the question of fact. It is question of law. Sir, appeal to High Court, done. Sir, done. Sir, one thing to be taken care of while appeal to High Court, whenever the High Court gives any judgment, so that judgment is being bound. That judgment is binding in on the entire state. For example, sir, Bombay High Court gives any judgment, so that judgment will be applicable to entire of the Maharashtra. That judgment may or may not have any implication in Madhya Pradesh or sir Gujarat. It may not have any kind of implication in that sense. Sir, appeal to Supreme Court. Sir, appeal to Supreme Court. Whenever you are aggrieved by the order of the High Court, you go to Supreme Court. Supreme Court can review its order. Sir, for example, if one of the judgment has been given by 3 judges bench and the other judgment is given by 5 judges bench, then in that case, whatever the judgment has been given by the higher number of judges in a bench will prevail. If similar order has been given in past by 3 judges bench, now the similar order has been given by 3 judges bench in present era, provision says that the judgment that prevails later shall apply. Third thing, sir, whenever Supreme Court gives any judgment, sir, it gives additional remark, it gives additional pointers, it gives a certain suggestions. Provision says all the things are word of law. Whenever Supreme Court gives any of the judgment, sir, it becomes word of law. All India has to follow. Entire India it has to follow. Whenever Supreme Court's any judge gives any judgment, sir, any kind of marks, any kind of remarks, any kind of things, sir, that has to be followed by the lower authority without any thought, without any second thought. They are bound to follow whatever the things that Supreme Court has asked them to follow. Sir, we got that point. Special provisions for the appeal by the department. Sir, if department goes to appeal, for example, there happens to be a fight between me and assessing officer. My demand is only of 1,000 rupees and department is taking me to IT-80. Do you think that IT-80 demand should be allowed? Sir, 1,000 demand for that IT-80, sir, should this be allowed? Right answer is no. Right answer is no. Sir, CBDT has fixed the monetary limits to regulate the appeal by the department to avoid litigations in small cases. To avoid litigation in small cases, CBDT has fixed the monetary limit. Sir, these limit, whatever you have in your book, sir, you have to ignore. Sir, these limits have been revised and these revised limits are to be studied. Sir, revised limits are, sir, if department wants to go to IT-80, sir, there has to have 60 lakh worth tax effect. There has to have 60 lakh worth of tax effect. If department wants to go to High Court, sir, there has to have 2 crore worth tax effect. And sir, if department want to go Supreme Court, sir, it has to have 5 crore worth of tax effect. Remember, sir, tax effect simply implies sir, only the taxes component. For example, sir, Rahul's order was 58 lakh taxes, 5 lakh interest, 6 lakh penalty. Sir, all in all, it turns out to be 69 lakh rupees. Can department go to IT-80? Right answer is no, sir. Tax effect imply only the tax component. If tax component is up to 60 lakh rupees, then department cannot go to IT-80. Sir, department cannot go to IT-80. Sir, for example, IT-80 department did not go to IT-80 in my case. Sir, can it go in another case? Right answer is, sir, in another case, IT-80 department can go to IT-80. Just because for one SSC limit has not been crossed, sir, department can still go for another SSC for which limit has been crossed. So, sir, appeal, not filing appeal against one person cannot be used as an excuse for not filing appeal for the other person. Anybody having any issue till now? Anybody having any issue till now? Any issue till now, sir? Why are you stereotyping our South Indian people? Why are you stereotyping? I'm not stereotyping. This is the image that I have seen many people speaking in this sense. Many of the faculties of South India speak in this answer. Sorry, really sorry. Any doubt? Any doubt to anybody? No, sir, no doubt whatsoever. No doubt whatsoever. Sir, revision is a different topic altogether. Appeal is a different matter. Revision is a different matter. Sir, whenever we have actually 2 kinds of revision under section 263, which is for the benefit of the department. Section 264, sir, revision for the benefit of the assistant. In both the cases, sir, revision is being done by the higher authorities of department only. Whenever, sir, CIT, PCIT, PCCIT, CCIT, sir, these big people finds out that assessing officer or transfer pricing officer had passed an erroneous order. Erroneous order. A wrong order has been found passed by them. Sir, in that case, these big people can do a revision. Sir, what is meant by erroneous order? Sir, erroneous order implies, sir, any order which is passed without inquiry, any order which is passed by allowing claims without any inquiry, and relief given without any inquiry. Sir, for example, 80 IEA was given without asking. Any order which is passed not considering the CBT guidelines, or any other order passed not considering the High Court Supreme Court judgment. So provision says all these orders are wrong orders. So these are erroneous orders. These can be revised by the department. Remember, sir, whenever commissioner or CID thinks that he wants to revise, he may call and examine all the records which are available at the time of examination. He may call for the documents. Sir, a reasonable opportunity of the SSC to be given in case of revisional order. Remember, the CIT, PCIT can enhance the demand, can modify, and can cancel the assessment. Sir, it can increase, it can modify, it can cancel the assessment. Sir, in no way they are going to reduce your demand. Okay, sir. Time limit for passing the revisional order is 2 years from the end of the financial year in which order containing mistake was passed. For example, assessing officer files the wrong order today. Let that year end and add 2 years to it, sir. 2 years from the end of the financial year, sir. CIT, PCIT can pass a revisional order. Sir, we will study this matter later on. Sir, we have another revision, that is 264. Normally, this revision has been sought by the assessing. Whenever CIT, PCIT, CCIT, and PCCIT are requested by the SSC that order against SSC has been passed, SSC himself requests in this case that order has been passed against me. Do correct it. Do correct it. He's crying out loud, sir. Crying out loud, sir. My order has been passed against me. Please correct it. So whenever SSC requests for revisions, it is called revision under section 264. Sometimes department can itself do the revision under section 264, but normally it is being sought by the SSC. Sir, SSC has an option. Either he can go for revision under section 264, or SSC can go for appeals to CIT. Sir, he has an option. Remember, he can do only one thing. He cannot go for both the things. He has to go for either of thing. Either it has to be appeal or either it has to be revision. Sir, what is the time limit till which we can seek revision? Sir, you can seek revision within 1 year. You can seek revision within 1 year from the date of the order. Sir, you have time limit to file 30 days for appeal. For revision, you have 1 year. Sir, if you want to do revision within 30 days of the order, sir, you have to waive off your rights of appeal. You cannot have appeal and revision going simultaneously. Sir, if you want to file revision today, sir, you have to waive off your rights of appeal. You cannot have right to appeal, so you have to waive it off in writing. Then only your revision will take place. Sir, we got that point. So time limit for passing, sir, if CIT, PCIT revises on its SUO motion, then 1 year time limit. Sir, if it is passed on the basis of application of the SSC, then in that case, sir, 1 year from the end of the financial year in which application has been made, sir, CIT, PCIT will revise. Sir, no appeal can be filed against the order under section 264. See, if 263 order is passed, it is appealable to ITT. If 264 order is passed, no appeal can be made. Sir, it is doctrine of total merger. Sir, what the concept is doctrine of partial merger and total merger? Try to understand. Okay. For example, we have with us Mr. Reddy. Mr. Reddy. So Mr. Reddy has this P&L. In which he has sales of rupees, say for example, 100 crore. He has direct expenses of rupees 60 crore. He has net profit, which is his PGBP, sir, which is equals to, sir, 40 crore. Against this PGBP, sir, he has 10 AA. 10 AA claimed as, sir, 40 crore. Sir, his total income would become 0. He filed the return with total income 0. Filed return. So this case was taken in assessment, and assessing officer, sir, disallowed 10 AA. Disallowed 10 AA. Sir, to the extent of 20 crore. And created a demand of 20 crore. This Mr. Reddy contested at CIT appeals. He went to CIT appeals and requested, Judge Sahab, Judge Sahab, Judge Sahab, why are you not allowing me? Why are you not allowing me? So Judge Sahab felt pity of that with this Mr. Reddy and just allowed allowed this 20 crore as deduction. That means again what happened is, sir, his total income becomes zero, his demand becomes nil. Sir, are we clear up to this front? Yes, sir, we are clear up to this front. That Mr. Reddy filed his return declaring income of zero, sir, claiming deduction of 40 crore. He was disallowed at the time of assessing officer. Assessing officer disallowed 20 crore deduction. Later on, CIT appeals again allowed this deduction because as the CIT appeals that he was thinks that he was correct. Now in case, sir, if CIT appeals, CIT or PCIT thinks, sir, CIT PCIT thinks that, sir, this 10AA should be revised. 10AA should be revised. Whatever 10AA has been passed, can it be revised? Right answer is no. Since the matter has already been fixed by the appeal, CIT appeals has fixed that 10AA should be allowed, sir. CIT PCIT cannot revise a matter that has been decided in appeal. Sir, can CIT PCIT revise another matter? Sir, for example, if they think that direct expenses have been extraordinarily allowed, 10 crore worth of direct expenses should be disallowed. Sir, can they revise any other matter? Sir, right answer is they are allowed to do so. Sir, if any of the matter in a case, in a return has been decided in appeal, sir, CIT PCIT cannot revise such matter, sir, that has been decided in appeal. All the other matters can be revised. All the other matters that can be revised under section 263. So if department wants to revise any of the matter sir, if department wants to revise any of the thing, so that has not been that has not been decided in appeal, that can be revised. That means, sir, for the purpose of section 263, every matter in return of income is separate matter. Every matter in return of income is separate matter. But sir, what if assessee wants revision? So assessee has already filed appeal. He has got deduction under section 10AA. Now, if he wants to revise, sir, for example, he wants to claim extra deduction, can he revise? Can he get revision done under section 264? Right answer is no. When department wants to revise, sir, every matter of the appeal is a separate matter. It is called doctrine of partial merger. But if assessee wants to revise under section 264, sir, entire return is a single matter. If any of the matter has been decided appeal, no revision under section 264 is possible. So this is the difference between doctrine of partial merger and doctrine of total merger. I hope you got the point. Sir, provisions for repetitive appeal. Sir, repetitive appeal, see what happens is whenever we are fighting appeal at High Court or Supreme Court, we have already won at lower authorities. Now for the next subsequent years, again department is filing appeal at ITAT. So this be allowed? Right answer, sir, it should not be allowed. Sir, we would request assessing officer not to file appeal. Let Supreme Court pass its judgment. In that case, sir, we will continue. In that case, department will stop itself. Department may accept or reject such application. Department may accept or reject such application. Are we clear on that front? Are we clear on that front, sir? We are clear. You can ignore this point. What this point says, let me brief you out also what this point says. Sir, for example, I won at High Court and I am fighting department in Supreme Court. I won at High Court and I am fighting department Supreme Court. Now for some other SSC, department lost at ITT and department wants to come at High Court again. Sir, department has already lost a case in the High Court. Now, department has already lost case in case of one SSC. Now, it wants to file the same case to other SSC to the High Court. In that case, sir, a group of people, collegian, can ask department to stop. It can ask department to stop and wait for Supreme Court to pass the order. In that case, as Supreme Court order passed, department will proceed with the High Court. Sir, are we clear on that front? That completes our topic, appeals and revisions. Sir, come on to question answers. Any doubt to anybody? Please let me know if you have any doubts, sir. Petition for stay in demand was filed by XYZ before the Income Tax Appellate Tribunal in respect of disputed demand which was pending before it. Okay. The appellate tribunal granted the stay-wide order. See, stay for demand was given on 1st Jan 2025. Clear, sir. Clear. Absolutely clear. For a period of 180, see, 180 days, grant was given. Stay for demand was given. Arey Baba, other people have curd in their mouth. Do you have anything else in your mouth? Are you eating something that you are not able? Sir, even despite of eating, sir, you can type. You don't have to respond from your mouth. You can even type the answer, sir. Is it clear or not? Is it clear or not? Other person have mehendi in their hands so that they cannot type. Why are you not telling, sir? Clear, clear, clear. The basic premise of our marathon is cooperation, sir. You have to tell whether the concept is clear or not. You have to be super hyper active as to whether the things are clear to you all or not. Sir, absolutely, we got your point. See, stay was given, so stay was granted, sir. Clear, clear, clear. Stay was granted for 180 days. Sir, you have to continuously respond. Sir, continuously respond should be made. Okay, sir. Okay. So grant stay was granted. 20% of the deposit was also given by the XYZ. Thereafter, bench was not functioning till 1st Feb 2026. See, stay was given on this date for 180 days. So till then, the bench was not functioning till 1st Feb 2026. Bench was not even functioning till 1st Feb 2026. Okay. That means it is more than a year now. It is more than a year that bench is not functioning. What is the issue? What is the problem with the SSC? What is delays on account of SSC? Right answer is no. SSC is not doing any mistake in this case. Therefore, disputed matter could not be disputed in June. Till June, sir, 180 days expired and sir, order could not be passed. No order could be passed. XYZ had made an application for the extension of the stay and extension was valid. See, they asked for extension and maximum extension that could be given was sir 12 maximum 365 days. Okay, sir. Thereafter, first 5 Jan. Oh my God, sir, 5 Jan. Just after the stay was vacated, 5 Jan 2026. What assessing officer did? He attached the bank account, recovered 15 lakh rupees against the demand of 25 lakh rupees. Oh my God. The company requested the assessing officer to refund as it holds over the stay. Assessing officer, however, reject the contention that stay period was over on 30th December. Sir, after the stay automatically vacates, examine the contention of the assessing officer. See, sir, original stay is 180. This can be extended to 65 days only if delay is not on account of SSC. Even after 65 days, stay shall not be vacated. Stay shall not be vacated. Remember, so if delay is not on account of SSC, this was given in the case of Supreme Court judgment, but in the case of Pepsi Foods. Pepsi Foods Limited, it was given if delay is not on account of SSC, order of stay shall not be vacated. The order of or assessing officer is not correct, shall be vacated only if delays on account of SSC shall not be vacated in this case. So this is a beautiful, beautiful question. 99.99% might give a wrong answer in this case, or even most of the students might not even understand what the question is. Okay, sir, we got it. Try analyzing it with me. The Commissioner of Income Tax issued a notice to revise the order passed by the assessing officer under section 143. AO passed order under section 143.3. Commissioner CIT appeals, sir, wanted to revise it under section 263. Sir, no section reference has been given. You have to. Thank you, sir, for everything. You are taking too many efforts. Thank you so much, Harsha. Thank you so much for the kind words. See, this is you only. I mean, these words are there only to motivate me. There is no other motivation for me, to be very honest. These words are the only motivation for me. Every word that you say now, I read it. It matters to me. Every positive remark you give me gives confidence to me. Every negative remark you give me, it indeed hurts me even, and it motivates me to work more better. So thank you so much for your kind words. Kanika Ahuja. Good morning, sir. Radhe 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 Kanika. Radhe Radhe with very warm greetings. Radhe Radhe. Sir, assessing officer passed the order under section 143.3. This was later on sought for revision by commissioner under section 263. During the pendency of the proceedings, see, notice for this revision was given to SSC. During the pendency of the proceedings, commissioner, on the basis of the material facts gathered on the basis of survey under section 133A, issued after the first notice, commissioner issued second notice. Contents were different from the content of the first notice. Examine whether assessing officer is correct in the second notice. Or what this question said, we did not even understand that. What this question says, we did not even understand that. Let me brief it out. Sir, assessing officer, sir, issued an order against which, sir, CIT commissioner wanted to do revision. Commissioner thought that 10AA was access allowed, so for that matter, he wanted to revise that. He wanted to revise that. He issued notice to revise section under section 16263. Later on, sir, what happened? Later on, what happened? Sir, there happened to be a survey at the premises of the assessee, and assessing officer found that, sir, most of the payments were made in cash and 48.3 disallowances to be made again. Again, 48.3 disallowances are to be made. I'm giving you an example. Sir, in this case, what happens is already the notice has been issued for 10AA. Sir, again later on, sir, department wants to revise on different matter altogether. Earlier matter was different because of its revision was sought. Now different matter is altogether for which revision wants to sort. Sir, can department send another notice for revision even though, sir, first notice was different, second notice was different? Right answer is department cannot seek revision for different matter. Whatever issues that were pertaining required revision, so that should have been communicated in the first notice only. Why department wants to send again and again the new notices? So this should not be allowed, and this is indeed not allowed. Therefore, sir, second notice given by the department is bad in law. It is bad in law, sir. It is invalid in law. It should not be allowed to the department. Sir, whatever the line that I said you, sir, in the issuance of the section 263 notice, succeeding the examination of the commissioner in the present case, initially issued by the first notice after the examination before him, subsequent second notice on the basis of the material fact was totally unrelated, irrelevant, and issues sought to be revised in the first notice. Accordingly, second notice could not be issued on records as per the available. Sir, this could not be issued, sir. Question is difficult to understand even and after reading multiple times. Examine the circumstances where appellant shall be entitled to produce additional evidences. Sir, what are the instances where you can produce the additional evidences? Sir, there were three instances I had talked to you. First of all, sir, you went to assessing officer and he did not take any of the evidences. Second thing, sir, you were prevented from furnishing the evidences. Third important thing was, sir, you were about to give the evidences, but sir, order was passed before giving the evidences. So these are the three instances in which you can furnish the additional evidences. Sir, we got that point. We got that point, sir. We got that point, sir. We absolutely got that point, sir. No issue. No issue, no issue, no issue, sir. No issue. 70th question, sir. This is beautiful question in itself. Beautiful question indeed. Correctness of the following proportion in the income taxes. The powers of Commission of the Income Tax Act to enhance the assessment are plenary and worldwide. Sir, can Commissioner enhance the assessment? Right answer is yes, sir. He can enhance the assessment. CIT appeals can enhance the assessment, sir. Yes. At the time of hearing the rectification application, ITAT can reappreciate the evidences produced during the proceeding for appeal hearing. See, for the purpose of rectification application, can it reappreciate the evidences produced? Just tell me. If ITAT wants to correct mistake apparent from record, only mistake that is apparent from record, why ITAT wants additional evidences? If mistake is apparent from record, why ITAT wants additional evidences? Sir, it cannot do so. If order has been passed, it can be only rectified for the purpose of mistake apparent from record. And sir, if mistake is apparent from record, sir, why evidences are required? Mistake apparent from record implies it is a visible mistake, sir. You don't need any proof for that. Sir, for that matter, it is wrong. It is wrong for ITAT. Proportion is not correct in law. High Court cannot interfere in the factual findings. Right answer is yes, sir. Whatever the facts that have been established by the lower authorities like ITAT, like CIT appeals, that has to be accepted by the High Court, sir. High Court cannot interfere in the factual finding. Whatever the facts that have been established by the lower authorities have to be accepted by the High Court, sir. We got that point. The statement is correct in law. So the beautiful question of all times, are difficult to understand but easy to answer. Difficult to understand but easy to answer, so you will understand what I am trying to say. Doctrine of precedence would be applicable in the tax laws. In light of doctrine of precedence, comment the correctness or the otherwise in the following cases. Sir, you have to answer based on doctrine of precedence. Now, what is doctrine of precedence? Sir, we don't. Let's try reading question and try answering it. The ratio descendi. Oh my God. The ratio descendi. We did not hear of this word. We have not studied this word anywhere. Okay, let's see question. The ratio descendi, the rationale in deciding the case of a Supreme Court, is absolutely binding on the lower courts, tribunals and authorities. However, lower courts, tribunal authorities are not bound by the additional remarks that Supreme Court decision. Sir, whatever the Supreme Court the judgment gives, it is binding for everybody. But whatever the additional remark that Supreme Court gives, that is not binding to everybody, to lower. So we have studied this. Whatever the additional remark that Supreme Court gives, that is binding to everybody. Sir, it is incorrect statement. Sorry. Where there are two irreconcilable decisions. Sir, irreconcilable decision matlab decision on which difference of opinion is there between two benches. The strength of the Supreme Court, the decision with more detailed discussion shall prevail. Hai? If I give my 3-page answer, if I give a 3-page answer and other person gives 6-page answer, will that mean that 6-page answer would be correct? Not necessary, na. It is not necessary that 6-page answer would be correct, sir. It is incorrect. Why, sir? Because ultimately detailed one does not necessarily mean correct one. The judgment which prevails, which is given later on, prevails first of all, or the judgment with higher number of benches would prevail. Later in time shall prevail. Lower courts are bound by the decision of the Supreme Court. The only exception to this is the Supreme Court in curiam, sir, without referring to statutory provisions. See, sometimes the Supreme Court pass judgment without referring to the statutory provisions. Sometimes the Supreme Court pass judgment without referring to statutory provisions. Provision says these judgments, these remarks are not to be followed by the lower authorities. Sir, what the poor shit they are talking about? What the poor thing they are talking about? For example, Supreme Court passes a judgment on stray dogs. Stray dogs should be sent to habitat center. In that case, sir, it is not. It is passed without referring to any of the statutory judgments. Despite of that fact, sir, everybody has to follow it. Sir, it is incorrect. Okay, sir. Lower authorities may deviate the decision of the High Court within whose jurisdiction they function only with a situation to keep the department has not accepted the said decision on the Supreme Court. Oh, sir. If High Court has given any judgment, if High Court has any judgment and department has not accepted that judgment and department wants to go to High Court, can it deviate from the judgment? Right answer is no. Remember, if anything has been passed by the High Court, for example, I live in Maharashtra and Bombay High Court has passed any judgment, so department cannot deviate from that judgment unless the Supreme Court overrules it. Till the time Supreme Court has not given the judgment, whatever the judgment the High Court has given is valid. That has to be complied with properly. So it is incorrect, sir. It is incorrect, sir. We got that point. So done with the chapter. Oh my God, sir. Oh my God. Oh my God, sir. Oh my God. Come on to next chapter, that is DRC, sir. Because it is a related chapter, therefore I'm coming to this chapter. Otherwise, I should have ideally gone for GAAR or I should have gone for tax planning, but this is a related chapter. Try doing along with me. 50 minutes and complete 4 marks are secured. I am 100% sure that whatever questions come your way in the case of appeal, you will be able to solve it now. Sir, dispute resolution panel, sir. What it says, sir, specified person for the specified order can go to DRC for dispute resolution. Specified person for the specified order can go to DRC for dispute resolution. Sir, what is specified person and what is specified order? First of all, sir, specified order is the order that implies three conditions. First of all, sir, aggregate variations in the order does not exceed 10 crore. Aggregate variations in the order does not exceed 10 crore, sir, implying. Sir, for example, I filed a return with declaring 10-15 lakh of income. Department processed the return or assessed the income of 34 lakh. So income increases 9 lakh only. Provision says aggregate variation does not exceed 10 lakh. I can go to DRC. Second thing, my total declared income shall not exceed 50 lakh. Shall be up to 50 lakh only. Sir, shall be up to 50 lakh only. Whenever I want to go to DRC, my aggregate variation should be up to 10 lakh. And sir, second thing, sir, my total income should not exceed 50 lakh. Okay, sir, got it. Sir, any of the order has not been passed on account of search, survey, requisition, or any of the DTAA case. Sir, for example, the case has been referred by London government. London government told that Rahul has a property in London. In that case, sir, I cannot go to DRC. Remember, sir, 10 lakh variation, 50 lakh rupees total income, and case should not be on account of search, survey, requisition, or DTAA. Sir, what are the types of orders, sir? It can be any kind of DRP order. It can be any kind of intimation order. It can be assessment reassessment order. It can be any kind of demand order. It can be any kind of TDS intimation order. Sir, any order can fall into this category. Sir, who is a specified person? See, specified person along with specified order can go to DRC. Okay, for resolution. We understood what is specified order. Who is a specified person? Who can go to DRC? See, normally every person is allowed to go to DRC. Normally every person like you, me, can go to DRC. Every person can go to DRC. But there are 5 people who cannot go. There are 5 people who cannot go. First of all is any person who has been ordered a detention under COFIPSA Act. COFEPSA, Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. Anybody has been detained under this act cannot go to DRC. Second thing, just listen to these 6 acts. So Indian Penal Code, Unlawful Activities Prevention Act, sir, Narcotics, Drugs and Psychotropic Act, sir, Prevention of Benami Act, sir, Prevention of Money Laundering Act, Prevention of Corruption Act. If any of the person has been prosecuted under this act, plus he has been proven guilty, he shall not be allowed to go to DRC. Sir, proven guilty as in, sir, prosecuted plus convicted. Okay, convicted. He has been sentenced to jail. Sir, prosecuted plus, sir, convicted. Sir, if both the things happen, sir, he shall not be allowed to go to DRC. Third thing, against any person against whom, sir, prosecution under income tax has been initiated. Sir, remember a special point. Sir, if you want this marathon to be longer one, if you all cooperate with me, I will also teach you the amendment that is relating to compounding of offense. I will also teach that. If you cooperate, just to cooperate and continue responding. Sir, if you have been prosecuted, okay, by the lower under any provisions of the Income Tax Act, sir, you are not allowed DRC. If you are any of the person referred under Section 3 of Special Courts Act, you are not allowed DRC. At last, sir, against any of the person black money proceedings are started, sir, he shall not go to DRC. So normally any person can go to DRC, but 5% cannot. First of all, any person against whom detention, again COFEPSA is given. Any of the person against whom conviction and, sir, prosecution has been prosecution started, convicted person, sir, that person cannot go to DRC. Third thing, sir, if any of the person is prosecuted under Indian Income Tax Act, any person against which, sir, proceedings under black money law has been initiated, any person who is notified person under Section 3 of Special Courts Act, sir, in that these 5 people cannot go to DRC. Other than that, anybody can go to DRC. Sir, what would be the concept of DRC is what would be constitution? Sir, wherever we have PCCIT in India, there we will have DRC. Sir, who are the members? Sir, there are 3 members in DRC. Sir, 2 have to be retired IRS officer and 1 has to be serving officer at CIT or above rank. 2 have to be retired IRS officer and 1 is to be, sir, 1 serving officer of CIT or above. Sir, whenever appointment is made, sir, appointed by central government, sir, appointment of members is being made by the central government for the purpose of 3 years. Fees has been fixed by CBDT. Sir, removal can be done by the central government with reasons recorded in writing plus reasonable opportunity given. Sir, decision has to be made by the majority. Sir, you can ignore this point, ignore this 3-year period. Sir, whenever you apply for DRC, whenever you apply for dispute resolution, sir, how process turns out to be? Sir, as you are aggrieved by the order, sir, you have to apply within 30 days. 30 days from the date of the order in Form 34 BC with 1,000 rupee fees. You can go to DRC with 1,000 rupee fees and Form 34 BC with 30 days from the date of the order. As soon as you submit the order, your order will be checked whether it is eligible or not. You will be checked that whether you are eligible or not. Sir, your order will be examined. If it is accepted, it will be communicated to you. But if it is subject to rejection, sir, you will be given a provision for opportunity of being heard. You will be given a provision for opportunity of being heard. Sir, you by serving a show cause notice, sir, you will be given an opportunity of being heard by serving your show cause notice. You have to respond to that notice. If your response is non-satisfactory or you did not give the application satisfactory response, sir, your application would be rejected. Sir, whatever done, the acceptance or rejectance shall be communicated to you once your order has been accepted. Once your order has been accepted, sir, remember you have to withdraw the appeal application. If you have already filed appeal, you have to withdraw that appeal application. If you have not filed the appeal, you have to waive off your right. You have to waive off your rights in appeal. So you cannot file appeal with DRC. Remember section while starting appeals and revision, I told you any person going to DRC cannot file appeal. Okay, sir, we got it. Once application has been admitted, sir, the proper officer at DRC calls for information from IT authority, assessing officer and assessee. Submissions have to be given by these people within the stipulated time. Remember, sir, DRC may do 3 things. For example, there was order against Rahul. Sir, order was, sir, tax payable 10 lakh rupees. Sir, penalty payable, sir, 2 lakh rupees. And sir, jail of 1 year. Sir, three things were ordered against Rahul. What DRC can do? DRC can do case one. Sir, it can reduce the tax. It can nullify the tax. So it can give waiver to the penalty, and it can also give immunity for the jail. It can also give immunity for the jail. So all the three things can be zeroed down by the DRC. Second thing, what DRC can do? Sir, DRC can ask you to pay the taxes, but sir, it can give waiver of penalty. It can give sir jail. It can give immunity from the jail. It can also do that. Sir, case three, what DRC can do? Sir, DRC can ask to do nothing. Sir, DRC can ask you to do nothing. Whatever the order that was passed, sir, that has to be complied with. DRC can do all the three things. Sir, whether to make modifications, waive the penalty, and give immunity, sir, any order that shall be passed, sir, that should not be against the SSC. That should not be prejudicial to the interest of the SSC, sir. No order against the SSC shall be passed. SSC, DRC cannot make modification but waive off the penalty, give immunity, and pass the order accordingly. Sir, DRC may think not to do any modification and dispose of the application. May think not to do anything. Whatever order they do, such order has to be passed within 6 months from the month in which application was given. So as soon as we apply the application, it has to pass the order within 6 months from the end of the month of application. Okay, sir, we got it. Serve a copy to assessing officer. Assessing officer shall in turn modify the order. See, whenever DRC passes the order, it serves a copy to AO and SSC. AO shall in turn modify the order. Sir, once order is modified, sir, SSC cannot go to any kind of appeal to CIT appeals, Joint Commission appeals, ITAT, sir. Appeal cannot be made. And second thing, sir, you cannot even refer the case to DRP. Got that point, sir. As soon as you submit the proof of the taxes, whatever the taxes are required to be paid, if you pay the taxes, then you will be given immunity based on the proof of payment of the tax. During the proceedings, if the DRC thinks that you have not cooperated, you have failed to submit documents, or you have concealed any facts, or you have failed to pay the demand, in all the cases, sir, in all the cases, sir, your proceedings would stand terminated. So DRC is going to give you immunity only if is going to give you waiver of the penalty only if, sir, you have paid the taxes and cooperated with DRC. It will be only given to you if you cooperate with DRC and pay the taxes. Sir, come on to this question. Come on to this question. Question number 79, Mr. Vijay. Mr. Vijay furnished a return of income for assessment year 24-25. Declaring income 28 lakh rupees. He received an assessment order in section 143.3 by enhancing the total income of rupees 5 lakh. See, 5 lakh income has been increased. So declared income is 28 lakh rupees. All the instances of DRC, all the cases where DRC is to be referred. He is aggrieved by the said order and desirous to know whether he can file an appeal before the DRC. Sir, can he do so? Right answer, yes. He also informs that no order for detention has been made, prosecution proceedings not initiated, but he had been charged for the penalty. He has been charged for the penalty. Sir, charging penalty would not imply any prosecution. Prosecution is started later on. Penalty charge of penalty does not imply any kind of prosecution. So, sir, it does not imply any kind of prosecution. Can Vijay file an application before the DRC? If yes, sir. What is the time limit, sir? Within 30 days, he has to file, or I should say 1 month. He has to file. Sir, such order against income tax. He is also keen to know whether he is aggrieved by the DRC. Can he file appeal against the order DRC? No, sir. He cannot file appeal. Would your answer be different, sir, if the information has been received from DTAA? See, if my information has been received from another country, then in that case, I am not allowed to go to DRC. It is not a specified order. It is not a specified order. Sir, everything kept aside. Why are you making fun of our accent? I'm not making any fun of accent. I'm trying to learn your accent. I'm not able to do so. It is the punishment that I am giving to myself. It looks like some punishment you are giving to yourself, but punishment is being borne by us only. Right now, Papa, that is just a love. That is just a gesture of love. Wow, sir, wow. Any doubt to anybody till now? Any doubt to anybody till now? Or shall we proceed to the third chapter? So 1 hour, 2 chapters done. Oh my God. 5 hours, 10 chapters done. Oh wow. Anybody having any doubt? Any doubt to anybody? Clear, sir. What about other people? What about other people? What's your say? Is it clear to all of you? But we don't have such accent, and don't say that way. Okay, clear to all of you. This is addicting accent. Sir, clear. Okay. Proceeding further, tax planning, tax avoidance, tax evasion, and GAAR. Sir, a topic worth doing. You are going to see a question of 4 marks from this topic. Question number 6. It might be question number 6 only. It is going to be 6 only. Sir, there are 4 different terms used in the market. First of all is tax management. Tax management simply implies timely compliance of law. 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 Sir, for example, whatever advance tax you are supposed to pay, you are paying on time. Whatever income tax you are supposed to pay, you are paying on time to avoid late fees, to avoid interest. So if you want to deduct areas of anybody, if you don't want to deduct taking 15G or H, submitting 15G and G and H so that areas is not deducted. Sir, these are timely compliance of laws. It is called tax management. Second thing that you hear in the market is tax planning. Sir, whenever we have income taxes arising, sir, we use legitimate deductions under Chapter 6. We use legitimate exemptions referred under Section 54 like property. Sir, we use legitimate regimes, sir, right, like regular regime 115 BAC. So, like we use tax harvesting methods, so these are tax plannings. So these have been permitted by the law to produce to save our taxes. So these are just a tax planning. So clubbing set the set of provisions that we use, it is a kind of tax planning. Set of benefits for our benefit using, sir, it is a kind of tax planning. So everything are the tax planning. So that is being done within the 4 corners of the law, and whatever the law promotes, sir, it is tax planning. Third thing that you hear in market is tax evasion. Sir, unnecessarily taking away your cash sales, writing it off. So unnecessarily making bogus expenses in P&L, taking asset in the name of the personal capacity, but taking credit in the name of the company. So writing it down as company's asset and paying from the company, but in reality taking it for your personal purposes. So buying the asset in the name of the company and using it entirely for the personal purpose. So these are tax evasions. So unnecessarily transferring your income to the director's income, for example, company is taxable at 25%, 30%. You are transferring this income to a director's son so that his slab rate benefit is given to company. So these are tax evasions. Yeah, these are disallowed methods. Fourth one is very, very nice. Sir, fourth one implies tax avoidance. What it means? Sir, you are following the law. You are following the law, but not in the spirit. Sir, you exploit the drafting errors. You exploit the drafting loopholes in the law to take the full advantage. See, whatever law says, you are abiding that, you are following that. But, sir, you are not following those things in spirit. Whatever law says, you are following that. Whatever losses you are following that. But sir, there exists some fundamental issues in the lawmaking. There exists some fundamental errors, drafting mistakes, some lacunae in the law, because of which now whenever you follow it, you end up saving too much of taxes, which has not been intention of the law. So it is in between. It is in between tax planning. It is in between, sir, tax evasion. So it is not a kind of tax evasion. It is not a kind of tax planning. But ultimately, you are misusing the provisions of the law. You are unnecessarily interpreting them in your own sense. You are interpreting for your own benefit and taking advantage of the loopholes in the law that exist. See, for every kind of things we have a solution. Sir, for planning, it is encouraged by the department. Sir, for planning, sorry, planning has been encouraged, management is being encouraged. Sir, evasion is being penalized. Sir, but for avoidance, we don't have anything. Because avoidance, we are complying with law. We are not doing any non-compliance. We are complying with the law, but not in the spirit now. Sir, we are using the drafting errors to our benefit. So there has to be certain benefits. There has to be certain regulatory framework to avoid the tax avoidance, to prevent tax avoidance. For that matter, government comes up with different rules. Sir, government to avoid the tax avoidance, government has come up with very specific rules. For example, if you transfer any of the income to a related party, sir, transfer pricing provision will apply. Sir, if you are distributing any dividend out of the money, sir, that will be deemed dividend. Sir, if you are giving any money To your related party, sir, 48 to group 2 provisions will apply. So there are many instances where government has already made specific rules to avoid this tax avoidance, to prevent this is tax avoidance. For example, sir, indirect transfer provision has been introduced to prevent the tax avoidance. Sir, many provisions have been introduced to prevent the tax avoidance. So these provisions are called specific anti-avoidance rules. These are called SAR, sir, specific anti-avoidance rules, which aim at preventing tax avoidance. But sir, government is bound by its own limitations now. We are 150 million, 1.5 billion people in India. And if just 1 billion think from their brain, just with an intention to defraud the revenue authorities, we'll come up with 100 crore ideas. We'll come up with 100 crore ideas. How many ideas government is going to prevent? How many ideas, according to you, government is going to save? So it is illogical. It is illogical for government to come up with specific rules every time. So government has made some general rules. Government has made some general rules. So those general rules, general anti-avoidance rules, so general rules for anti-avoidance or the general anti-avoidance rule are nothing but sir, rules made in general for the purpose of tax avoidance. So this is GAAR. Sir, what GAAR implies? Try understanding it. First of all, government, whenever thinks that you are doing a transaction that implies tax avoidance, whenever government thinks that you are entering into a transaction so that implies tax avoidance, the government is going to declare that transaction impermissible avoidance. Impermissible avoidance agreement. Impermissible avoidance agreement. Sir, government is going to declare such transaction as impermissible avoidance agreement. Sir, but declaring impermissible avoidance agreement isn't easy. Sir, there has to be certain criteria to be fulfilled. So only transaction will become impermissible. What are those criteria? Try understanding it. If any of the transaction, sir, results in any of the five things, plus you get tax benefit, sir, that transaction would be considered as impermissible avoidance agreement. Sir, GAAR provisions would apply and government is going to disregard that transaction. Remember, any of the five benefit plus tax benefit, sir, this will imply transaction as sir, impermissible avoidance agreement. Sir, GAAR would apply and government is going to disregard that transaction. Sir, first of all, if the transaction is not done at arm's length price, if transaction not done at arm's length price, but plus you have tax benefit. If transaction relates directly or indirectly in misusing the provisions of this act, sir, provision says in this case, sir, GAAR would apply. Plus tax benefit, GAAR would apply. Sir, if you are entering which has not been bona fidely entered, sir, you do not enter such transaction in a bona fide manner. So in that case, if you have tax benefit, sir, GAAR would apply. So if transaction lacks commercial substance or deems to lack commercial substance and you have tax benefits, sir, GAAR would apply. So what is implied by tax benefit? So if there is any reduction of tax, if there is any avoidance of tax, if there is any deferral of tax amounts, that GAAR provisions would apply. If there is reduction of total income, if there is increase in losses, and if there is increase in refund, so this would imply tax benefit. Now we need to stretch the meaning of these. Sir, what is meant by transaction not done at arm's length price? What is meant by transaction directly using or misusing the provisions, or what is meant by transaction not ordinarily carried out, or sir, what is meant by transaction lacking commercial substance? Sir, we need to stretch every point detail by detail, one by one. For example, try understanding this example. I have done some homework, tried to do some homework for you all. Try understanding this example. For example, if Rahul is the person, Indian person, does the sales to Rachel Private Limited in USA. Okay. Sir, sales price is 100 crore. Market value of this goods is 130 crore. Sir, Rahul is doing sales less than 30 crore. Rahul is doing sales at a price lesser than 30 crore. He is giving benefit to Rachel of rupees 30 crore. Rahul is reducing sales of India by 30 crore. Oh my God. Sir, if Rahul holds 26% voting power in Rachel, or sir, if Rachel holds 26% voting powers in Rahul, sir, they shall become associate. If they become associates, sir, specific rules would apply, and sir, we have transfer pricing rules. So, sir, in that case, even if the transaction is not done at arm's length price, sir, GAAR would not apply, sir, this transaction, because we already have specific rules now. See, we have to check whether tax avoidance is there. Right answer is yes, the tax avoidance is there. Second thing, do we have specific rules for such tax avoidance? Right answer is yes, sir. We have specific rules. Since specific rules apply, sir, GAAR would not apply. Sir, second is the instance. For example, Rahul is just holding 25%. Try assuming it. Rahul just hold 25%. Sir, do you think now transfer pricing would be available? Sir, transfer pricing would not be applicable in this case. Because, sir, these are not associates. These are not associates. So transfer pricing would not be applicable. Sir, since transaction is not done at arm's length price, tax benefit is also given. Sir, even though they are not associated, we don't have any specific rules for them. So it may be considered as impermissible avoidance agreement. Provisions of GAAR would apply because tax benefit has been given. Remember, transaction not done at arm's length price. Sir, if not done at arm's length price, perfect, Monisha. If not done at arm's length price, sir, first of all, you have to check whether transfer pricing applies or not. If transfer pricing applies or if domestic transfer pricing applies, sir, no GAAR is going to be invoked. But sir, if domestic transfer pricing is not applicable, if international transaction transfer pricing is not applicable, then GAAR would apply. Oh my God. So second transaction. Transaction entered directly, indirectly to misuse the provisions of the act. What it implies, try understanding it. For example, there is a company called Singtel. In Singapore, there is a company called Singtel. It has assets in India and it has assets in, for example, Singapore also. Assets in India are 100 crore, assets in Singapore are 90 crore. Sir, if you check this assets, the total assets would turn out to be 90 crore. It would be visible that more than 50% of the assets are located in India. Therefore, this Singtel would become a resident of India. This Singtel would become a resident of India, and entire world's income would become taxable in India. Oh my God, sir. But what Singtel did? It did something very clever. It did something very clever, sir. What it did, sir, it revalued the Singaporean assets to 120 crore. As soon as it revalues 100 crore Indian assets, 120 crore Singapore assets, a total of assets tallied to 220, because of which, sir, ABI test is met and company became a resident. Sir, it tried to use the poem concept for their aggressive tax planning. They tried to make it non-resident by unnecessarily revaluing the assets. Provision says in such case, sir, we are going to disregard this transaction. This would become impermissible avoidance agreement. Sir, what do we see? Sir, transaction directly results in misuse of the provision. Sir, you are misusing the provision. You are misusing the provision. Sir, we got that point. We got that point. We got that point. We got that point. Transaction entered into, carried out in a manner that is not being ordinarily carried out. Transaction entered and not being carried out ordinarily. So try understanding this example. For example, if India directly pays any sum to USA, if India pays any sum to USA in the form of royalty, if India pays any sum to the USA in the form of royalty, so royalty is taxable at the rate of 20%. Royalty is taxable at the rate of 20%. Okay, sir. But there exists a clause in US and Mauritius ZTAA that there would be no taxability of royalty. There would be no taxability of royalty if Mauritius pays any royalty to USA. So India necessarily created a shell company in Mauritius, so paid taxes at the rate of 10% and later on transferred this money to United States. Sir, ideally this should have been easily transferred directly, but sir, this transaction is not entered in a bona fide way. It is not entered in a way that it should have been entered, and so there exists a tax benefit. Earlier, sir, tax at the rate 30% was required to be paid in United States. Now tax is paid just 10%. Oh, provision says if you are trying to use this for your benefit, so it would imply impermissible avoidance agreement. Government would disregard this transaction. Government would assume that whatever transaction you have done is directly with the United States, and the provisions of GAAR would apply. What did we say? Sir, entered, carried out in a manner which is not ordinarily implied for bona fide purposes. Okay, so it is not entered for bona fide purposes. Sir, what if the transaction lacks commercial substance? We have certain instances which show that transaction lacks commercial substance. And what are those instances? First of all, location of asset, transaction, place of residence is to obtain the tax benefit. Oh wow, sir. Oh wow. Location of asset is as such just to obtain the tax benefit. Sir, let's try example with that. Just try example with that, sir. समझ ही नहीं आ रहा क्या लिखा है. What have you just written? We are not able to understand. Okay, try. Let's try. Sir, for example, we have Hutchison SR in India. Hutchison SR in India. Its parent company CGP Mauritius is located in a country where there is no tax. No capital gain tax. Sir, this CGP Mauritius is substantially located in India. Sir, but only holds na 49%. All the assets, majority of the assets are Indian assets. But sir, less than 50, only 49%. Let's make it more simple. Sir. Sir, these provisions pertain to period where there wasn't any indirect transfer provision. Right now we have indirect transfer provision. Now, let's take an example where we did not have any indirect transfer provision, because of which indirect transfer came. So this was the instance. So for example, Hutchison SR was Indian entity. If the CGP Mauritius wanted to sell this Hutchison SR, to Vodafone, sir, it would have incurred capital gain taxes in India, which was taxable at the rate 20%. It was taxable at the rate 20%. Sir, it is taxable at the rate 20%. Yes, sir. So it necessarily used HTIL. It necessarily used the HTIL to transfer CGP. Why did it use so? Because capital gain taxes in Mauritius is zero. So to avoid the taxes, they have choose the location just to have tax benefit. This is what it says. Sir, location of the asset, transaction, and place of residence is only to obtain the tax. Sir, why did they choose CGP? At Mauritius? So ultimately, because Mauritius tax rate was zero. Just imagine if they would have had Mauritius tax rate as 30%, they wouldn't have ever taken this place now. They wouldn't have taken this place Mauritius ever if tax rate would have been 30%. So location is chosen that way. To obtain the tax benefit. Provision says if location you are choosing for tax benefit, and so ultimately there is no actually essence of the location, we would disregard this transaction. We would assume that this transaction is located in India. You have choosing this location just to obtain the tax benefit. Now, therefore, it would not be considered as any transaction. Sir, we got that point. Okay, sir. Where location of any of the transaction is as such just to obtain the tax benefit, sir, we assume it as transaction lacking commercial substance. Sir, we have a message. Nagamani, yes, we understand your love on South Indian people. Thank you so much. For your kind words. Okay. See, second thing, arrangement does not significantly. See, we are studying what are the instances in which transaction lack commercial substance. First of all, is the location of asset is as such just to obtain the tax benefits. It is assumed that transaction lacks commercial substance. Second thing, where arrangement does not significantly affect the business risk, net cash flow of any of the parties. Sir, what it implies? Try understanding this with an example. Rahul has 10 crore. Okay, Rahul has 10 crore. Sir, he gave this 10 crore to Rachel at a rate of 8%. He is earning 8%. Okay, he is earning 8%. Rachel gave the same money to Chandler. Sir, Chandler is again giving this money to Rahul. Now, in essence, do you see any kind of difference? Sir, Rahul earlier had 10 crore. Again, now he has 10 crore. Earlier he had 10 crore, now again he has 10 crore. So there is no transfer of risk. There is no transfer of any kind of cash flows, nothing. Ultimately, whatever money we have. Sir, but if you can see, you are earning interest at the rate of 8%, but you have to pay 10%. And sir, you cannot even do for transfer pricing provision. There is no money involved, no money coming to India. Only you are paying 2% interest on nothing. You are just paying interest at the rate of 2% extra on nothing. So reducing your taxes in India, sir, it is not a transaction, man. There is no risk reward involved. The arrangement does not significantly affects the business risk, does not affect the net cash flows, but attributes to the tax benefits. And no cash inflow has taken place, no cash outflow has taken place. Only thing is we have to pay. We are just paying 2% interest extra for no reason. So that implies this transaction does not have any commercial substance. Whatever money we have, we have. Whatever interest we are paying is to ourselves only. Therefore, sir, no 2% extra would be allowed. So this is what it means. So this is what it means. Okay, sir. Okay, sir. Okay. We got your point. We got your point. We got your point. We got your point. Sir, for example, we have, so third case, we have round tripping of transaction for the tax benefits. Sir, if you are doing any round tripping of any transaction, it shall also imply, sir, transaction lacking commercial substance. What does it? What taking an example for that? If Rahul gives any payment to Rachel, if Rahul gives any payment to Rachel, it is taxable. Karthik, I did forget to talk to team. I'll talk to team for sure. Whatever they say, I will definitely first of all respond to you. Whatever team did say, I will definitely tell to you whatever team did say. If they allow me, I will share it today only. If they do not allow, so I will also communicate it to you. Okay. Sorry, Karthik, for the yesterday. I did not get time to talk to team yesterday. Sir, what we are studying, transaction lacking commercial substance. Transaction lacking commercial substance. Sir, first of all, we understood location is not relevant. Second thing, does not affect any businesses. Third, a round tripping of transactions. Sir, we are supposed to pay USA and raw tax, and such payment is taxable at the rate 20%. We have to pay. We have to pay to USA, and such payment is taxable at the rate 20%. Sir, what we did, we found out where we can pay, where can we pay, where we have no taxes. We found a country where just a tax rate is 5%. Oh, we found a country where it is only 5%. Then when we went to Mauritius, sir, we found a country where we can remit and tax rate is 1%. Cayman Islands is 1%. Oh. Then from Cayman Islands, we found a country where Panama, sir, where tax rate is 1%. And from Panama, we transferred the royalty where there's no tax. Ultimately, sir, we are just round tripping the transaction. And ultimately, where we were supposed to pay 20% tax, by round tripping, we just have to pay taxes of 8%. We saved 12% taxes. Oh my God, dearest. Oh my God, dear Lord, what it has happened. Sir, transaction involving accommodating party for tax benefit. What does this impact? For example, India and USA DDAA. India and USA DDAA says that whatever the transaction of royalty you are incurring, whatever the transaction of royalty you are incurring will be taxed in USA, only if the transaction is entered through firm. Otherwise, it will be taxed in India. See, it will be taxed in USA only if sir, you are transacting with a firm. Sir, is Friends a series fan? Yes, of course, a die-hard fan of Friends. Okay, what I am saying is, sir, for example, Rahul is transacting with Rachel. Rahul is from India. Rachel is from USA. India USA DTAA clearly states that if you transact in the form of firm, then taxability would arise in the hands of USA. If you transact in the form of company, then taxability would arise in the hands of company in the hands of India. So tax rate in India is 30% on this income and tax rate in USA is 5%. Sir, this Rachel girl had a company. It necessarily created a firm where all the directors were the partners. Sir, ultimately, this firm had no commercial substance. This firm was just an accommodating party. Sir. There was no commercial substance. No, see, ultimately, Rachel created this firm just to take the benefit of 5%. Otherwise, this would have been taxed at the 30% in India. So, sir, Rachel took benefit of the treaty. Therefore, sir, she created a firm. And, sir, all the directors were the partners in the firm. And, sir, she transacted through this firm. No tax, only 5% tax was paid in USA instead of paying 30% taxes in India. So, she got a benefit. Provision says whenever there happens to be an accommodating party, sir, such accommodating party shall be disregarded, sir. Sir, it might involve some tax benefits, so that transaction will be deemed to have lacking commercial substance. At last, sir, any transaction which has offset effect. For example, this is Rachel in USA. She is my associate. Okay, Rachel is my associate. Okay. If I give any related loan to Rachel and if Rachel gives any loan to me, sir, it will ultimately have no effect. Ultimately, it will have no effect, sir. We will not be allowed to pay any interest apart from 94B. What I did is, sir, I asked Rachel to give loan to one of my associate, and sir, I gave loan to one of the associate of the Rachel. What I am saying, just is a trialistic. Sir, I cannot give loan to Rachel. She is my associate. So I give loan to her associate and she gave the corresponding amount again to my associate. What happens ultimately is whatever money I had has been ultimately given to this Rachel associate, and then again it is passed to Rachel, and again Rachel is giving to my associate. Ultimately, sir, whatever money that was, sir, with my associate is back to me. But sir, whatever the interest benefit I got, or whatever the tax benefit I've got, sir, it is having a cancelling effect. This transaction has a cancelling effect, and ultimately, sir, tax benefit has been given to Rahul. So this is also a transaction that is deeming to lack commercial substance. Whatever, sir, deeming to lack commercial substance is, sir, will be considered as impermissible avoidance agreement, and that shall be considered for GAAR. Now, sir, what will happen? What will happen if your transaction is considered as impermissible avoidance agreement? Then what will happen? Provision says, sir, your transaction will be disregarded. If you are transacting through other countries, sir, it will be disregarded. It will be considered as one only. Sir, once you are entering any impermissible avoidance, sir, it will be considered as it has never been carried out. For example, sir, CGP is selling its shares to the HTIL is selling the properties to Vodafone. Sir, it will be assumed, if it is required, sir, we will not assume that we'll assume that you have not even sold. If required, we'll assume that you have not even sold. Sir, whatever the accommodating parties you are using, sir, for example, like this company Rachel was using and making it as a firm to use the start to do the transaction, provision says, sir, whatever the accommodating parties you are using as, we will consider as one. Sir, whatever the connected party, sir, for example, if I am using my associate to do any transaction, provision says that connected party will also be taken as one. So these are the consequences of GAAR. Sir, whatever the tax benefit that have been given to you, sir, that will be charged to tax in India if the provisions of general anti-avoidance rule are applied to you. Sir, there are certain instances where provisions of GAAR would not apply. This is the key area you must understand, and in past attempts, this has been asked multiple number of times. Sir, there are instances where provisions of GAAR would not apply. First of all, sir, if tax benefit to everybody, all the parties, tax benefit aggregating for all the parties is up to 3 crore rupees, the provisions of GAAR would not apply. Provisions of GAAR would not apply, sir, if transaction pertains prior to, sir, 1st April 2017. That means if transaction is prior to previous year 17-18, assessment year 18-19, sir, GAAR will not apply. Sir, you need to remember this date, sir, 1st April 2017. If any of the transaction is prior to this, sir, GAAR will not apply. Sir, if any of the transaction in which FIIs are investing in India with prior authority, with prior approval, and they are not taking the benefit of DTA on that transactions, GAAR will not apply. And sir, if any of the non-resident is investing in offshore derivative instruments of FII, sir, GAAR would not apply. Sir, whenever GAAR apply, it shall override the provisions of Income Tax Act and DTA also. GAAR can apply to any of the transaction arrangement scheme or undertaking. Sir, a point worth noting is sometimes what happens is, sir, if any of the transaction has been undertaken prior to this. For example, we have entered a transaction on 1st April 2015. On that day, GAAR was not even in force. Sir, we undertook that transaction. Well, can government make it as impermissible avoidance agreement and apply GAAR on it? Right answer is no. If any of the transaction entered prior to that, sir, government cannot make such transaction as impermissible. Sir, what if out of that transaction I still yield benefit? Even benefit is being yielded out of that transaction even today. Sir, can GAAR apply on that transaction? Right answer is no. If any of the transaction that has been entered prior to 1st April 2017 and even today I am getting benefit of that transaction, provision says GAAR provision will not apply. At last thing, what it says, sir, period, time of payment, sir, period, time of arrangement, sir, fact of payment is made, whether exit route given is not relevant while determining whether transaction lacks commercial substance or not. So whether your transaction lacks commercial substance or not, so that is, for that matter, whatever period you use, whatever time you use, whatever the exit route given or not, so that is irrelevant. And sir, whenever you are deciding any impermissible avoidance agreement, sir, it may be necessary for recharacterizing the payment. For example, sir, equity may be considered as debt. Whatever the loan you have given, it may be considered as equity instrument. Whatever investment you have made, so that may be considered as debt also. You can recharacterize the payment. Any capital payment or capital receipts may be considered as revenue payment and revenue receipts. And at last, so any expenditure may be considered as deduction. Any such deduction may be considered as rebate. Any rebate may be considered as relief. So these can be recharacterized. So if they want to change, if they want to recharacterize the nature of any payment, sir, that recharacterization can also be done. Are we clear on this front, sir? Are we clear on this front? It took us half an hour to understand the provisions of the GAAR, and it will take us 10 or 15 minutes to understand the question also. These questions are the essence of this topic. Questions are the essence of the topic. Do you have any doubt till now? Any doubt to anybody? Any doubt to anybody? Sir, I really enjoy teaching this GAAR topic. I really enjoy teaching this GAAR topic. Whatever the examples that have been taken, whatever the questions that they ask are really beautiful. And it requires your high level of intellect. For that matter, I request you all to answer every question along with me. I will be the one reading question. You also have this PDF. Try answering it along with. What will happen? This will develop your intellect. This will develop your skills of answering, because ultimately in exam you have to answer. Now, I will not be there to interpret it for you. I will be the one reading the question. You have to try answering it of your own, whether GAAR would be applicable or not. Whether GAAR would apply to this transaction or not, you have to answer. First of all is relating to whether it is tax planning, tax management, or tax evasion. So this I can answer myself. You need not to answer for this, but for next question you can answer. So M deposits 1 lakh rupees. Whether if we don't know whether it's SAR or GAAR. What if we don't know whether it is SAR or GAAR? So ready, listen. Whenever there happens to be SAR, whenever there happens to be an income tax provision that you can relate to with this transaction, so always say SAR. Always say SAR and write down that SAR and GAAR may coexist. But sir, if you are able to understand that no provision of income tax is applicable, it is just a transaction deeming to lack commercial substance, then sir, GAAR would apply. You will be able to identify that question very clearly of your own. I'll be reading question, you'll understand that. You'll understand that those provisions. Sir, Mr. P deposits PPF as to reduce the total income. Arey Baba, PPF deposit is planning only. So SQL maintains a register for TDS. Arey Baba, it is management. So taxpayer making the tax saver deposits, sir, it is planning. Sir, taking deductions is planning. So partnership of obtaining declaration 15 years, it is management. So company installed air conditioner of 75,000 at the residence of the director as per the terms of the appointment. And sir, took depreciation on that installed air conditioner at the residence of the director. At the director's home, it is installing air conditioner and claiming a depreciation on that firm. Oh, it is evasion. RR issued a credit note of 80,000 rupees as brokerage payable to Ramana House, the son of the director. The purpose is to increase the total income of the Ramana and sir, reduce the company. Sir, whatever the income that company has, it is diverting its income to the director's son, so that basic exemption limit or slab rate is given to the company's tax rate. Sir, it is nothing but a evasion. Sir, it is evasion. Unless she is qualified, it is evasion. Company remitted to PPF within time so that interest is avoided. Sir, it is planning only. So it is not planning, it is management. Timely compliance is management. This is a good question. Try answering this question. Sir, this is a good question. Try answering this. Sir, Messrs Global Architect is a company incorporated in F1. Okay. F1, Messrs Global Architect. It is engaged in the business of providing architectural services all over the world. It receives an offer from Lovely Resolve Private Limited. It's an Indian company, Lovely Resolve Private Limited. So it receives an offer for design and implementation of design and development of the resorts all over the India. Okay. F1 and India Treaty provides for architectural services, or technical services, and payment for the same is to be taxed in India. See, whenever you make payment to this, sir, it is taxable in India only. Sir, it is taxable in India only. It is architectural services. Okay. However, if professional services are provided by the firm, see, ultimately, if you are taking the services from the company, if company provides services, then taxable in India. If firm provides that services, it is taxable in Messrs Global. Okay, 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 okay. ठीक है. Limitation of benefit clause exists. Okay. Messrs Global forms a partnership firm. Oh, it is a company but forms a partnership firm. And with the third party, only nominal share. The entire firm has agreement to do the services in India. The company seconded the manpower of the firm. Whatever the employees of the company are became the employees of the firm. Whatever the directors of the company were became the directors of the firm. So and this firm undertook the transaction. If company would have undertaken the transaction, this would have been simply proper transaction. But you are making a subsidiary. You are making a firm just to take the benefit of the treaty, just to take advantage of the treaty of your benefit for your benefit. Can partnership invoke GAAR? So ultimately, this transaction, this firm is an accommodating party. Sir, there is no commercial substance to this transaction. Therefore, sir, this would become impermissible avoidance agreement, and sir, this would imply GAAR. GAAR would apply. GAAR would apply. Okay, sir. This Jiva Diva, you can do this. This is a simple question. This this is a good question. This is a question which should be criticized. Sir, this is a question that one should condemn. This is a very poorly drafted question. This is a very poorly drafted question, sir. And even poorly drafted answer. In the following independent circumstances, discuss whether the provisions of GAAR would be applicable or not. Sir, Right Inc. is a company incorporated in country M. Right is a company of country M. Sir, it holds shares of Indian company from 1/4/2016. It holds shares of Indian company from 1st April 2016. Sir, it was the time when even GAAR was not in force. GAAR came after first 4 2017. On 1st 5 2024. 1st 5 2024, sir, just after 8 years. PS issued 1200 shares. See, it had 1200 shares. Now it got 1200 shares for bonus. It got 1200 shares bonus. Okay. As per the treaty between India and M, the capital gain would be taxable in the country where transferor is the resident. So tax laws of the country exempts the tax. See what it says. Wherever you are resident, if you are resident of country M, capital gain would be taxed in your M in the M. If you are resident of India, tax will be in India. So ultimately, sir, taxation rights would go to M. And sir, capital gain is exempt in that country. Oh, exempt in that country. Okay. Right Inc. sells all the shares and earn capital gain of 5 crore. Right in earn the shares of capital of and earn the capital gain of 5 crore. Sir, would GAAR be invoked? Would GAAR be invoked? I want you all to answer first. Let's take a minute extra. No issue whatsoever. But let you all answer this point. What according to you, GAAR would invoke or not? According to you, GAAR would be invoked or not? Sir, sir, sir. First of all, the basic thing is, sir, GAAR would not be invoked because the transaction pertains prior to 1st April 2016. So transaction has been entered prior to on 1st April 2016 and at the time where GAAR was not enforced. And even if you get benefit of that transaction even today, sir, Ankit says GAAR would be invoked. Ankit says GAAR would be invoked. Yeah. Monisha says GAAR will not apply. See, what the actual point is, try understanding that, sir. First of all, GAAR will not apply. Basic reason, GAAR will not apply. Basic reason, sir, because transaction is entered prior to 1st April 2017. Sir, GAAR was not even applicable. Right? This is not applicable. GAAR will not apply because transaction is prior to 1st April 2017. And I had already told you that even if you get benefit today, even you get benefit today, sir, GAAR will not be applied to you. GAAR will not be applied to you. But sir, do you think that is the correct answer? Just tell me, what if the transaction is entered after sir 2018, after 2017? Will GAAR be invoked in that case? If you think that this is the reason that transaction has been entered prior to 1st April 2017, sir, that is the reason GAAR is not invoked. If transaction would have been entered on 1st April 2018, then GAAR would have invoked. What according to you, GAAR would have invoked? Right answer is, sir, GAAR then too wouldn't have invoked. Why, sir? See, just think of a person. I stay in India. and I earn capital gain on the shares of a company in Mauritius. India, Mauritius, DRC says whatever the taxes will be borne by the resident, and India it is exempt. Sir, what am I taking any benefit of this treaty? Am I taking the benefit? Arey, it is the government that has decided now. It is government that has decided that India will tax, in that F1 country will tax, and country F1 has exempted such capital gain. What is the problem made by this right person? He has not done any decision making only. He has not even done any decision making. He has not even done any decision making. Now, ultimately, government has entered into DAA. Government has exempted. He is just buying the shares of that company. He is not finding on the drafting errors now. There is no tax avoidance involved in this case. If in this way, GAAR will be invoked. GAAR will be invoked whatever country in which transaction is exempt. Whenever I enter any transaction with a company in which there is no tax, GAAR would be invoked in this case. Therefore, GAAR would not be invoked even if you buy shares after 1st April 2016. But sir, answer they have written here is, sir, since the transaction is prior to period 1st April 2017, GAAR will not apply. Arey Baba, it is invalid answer. It is incorrect answer. Sir, this is not the reason why GAAR is not being invoked. Sir, there is no actual benefit. There isn't any tax avoidance happening in this case. There isn't any tax avoidance happening in this case. There is no misuse of provision. There is no transaction which is ordinarily not carried out. There is no transaction which is not done at arm's length price. There is no transaction which does not have any commercial substance. So GAAR would not apply because of that. This is wrong answer, but if they have given this as an exam question, we have to respect it. I am telling you the truth. I am telling you the truth. But this is how you have to understand the provision. D Limited is an Indian company wholly incorporates wholly owned subsidiary C. D Limited is a company, Indian company, incorporates wholly owned subsidiary in country C. Sorry, company C, country X, gives equity investment of 1 crore and later on transfers this money to India to a subsidiary. See, I create a company, make into equity investments in that company, and transfer whatever the investment made to my subsidiary in India at a 5% loan. Sir, would GAAR be invoked? Arey Baba, first, the basic reason is, sir, you are only getting benefit of 1 crore only. You are just transferring 1 crore. Sir, GAAR would only be invoked if there happens to be, sir, benefit exceeding 3 crore, then only GAAR would apply. Sir, if benefit would have been 3 crore, then GAAR would have applied, right? Answer is yes. Because ultimately, whatever money we are giving to the subsidiary and later on giving it, sir, it does not have any commercial substance. This transaction does not have commercial substance, and simply we do not have any specific rules for that. So GAAR would apply. Ultimately, if benefit would have been exceeding 3 crore, then GAAR would have applied. But since benefit is less than 3 crore, then GAAR would not apply. Second part is a good question. Sir. You must read the answer once you get time. Sir, third question. Perfect, Ankit, perfect. This question says, sir, this is a good question. 17. What it says, sir, you have an option. To, sir, buy machinery and claim depreciation of 30 lakh rupees per annum. Or, sir, you can rent out the machinery at 36 lakh rupees per annum. Sir, you have an option either to buy or either to lease. Sir, which one we will choose? Sir, you will choose the better one, whatever is beneficial to you. Can anybody dictate your decision? Right answer is no. Nobody has power to dictate any decision. Nobody will be able to impose any GAAR on you on just decision making, on this decision making, whether to buy or lease out. Sir, you can do it. It is called tax planning only. So there is a concept of tax harvesting. Sir, what does this tax harvesting imply? Sir, whenever we have a capital gain, for example, 10 lakh rupees. Sir, at year end, sir, I have certain loss-making shares. Sir, I sell these loss-making shares and next day I buy it. Just to book the losses and set off these losses from these gains. Sir, I do tax harvesting. Sir, it is legal concept. It is allowed. Sir, no GAAR provisions would be implying. Sir, this question is simple. You will be able to do it. So this question is also simple. You will be able to do it. No issue whatsoever. See, if you transfer any of your profits from high tax paying country to low tax paying country, sir, provisions of GAAR would not apply. So simply, if you have an entity and if you have an entity and non-SEZ unit, if you have an entity which is not SEZ unit but another entity which has SEZ unit, so you are transferring your profit from this to this so that you can claim higher 10AA. In that case, the provisions of GAAR would not apply because we already have specific rules now, so GAAR would not apply. So question number 77, what it implies? So for example, a foreign company has shares of Indian company And sir, foreign company can claim exemption if it holds less than 10%. So for that matter, it created two subsidiaries and started holding less than 10% from each subsidiary. Will provisions of GAAR imply, sir, it is an accommodating party involved, sir, GAAR would imply. I would request you all to read the 77th question of your own, sir. It's a good question to be practiced. MTP made April 25. So done with the topic GAAR. Shall we proceed further? Shall we proceed further? Shall we proceed further? Shall we proceed further? Yes, sir. I think it's the right time. It's the right time to take a break. See, these small topics are essential, but only if you are attentive. I humbly request you to continue after break. So it is 11:53. I am giving you break till 12:10. Do come after the break. Do attend the session live only, because only essence that you will get from the session is by studying live. Whatever recordings you take, sir, it is not that beneficial. Understand that it is beneficial only if you attend it live. So guys, see you after the break. Hello. Okay. So, guys, welcome back from break. Welcome back from break. Ankit says, I want to increase 15 to 20 marks by these small topics for sure. And I'll tell you a secret. These topics constitute more marks than just 15 and 20. These 10 chapters collectively may give you up to 30 marks, or I should say, if 35, if in the possible scenarios, considering all the MCQs. This is the weightage of these chapters. These are not simple chapters. The appeal you are going to be asked, you are going to be asked tax audit, you will be asked question from GAAR, you will be asked question from advanced students. So for sure, uh, more weightage to this topic. Okay. Sir, continuing forward with miscellaneous provisions, I don't know why this chapter has been continuously been asked. Every time you see now, you will see a question from this topic. So it is also important one. See, logically, I have categorized this chapter into three categories. First of all is cash, loans, and advances. See, what this provision says as per section 269 SS, whenever you take a loan, you take a deposit or you take an advance in respect of immovable property. Loan, normal loan, deposit, any deposits, or advance in respect of immovable property. Sir, whenever that loan exceeds the 20,000, so that any amount of loan should be taken via account paycheck, account pay demand draft, electronic clearing system. What did I just say? Up to 20,000, any loan would be allowed. Whatever loan you are taking exceeding 20,000 rupees, that should be done via account paycheck, account pay demand draft, electronic clearing system. Remember? Sir, if you are taking loan from primary agriculture cooperative bank, or if you are taking loan primary agriculture cooperative society or taking loan from primary agriculture cooperative bank, then in that case limit of 2 lakh would apply. Up to 2 lakh you can take loan from up to any from any source, but exceeding 2 lakh you have to take only via banking channel only. Sir, if loan is taken from government, if loan is taken from bank or from bank by bank, so if loan is taken by cooperative bank, post office, or if loan is taken from government company, if loan is taken by any cooperation which is established under any act, and if loan is taken by the person who only has agriculture income, for him such limit would not apply. Such limit would simply not apply. Remember, sir, if you do any kind of contravention, sir, if any contravention is done under section 216 SS, any contravention done under section 216 SS would be leviable to penalty at the rate of 100% of such contravention under section 271D. 269 very close section, 269 very close section to section 271. Sir, add D to SS. Sir, how to learn the penalty? Sir, SSDTE. Right? Try learning this word. Sir, SSDTE. SSDTE. Whenever, sir, whatever contravention you do to SS, sir, penalty will be leviable under section 271D, and the penalty will be leviable at the rate 100%. And the best part is, penalty will be leviable by joint commissioner. For your attempt, it is the joint commissioner that can levy penalty. No any officer lower than that can levy any penalty. Sir, for example, sir, if you have taken loan 13,000 rupees in bearer check, sir, will you be levied any penalty? Right answer is no. Sir, if you take deposit of rupees 20,000, 12,000 rupees, sir, since your outstanding balance exceeds 20,000 rupees and you are taking in cash, sir, you will be levied penalty on 25,000 as it is continuing default. Sir, if you take 15,000 loan in cash, if you take 13,000 loan in BRA check, sir, you will be levied penalty on entire 28,000 rupees because it is a continuing default and exceeding 20,000 rupees you have taken loan in cash. Sir, if you have taken loan at the rate of 15,000 rupees via account pay check, and if you have taken loan in 30,000 rupees in cash, sir, will penalty be levied? Sir, you might think that in third case penalty may not be levied. You might think that penalty may not be levied in the third case, but sir, penalty will be levied. Why, sir? Because you don't have to check the amount of loan taken in cash. You don't have to check the amount of loan taken in cash. You have to check the outstanding balance of the loan as on the date of taking the loan. Sir, as soon as 20,000 limit is crossed, any money shall be taken via account paycheck, demand draft, and electronic clearing system. Whenever this limit is crossed, sir, any money, whenever this limit of 20,000 is crossed, sir, whatever money that you take should be taken via account paycheck, account by demand of electronic clearing system. Otherwise, the penalty is leviable. Therefore, in this case, penalty at the rate 13,000 is leviable. At last, sir, if I took 15,000 in cash and later on I took in bank, sir, no penalty is leviable, sir. I hope things are absolutely clear. 269 talks about repayment. See, ultimately, sir, SS talks about taken loans. Sir, taken loans. So whenever you take a loan, sir, anybody who is giving loan, no penalty on that. Anybody who is giving cash loan, no penalty on that. Anybody who is taking loan, the penalty is leviable. If I have taken loan and I am repaying such loan, then I will be levied to penalty under 269 ST, 269T. Sir, we are aware of this fact. We are aware of this fact. Sir, if you are doing any repayment of loan, deposit or advance, if you are doing any repayment of loan, deposit or advance, and sir, repayment, repayment exceeding 20,000 rupees, any repayment exceeding 20,000 rupees, sir, shall be done via account paycheck, account pay demand of electronic clearing system. Any repayment exceeding 20,000 rupees shall be done via account paycheck, account pay demand of electronic clearing system. Sir, if you have taken loan from the government, if you have loan from the bank, if you have taken loan from the cooperative bank, post office, and you are repaying to them, sir, in that case, this section is not applicable. Sir, if you are repaying in contravention to this section, any amount repayment made in cash, sir, 100% of such repayment would attract a penalty. Remember, sir, loan taken for anything, deposit taken for anything, sir, advance taken not for anything, but sir, only for immovable property. Sir, advance is not for anything, but it is only for immovable property. Sir, we got that point. We got that point. I have a question to all of you, sir. My question to all of you is, sir, for example, if I have taken transaction 1, I have taken loan in cash. Yeah, Rahul has taken deposit in cash. In cash, 15,000. Sir, will I be attracting penalty or not? Sir, second time I'm accepting the loan in cash, 15,000. Sir, will I be attracting penalty or not? Sir, again I am repaying the loan, repaying 16,000 rupees in cash. This is the third transaction, and later on I am repaying 14,000 rupees. Sir, fourth transaction, all transactions in cash. Sir, in which of these transactions penalty would be levied to me? In which of these transactions penalty would be levied to me? I have done 4 transactions, sir, taking 15,000 in cash, again taking 50,000 in cash. Then a repayment of 16,000, a repayment of 14,000. On what transactions penalty would be levied? On which of the transactions penalty would be levied? Sir, first loan is allowed because up to 20,000 rupees we can take now, no penalty. But sir, as soon as second loan is taken and outstanding balance exceeds 20,000 rupees, and the previous also I have taken in cash. Beautiful. Second case, no penalty, but in second case, first case, no penalty. In second case, combined penalty. Very nice, Reddy. Sir, Reddy says this thing. Okay. First case, no penalty. Second case, combined penalty. Third and fourth, third not applicable. Fourth, combined applicable. Okay, okay, okay. Nagamani says, sir, on second and fourth, we will be charged a penalty. Second and fourth, we will be charged a penalty. Now shall I say, sir, you will be charged to penalty. Both the answers are wrong. Both the answers are wrong. Sir, why both the answers are wrong? Baba, whenever you take any repayment in cash, sir, this will not attract penalty because outstanding balance is not applicable. Sir, in this case, sir, sir, since outstanding balance exceeded, sir, combined penalty. Sir, I have only said this thing only. Sir, in third case, sir, will I be attracted penalty? Sir, you will be levied a penalty in the third case. Oh, how dare you, sir? Sir, we are repaying less than 20,000 in cash. Arey Baba, who asked you to find out the limit of 20,000 or on repayment? Sir, 20,000 is not the limit for repayment. 20,000 is the limit for outstanding balance. If your outstanding balance exceeds the 20,000, any repayment in cash would attract a penalty. If your outstanding balance exceeds 20,000 rupees, then any repayment in cash would attract a penalty. Sir, this would attract a penalty. Sir, whatever you have understood for SS is absolutely correct, but for T, you need to have a clear-cut understanding. If you have outstanding balance exceeding 20,000 rupees, any repayment in cash would attract penalty. Therefore, 16,000 would attract penalty. Whereas, sir, since after repaying the 16,000, sir, outstanding balance is less than 60,000, 20,000 now. After repaying the 16,000, outstanding balance is less than 16,000 now. So, sir, in that case, on repayment of this fourth transaction, sir, no penalty. Oh my God, sir. We did not think of it ever. Well, Baba, you have come to me just to understand the provisions now. So, sir, this is the actual essence. Sir, whenever your outstanding balance exceeds 20,000 rupees, sir, you have to check any repayment done in cash, sir, will attract penalty. Any repayment not done in cash will not attract penalty. So, you just have to check the outstanding balance. You don't have to check the amount of payment. Baba, you don't have to check the amount of payment. So you don't have to check amount of the payment. You have to check the outstanding balance. Outstanding balance. If outstanding balance 20,000 is crossed, any rupee taken or any rupee repaid will attract a penalty. Sir, but to section SS we have exception. Sir, if outstanding balance is 20,000, any rupee taken and outstanding balance is also taken in cash. So we charge penalty on outstanding balance also. But otherwise, sir, once limit of this 20,000 cross, any rupee taken, any rupee prepaid in cash would attract penalty. This is how the essence of section SS and T is. 269 ST. Sir, mode of undertaking a transaction. Absolutely correct, Ankit sir. We have to check for outstanding balance. We have to check for outstanding balance. So 269 ST, mode of undertaking a transaction. Sir, whenever you receive any money, from single person in a single day, or in respect of single transaction, or in respect of single event, sir, you should not receive 2 lakh or more via cash. Or I should say, whatever the money you received, 2 lakh or more, sir, you should receive via account pay check, account pay demand of electronic clearing system. Sir, whatever money you are receiving, sir, in terms of loan you are receiving money, in terms of interest you are receiving money, in terms of royalty you are receiving money, in terms of sales you are receiving any money, in terms of anything you are receiving money, sir, if money received exceeds 2 lakh rupees, sir, you should receive that via account pay check, demand draft and electronic clearing system. Okay, sir, got it. Sir, but if government receives any money exceeding 2 lakh, it is allowed. Bank receives allowed. Post office receives allowed. Cooperative bank, it is allowed. Sir, if you withdraw from bank, post office, cooperative bank, it is allowed. Sir, if any of the transaction is referred under section 269 SS, then it will not be leviable for ST. What does it mean? Sir, for example, if Rahul is the one who takes loan from Mr. Sir Ankit, I take loan from Mr. Ankit worth rupees 3 lakh rupees in cash. See, ultimately, if I take loan in cash, sir, I will be levied to penalty under section 269 SS. Provision says, I also do violation under section 269 ST. Sir, I will be only charged penalty under SS and not under ST. For whatever violations that I have done, if I am being penalized on that under section 269 SS, I will not be charged any penalty under 269 ST. Sir, we got that point. Any receipts by the ATM operator, bank correspondent, any receipt by the ATM operator, any agent issuing prepaid instruments, so any credit card company or any of the award that you receive, sir, you are not being charged penalty on that. You are not being charged penalty on that. Sir, for example, I do six transaction. Sir, there is no cash limit of SS and ST except ST if it is not against immovable property. For advances, it is not. For advances, we do not have any limit under SS and ST. SS and T. We do not have any limit. But in ST, we have a limit. We have ST. For advance, if we take advance against anything, 3 lakh rupees, 2 lakh, 1 lakh rupees advance, can I take? Right answer is I can take in cash. But if it is for immovable property, I cannot take. If advance exceeds 2 lakh rupees, then I have to comply with ST. Sir, for example, if I am selling goods to single person and I am billing him in 6 different invoices on a single day, sir, If I receive 50,000 rupees 6 times in a day, sir, provision says I will attract a penalty. Sir, for example, billing is 5 lakh rupees. I have billed them on 3 different parts, but sir, it is a single sale transaction. Single sale transaction, one sale transaction, sir, has been billed into 3 different days. Sir, it will still attract a penalty because transaction is say the single sale only. Sir, multiple sales has to happen to avoid penalty. Sir, if you are having single sales invoice and receiving money on 3 different days, sir, it would assume to be single transaction only and you will still be levied penalty. So for example, if you are having an event, for example, party, and for that party you are paying hall charges of 1.5 lakh, you are paying catering charges of 1.7 lakh. You are paying hall charges on separate day, you are paying catering charges on separate day. You are paying hall charges for separate invoice, you are paying catering charges for separate invoice. Provision says for the purpose of 269 ST, these all have to be combined because it is a single event. So you have to check transaction wise, you have to check event wise, and you have to check single person, single day wise also to find out whether penalty is leviable. Whenever you do any non-compliance, sir, penalty is leviable under section 271 DA at the rate of 100% of non-compliance. And at last, sir, there is a clarification given by the CBDT. There is a clarification given by the CBDT, and what that clarification says. For example, this is the NBFC. Sir, for example, NBFC has advanced loan to Mr. Rahul. And Rahul is paying 25,000 rupees per month in cash. Now, since NBFC is receiving 25,000 rupees per month, so for per annum, it might be receiving 3 lakh rupees. And since loan given is a single event, in that case, sir, whatever repayment it is accepting, sir, whatever money that it is accepting exceeding 2 lakh rupees in a single event, so this would constitute penalty under section 269 ST. See, if NBFC is receiving 3 lakh rupees during the year as repayment of loan, so ultimately it is receiving money exceeding 2 lakh rupees, that too otherwise than cash, otherwise than account paycheck, demand draft, electronic clearing system. So NBFC shall be attracted penalty. So for that there exists a clarification. There exists a clarification which states that if NBFC is receiving the repayment of loan in the form of cash, then sir, we will not be clubbing every installment for the purpose of single event. Every installment shall constitute single event. Every installment shall constitute single transaction. You have to check every other installment, every single installment you have to check to find out the limit of 2 lakh. If every installment is less than 2 lakh, sir, we are not going to aggregate for the purpose of 269 SS despite of them being single event. Sir, we'll assume them to be a separate event. Sir, are we clear on that front? Are we clear on that front? Are we clear? This has been the worst explanation. I mean, this has been the worst clarification given by CBDT. Really very worst. If somebody asks me why, then only I'll tell. Otherwise, I'll not tell. If somebody asks me why, sir, why is the worst? I'll tell. Otherwise, I'll not tell. Okay. 269 SU, what it says. Sir, if you are one of the assessees, whose turnover in previous year 23-24, exceeds 50 crore, yes sir. I said you have to ask, not yes sir. If you are asking, sir, please tell why, then only I'll answer that, otherwise I'll not answer. Sir, if you are the assessee whose turnover in preceding financial year, that is, sir, in previous year 23-24, exceeds 50 crore, in that case, sir, you have to give additional options. You have to give additional options of payment. So you have to give account pay check, you have to give account pay demand of electronic clearing system, IMPS. This is the thing basically you have to give. This is the minimum basic that you have to give. Why, sir? Please. Okay. Sir, this is the basic thing that you have to give. Sir, account pay check, account pay demand draft, electronic clearing system is the basic thing that you have to give. But if your turnover exceeds 50 crore in preceding financial year, then you have to give debit card powered by RuPay also for accepting payment. You have to accept a payment via debit card also. You have to give an option of UPI. You have to give an option of QR code. All these 3 options in addition to this electronic clearing system you have to give. So if you fail to comply with the provisions, penalty at the rate of 5,000 rupees per failure would continue to attract. Sir, you asked why. Sir, for example, Rahul repays 25,000 rupees per month for 12 months to NBFC. Now, for NBFC, clarification is being issued by the CBDT. For NBFC, it is issuing clarification that single installment, sir, shall not consider single installment shall constitute an event. Sir, we don't have to aggregate the installments. Arey Papa, why there was a need for this clarification? Who in the God's name is going to pay 25,000 in cash? Won't Rahul attract any disallowance under Section 269T? Won't Rahul attract any disallowance under Section 269T? Why in the God's name Rahul is going to pay 20,000 rupees exceeding cash payment if he is being penalized for that? What is the need of giving clarification to this NBFC? Even if Rahul is never going to pay you in cash, Rahul has to pay it banking via banking channel. Rahul has to pay via banking channel, otherwise he will be charged to penalty. Now, why in the God's name he is going to pay you cash? So, what was the need of giving clarification in the name of NBFC? It is just a protection given to NBFC. Even though Rahul might bear the penalty, NBFC should not be bearing any penalty. It is just a clarification given, which was even not logical. Sir, why this individual is going to pay for 20,000 rupees in cash now? This is logical now. Penalty in the hands of NBFC would be attracted only after it is crossing limit of 2 lakh rupees. But Rahul is not allowed to pay exceeding 20,000 rupees in cash. So what will happen in the hands of Rahul? Will Rahul be paying? Rahul will never be paying the money. Rahul is not going to pay money in cash. So for that matter, this explanation was not even required, but it is given somehow. So this was all about 269 SU. So that completes our cash loans and advances. So 269 SS, 269 ST, 269 T and 269 U. 4 sections. So remember, whenever I take loan in cash, SS is applied. Whenever I repay that loan, T is applied. Whenever I received any money exceeding 2 lakh in cash, sir, ST is applied. So SU says I have to offer another modes of payment. Important thing is this. So another very important thing, if I receive any money in cash, if I receive any money, apna paisa money, okay. If I receive any money in cash, what it says, sir, whatever money that you receive in cash and you repay that money, sir, you will be charged a penalty twice. So it is not like that once you are charged SS, you will not be charged ST, sir. You can be charged for both the things also, sir. For both the things, you can be charged penalty. So, okay. Next topic comes this SFT. Sir, I don't know what we call in say English, but in Hindi na we call it chugli. Do you understand paparazzis or you understand the viral bhiyani concept? Sir, have you seen those aunties who sit in the neighborhood and talks about somebody else, talks like this? You know, sis, do you know, Didi, what they are doing? He ran away with her, or he is just disagreeing with his father. There are certain aunties who talks on the roadside while buying the vegetables, while going to markets. Sir, aunties talk to each other, ladies talk to each other. Sir, in Hindi we call it chugli. I don't know what I call it in English, sir. But there is somebody who is doing who is leaking your information to department. There is somebody who is leaking your information to the department, and this is what this section talks about. This is what this segment talks about. Who is going to leak your information? Who is going to tell department? Who is going to tell department that, for example, Ankit has so much of money? Let's take Ankit, sir. That concept is called statement of financial reporting. Sir, if you do any kind of specified transaction, sir, department is going to know. The person with whom you are doing transaction is going to tell department. Sir, for example, if Ankit acquires bonds or debentures in a financial year exceeding 10 lakh rupees, the person with whom he is going to ask is going to tell the department. Paisa Bazaar, no, not Paisa Bazaar. We have paparazzis or we have chugalkhor aunties, no, chugli auntie. When I was a children, I used to have a show in. We used to have a show in which there was a chugli auntie who used to tell about the breaking newses of daily soaps. Like this heroine is going to die. I have got to know that this heroine is going to have a baby in next 6 months. So that lady was to tell the leaked information about the show. So these are the information leakages that happens in SFTs. There are certain people who inform about you to the department. Sir, first of all, if you buy any bonds from a company or debentures from a company, and sir, such bonds exceeds 10 lakh rupees in a financial year, sir, if you buy 10 lakh exceeding at once, or sir, if you buy step-wise 10 lakh rupees, provision says you will be informed, department will be informed, sir, that person is going to inform to the department. Okay, sir, got it. Sir, if you acquire shares exceeding 10 lakh rupees in a financial year, individually or in aggregate, sir, that company from whom you are acquiring shares, sir, is going to, that company who is issuing the shares is going to inform to the department. Third things, if you apply, so if you buy mutual fund from a mutual fund house, sir, if aggregate of the mutual fund exceeds 10 lakh rupees, then in that case, such mutual fund company is going to tell to department that, see, this person has got too much of money, he's buying mutual fund but 10 lakh. Okay. If you are buying any kind of foreign currency from an authorized dealer, provision says if you buy exceeding 10 lakh rupees, that information will be given to department by the authorized dealer. If buyback happens, for example, I had shares of Reliance and Reliance undertook buyback and took away all the shares, gave money 10 lakh rupees or more in a financial year to me, Reliance is going to tell department that, yeah, I will come, Nagmani, we'll come to that point. Sir, whenever buyback happens, that listed company tells, see, we have understood 5 transactions. In all the 5 transactions we have limit of 10 lakh rupees. So you need to remember these limits, because in exams these limits are being tested in MCQs. Sir, whenever you purchase any immovable property and the value of immovable property or stamp duty value of immovable property exceeds 30 lakh rupees, sir, department is going to know by this registrar. Registrar tells about your information. Sir, if you buy any shares or if you sell any shares, if there happens to be a capital gain on any kind of listed shares, mutual funds, sir, registrar also tells, depository also tells, sir, recognized stock exchange also tells, sir, recognized clearing corporation also tells, and registrar to the issue also tells, sir, all the 4 people complain about you. All the 4 people complain about you. Sir, if any dividend has been given by the company, such company informs department, oh, we have given dividend to, okay, we have given a dividend to Reddy. Sir, whenever a company distributes dividend, it has to do the SFT reporting. Whenever any interest is being paid by the bank, a cooperative bank, post office or NBFC, they have to do the SFT reporting. They have to tell department that they have paid interest. Sir, apart from that, if you receive any kind of sales money exceeding 2 lakh rupees or more, in that case, sir, you only have to report to department. Arey baap re, why this provision? Sir, I am receiving and I have to report to department. Sir, what sense it makes? Provision says if you receive any money from the department, sir, you have to tell to department that you have received such money. Okay. At last, sir, we have, sir, cases where we have special cases. Sir, if we are purchasing any bank order, if we are purchasing any pay order, bank draft, if we are purchasing any pay order or bank draft exceeding 10 lakh rupees or more in a financial year, sir, that bank is going to tell the information. Sir, if I am doing any fixed deposit in a financial year exceeding 10 lakh rupees, sir, that will be told by the bank. Wherever I am doing the fixed deposit or a cooperative bank, that bank, cooperative bank is going to tell the department that he has got too much of money, he has made fixed deposit. But sir, here is a catch. Sir, whenever I already have a FD and that FD is being matured and that matured FD is renewed, provision says renewal of FD is not reported. Whenever there happens to be a renewal of the FD is not reported to the department. I hope you got the point. Renewal of FD is not reported to the department. Sir, we got your point. Renewal of FD is not reported. Okay, sir, got that point. Sir, if you deposit in your savings account 10 lakh or more in a financial year, if you deposit 10 lakh or more in cash, sir, cash deposits are only reported. If you deposit 10 lakh or more cash in a savings account during the financial year at once or even in aggregate, sir, your bank is going to tell the department, see, this person has got 10 lakh deposited in cash account. Oh, check him. Okay. Sir, here is an important figure. Sir, if you deposit 50 lakh or more, If you deposit 50 lakh or more in your current account, or if you withdraw 50 lakh or more from your current account, sir, bank is going to tell to the income tax department. And at last, sir, if you pay credit card bill of rupees 1 lakh in cash, or if you pay credit card bill of 10 lakh in banking channel, sir, that credit card company is going to tell department about you. Credit card company is going to tell department about you. Sir, remember, what are the limits, sir? You have to remember. Sir, what are the limits? Let me try to make you remember. Sir, wherever I am highlighting the blue, that is where we have 10 lakh limit. Sir, we have 10 lakh limit in case of bonds. We have 10 lakh limit in case of shares. We have 10 lakh limit in case of mutual fund. We have 10 lakh limit in case of foreign currency. We have 10 lakh limit in case of buyback. We have 10 lakh in case of savings deposits. We have 10 lakh limit in case of fixed deposit. We have 10 lakh limit in case of pay orders. We have 10 lakh limits in case of the credit cards. So normally by default, if you cannot remember anything, sir, 10 lakh limit is applicable. But sir, there are certain cases where other limits are applicable that I am highlighting in red. Sir, if you buy any immovable property, 30 lakh limit is applicable. If you do any sales, then 2 lakh limit is applicable. Sir, if you are depositing in any current account, sir, 50 lakh deposit, 50 lakh withdrawal is applicable. If you are paying any credit card bill in cash, sir, 1 lakh limit is applicable. And sir, whatever I am highlighting in black, so in these things, no limit is applicable, sir. Whenever you are transacting in capital gain, whenever you are receiving any dividend, whenever you are receiving any interest, sir, no limit is applicable. The other person is going to tell department about your interest, sir. If you cannot remember anything, sir, just write 10%, 10 lakh. Sir, if you remember, sir, capital gain, if you say capital gain dividend interest, sir, by default, you have to do this SFT reporting. And sir, if you receive any kind of information like you receive, for example, property, then 30 lakh, credit card bill 1 lakh. If you receive cash sales, then 1 of 2 lakh. Then in credit card, in current accounts, sir, 50 lakh deposits and 50 lakh withdrawal. That is how limit turns out to be. Sir, this information is to be submitted by their respective entities up to 31st May of the assessment year. This information is to be submitted up to 30th May of the assessment year. Remember, sir, if they do not furnish this information, they are liable for penalty. And that penalty is important, sir. I will try to make you remember. I need your focus for next minute. For example, for previous year 24-25, they want to report. So what is the due date? Sir, due date is 31st May. For example, they did not report it till 31st May. So they got a notice on 15th July. They even did not report it till this date. Sir, in July notice, it is mentioned that you have to report it till 31st July. They did not report it even then. Sir, they reported till 15th August. Sir, till when notice penalty will be applicable? Listen. Penalty at the rate 500 rupees per day will be applicable. 500 per day will be applicable from the date of 1st June till the date it is mentioned in the notice. See, date of notice is irrelevant. The date on which notice has been received to us is irrelevant. Date, whatever is mentioned in the notice, up to which we should file our SFT statements is relevant. So, till that day, we will be charged interest. Sir, in this case, 30 days of June plus 31 days of July. Sir, for 61 days, we will be charged 500. For that matter, 30,500 we will be charged. And from next day, if we did not file the return till the date mentioned in notice, if we did not file the statement till the date mentioned in the notice, so from the very next day we will be charged 100 rupees, 1000 rupees penalty. That is from 1st April to 1st August to 15th August, 15,000 penalty would be levied. 15,000 penalty would be levied. Sir, if you do any kind of incorrect filing in SFT forms, sir, no penalty. If you do any kind of incorrect filings, then no penalty. Sir, we got that point. Sir, coming on to next topic, that is cash credit. For example, we have with us Nagamani. Nagamani with us, and he is having books of accounts in this manner. He is having bank account debit to capital account, or sir, bank account debit to Rohit. When it was asked from Nagamani, from where did you get this money? From where did you get this money? He said, it is God's grace. It is God's grace. God has given me this money. Arey Baba, God has given via which means? Did you earn it? Did you loot it? Did you plunder it? Did you rob it? So from where did you get money? Nagamani was not able to give the explanation. Nagamani had certain suspected credits in their accounts, and Nagamani couldn't explain the reasons for that money. Provision says if you are not able to explain the reasons for the credit of your income, for the credit in your books of accounts, such credits would become taxable in your hands under section 115 BBE. Sir, out of nowhere, Nagamani says bank account debit to Rohit. Rohit has given me loan. Rohit has given me loan. Rohit has given me loan. Government is going to ask Rohit. Government is not going to leave you this way. Government is going to ask Rohit. And if Rohit does not gives any response, whatever you say, sir, we will take it as an income on you. Sir, if SEBI registered venture capitalists, sir, does such things, if they don't give any explanations, sir, these provisions are not applicable to such people. Absolutely correct. Absolutely correct, sir. Absolutely correct, Reddy. Sir, if you cannot explain the credits in your accounts, if you have cash credit or any of the credit on which you do not have explanation or your explanation is not satisfactory, that will become your income under section 115 BB. Second thing, for example, we have Ankit with us. There happened a raid in the Ankit's house. There happened not a raid, but a survey happened at the Ankit's house. Department was searching for everything. Department was searching for everything. The department officer put a hand on the wall. He just put the hand on the wall, and all the powder came to shred off. All the powder from the wall came to shred off. He just scratched the wall, and he could see bundles and bundles of registries. 1,000 properties registered in the name of Ankit. 1,000 properties registered in the name of Ankit. When he was asked from where did he earn the property, from where did he get the property, Ankit said, it's God's grace, Bhagwan ki maya, kabhi doob, kabhi chaya. Ankit says, God's grace it is. I don't know from where did I get? Provision says if you are not able to explain any of the investment that you have, if you have not recorded any investments and you are not even able to explain from where did you earn that investment, Are Baba, we are going to tax such investment. That will become your deemed income under section 69. So, for example, one wall at the house of the Ankit was filled with registry. Other wall, assessing officer threw his stake, and there was a tongue sound coming from that wall. There was tongue sound coming, and Sir Assessing Officer found out that his wall was made up of gold. His wall was made up of gold. Provision says if any unexplained assets is being received like money, jewelry, bullion, and Sir Ankit has no explanation, provision says that shall become your income. Ankit on becoming angry, said, I don't want to pay the taxes. I don't want to pay the taxes. Sir, he bought a property. Ankit want to escape the taxes. What he did? He bought a property of rupees 10 lakh rupees. Sir, 10 crore rupees. Recorded at just rupees 1 crore. Oh, he under recorded the property. Oh my God, sir. Oh my God. Oh my God. He under-recorded the property. When it was asked by the department, why did you under-record it? Ankit could not give any explanation for the reason. Provision says if you have recorded a value at a lesser price than actual price, then in that case, difference shall become your income. Sir, what Nagamani says, even if salaried person doesn't file ITR1, but employer deposits TDS, files TDS return based on that department, sends email of filing the ITR, we can't escape from the department. That's true. That's true of you. You cannot escape from department. But in case if you have some money through cash and black money, see for example, the best way to earn money right now is best way to earn money is you can become Gaurakshak. That is the best money. Or second thing, you can start a temple. You can own a temple. That is the best way to earn money. Arey Baba, and then YouTube will take off this video. Sorry. See what I am saying. What I am saying is listen. Okay. If we have unexplained expenditure, sir, what is unexplained expenditure? What does that imply? Try understanding that point. Sir, for example, we have with us Mr. Reddy. Mr. Reddy has been filing return of income for past 10 years. Every year he is filing return of income as 4.99999 lakh rupees. His income cannot increase even by 1 rupee every year. Every year income is constant. Every year income is constant at rupees 4,99,999. Sir, he's not even earning more, one rupee more than that. Sir, for 10 years he's earning this much. Sir, according to income tax department, he can have only 50 lakh rupees worth income right now. He can have, because 10 years he's filing ITR. He must have saved certain money. So for that matter, he must be having 50 lakh rupees worth income. Sir, Reddy proposed to have a marriage. Reddy married at a Udaipur fort, where expenditure on such marriage was 10 crore. 10 crore expenditure he incurred just for the purpose of his marriage. The government wants to know, from where did Reddy earn this income? When asked Reddy, from where did you earn this income? Reddy said, it's marriage now. Marriage is done by God. Who are we to argue? Marriage is done by God. Provision says, is something written over here? Is something written over here? So you have to explain the income. You have to explain the source from which you have earned the income. If you are not able to explain the source, provision says it shall become your income. So if you have made this expenditure as your business expenditure, if you have claimed deduction on this expenditure, provision says that expenditure shall be disallowed. At last, sir, if you borrow any money on account of hundi implies, sir, if you give any promissory note and take money in return. If you borrow any money via hundi, otherwise than account, paycheck, demand draft, electronic clearing system, sir, whatever money you take on hundi shall become your income. Whatever money that you take shall become income. Sir, whatever repayment you make via hundi shall also become your income. Whatever money you take on hundi shall become your income. Whatever repayment you make to hundi shall become income. As good as 267 SS and T, but it is hundi. Okay. Remember, sir, if, for example, I took money from Ankit on hundi and I repaid to Ankit. Sir, normally what happens is, under 267 SS and T, sir, if I am taking money from the same person and repaying back to the same person, SS and T both are applicable. But in case of hundi, sir, if I am taking from the same person and repaying back to the same person, sir, only once income will be offered, sir, not twice. Only once income will be offered. See, if I am taking from one, giving it to other, sir, income will be offered twice. But sir, in case I am taking from one and giving back the same to the same person, in that case, one time income will be offered. Whatever income will be offered under section 68 to 69D, sir, that will be taxable at the rate of 60% plus 25% surcharge plus 4% education cess. All in all, 78% tax will be charged, plus a 10% penalty under section 271 double AC. So this is the chorpanti that they are doing. Chorpanti, that is chori that they are doing. This is the chori that they are doing. Therefore, penalty leviable under section 115 BBE, or I should say tax leviable under section 115 BB, 60 plus 25 plus 4, and sir, penalty leviable is 10% of the taxes. Certain provisions in case of miscellaneous provisions. See, certain transfers are void transfers. Sir, what is meant by void transfer? Sir, I have sold the assets. Department will disregard the sale. Department will assume that I am still the owner of the property. Sir, whenever what happens is, during the proceedings or after completion of proceedings, sometimes what happens is, I have a house. I think that penalty is likely to be levied on me. I sold my house just to prevent myself from penalties. I sold my house and tried to take away the cash money, try to transfer the cash money. Provision says if I want to do so. Effectively 85.788, take second. Yes. Effectively 85.8%. Yes. Okay, what I am saying is, listen. Sir, whenever any proceedings are going against me, sir, if I transfer any assets during the proceedings to defraud the revenue authorities, provision says such transfer shall become void transfer. Normally, whenever I am defrauding the revenue authorities by transferring the assets, sir, it shall become void transfer. But there are instances where transfer would not become void transfer. Transfer would not become void transfer. There are certain instances. Sir, what are those instances? Sir, if I am transferring and my tax payable is only 5,000, If my tax payable is only 5,000, then it should not become void now. If my tax payable is only 5,000, it should not become now. Are it 5,000 I can pay from anywhere now? Sir, if whatever asset I'm transferring is very small asset, for example, I want to sell off my mobile phone, sir, it is less than 10,000 now. It should be allowed to be sold now. Small assets are allowed now. Okay, sir, allowed. Sir, if I am selling for adequate consideration, if I want to sell, if I had taken my sales price as 1 crore and I got an offer for 5 crore, shouldn't I be allowed to sell? I should be allowed to sell now. Sir, if I'm getting a fair price for my house or more price, I should be allowed. Sir, if I am selling with prior approval of assessing officer, then it is allowed. And if I am selling stock in trade in business, it is always, always, always allowed. Sir, provisional attachment, sir, it might seem that this is not relevant topic, but indeed it is very relevant topic. Whenever there happens to be any proceedings going against you, there happens to be a proceedings going against you, sir, department thinks that penalty leviable on you, it might exceed 2 crore. Department thinks that penalty leviable against you might exceed 2 crore rupees. So to protect the interest of revenue, protect interest of revenue, plus after reasons recorded in writing, and sir, after getting prior approval, sir, of CIT or above, sir, assessing officer can provisionally attach your property. Provisionally attach your property, sir. Provisional attachment implies, sir, property will still remain with you, sir. You cannot sell that property. That is what provisional attachment means. See, penalty imposed likely to be more 2 crore or more to protect the interest of the revenue. The reasons recorded in writing prior approval, then he can provisionally attach. Sir, for how long he can provisionally attach? He can provisionally attach for 6 months. Sir, can this be extended? Right answer is yes, sir, it can be extended. Sir, it can be extended for 2 years. It can be extended for 60 days from completion of assessment. Sir, whichever is later, sir, it can be enhanced. This provisional attachment can be enhanced up to this date. Okay, sir, we got that. Sir, can I get this property free? I mean, can this provisional attachment be set aside? Provisional provision says if you submit bank guarantee, whatever the property's FMV is, sir, that amount of bank guarantee, if you submit to the assessing officer, sir, this provisional attachment shall become vacant. Sir, remember, this bank guarantee can be invoked by the assessing officer. This bank guarantee can be invoked by the assessing officer. Sir, when assessing officer is going, sir, when assessing officer is going to invoke, this bank guarantee, so if you did not pay taxes on the, if you did not pay the required taxes, or the second thing, if bank guarantee is about to expire and you have not furnished the new bank guarantee, assessing officer is going to invoke the bank guarantee. So this concept is called provisional attachment under section 281(3). It's worse than tax money on black money repayment. Yes, it's correct. No, black money repayment is way more worse now. Black money is 30%, and so 90% of the taxes are the penalty. I will study black money law after this. So this is a small paragraph. If you want, just take a screenshot of it. So this is a paragraph in which you will find too much of information. Sir, service of a notice. Whenever department wants to send you any notice, sir, they can send you via courier or post. They can send you via email. They can send you with any of the manner that is prescribed under Code of Civil Procedure. Sir, for example, they can attach a notice on your shop outside. Sir, they can attach a sheet on the board of your shop. Sir, they can attach. Sir, notice shall be served to individual. If person is deceased, then is legal hire. If existing HFs and manager of the HF, if any firms or partner should be, sir, if any dissolved firm, then any adult partner should be served notice. If any company, sir, principal officer, if any person, sir, person in charge shall be served notice. Authorized representative, sir, authorized representative, what it implies, sir, understand this provision beautifully. Sir, if you don't want to go to proceedings, sir, you can ask somebody else to go proceedings on your behalf. Who can be your authorized representative? Any of your employee can represent you on the proceedings. Any of the legal practitioner, any of the chartered accountant, including the firm, any of the bank officers. Sir, for example, I have bank account in SBI. So any of the SBI officer can represent by me. So any other person who has passed the CBDT's entry level examination for becoming such authorized officer, or sir any other person as we prescribed. Sir, we have another statement called AIS. Sir, whenever you log into income tax portal, sir, there is a six tab information called annual information system. What it says, sir, income tax department is going to upload certain information to your e-filing portal. So that information may contain the details of TDS. That information may contain information for statement of financial transaction, whatever the transactions you have incurred, whatever the taxes you have paid, whatever the demands or refund that have been accrued, whatever the pending proceedings are, and whatever the completed proceedings are. All these 66 statement will be given to you in the form of annual information statement uploaded on your income tax portal. Sir, whenever you are in a film making business, the film making business, or sir, you are in the event management business, whenever you are into film making business or event management business, sir, as soon as previous year ends, within 60 days, that is up to 30th May, sir, you have to submit a form 52A in which you have to mention all the payments made exceeding 50,000. Whatever payments you have made exceeding 50,000 rupees, that shall be reported in this form, whether in cash, whether via banking channel. That is to be reported if you are into filmmaking or event management business. Sir, we got that point. There is an amendment that might be tested in exam. See, for example, many of the foreign companies have a license office in India. So that office is not for business purpose, just for general doubt, general sessions, general inquiries, or general business purposes. Sir, it is there. It does not carry out any business. Sir, it is a license office. So this license office was not held accountable for anything previously. But sir, but sir, but sir, this license office has to report certain things. Sir, whatever the transactions that it has incurred, it has to submit the statement of transaction during the year. Sir, when it has to submit, sir, let previous year end. After previous year, sir, within 8 months, that is up to 30th November, it has to submit the transactions. And sir, this transaction shall be submitted in Form 49C. This is an amendment that has been proposed for September attempt only. So for that matter, you must be aware of this amendment. Any license office of a foreign company is liable to submit the statement of transaction that it has incurred during the year up to 8 months within the end after the 8 months within 8 months from the end of the previous year in Form 49C. Ankit says to direct DGIT, it is not exact DGIT, it is DGIT systems, PDGIT and DGIT systems. See, whenever you submit any kind of forms like 49C, 49D, 58, these are directly submitted to e-filing portal. These are submitted to PDGIT, DGIT system. We call it DGIT system. Not exactly it is reported to DGIT, but it is DGIT systems. DGIT, PDGIT systems, we call it. Authority that is receiving it is DGIT systems or PDGIT system, and they have their lower authorities who might be checking the details. So no special questions in this topic. Every topic that we have studied is theoretical. Question answer would remain theoretical and would be asked from the similar topic only. No special questions to practice in this topic. Shall we proceed further? Shall we proceed further? Shall we proceed further? I will not do tax audit. I will not do tax audit, sir. I will do another topic. I know your nature. Huh? You will study tax audit and you will skip the topic when I am teaching clubbing. So first of all, I will teach clubbing. First of all, I will complete the clubbing topic, the small topics that you are going to leave at the last. So for that matter, I will be doing this small topic first, and then I will take the last important topic towards the last. I know your nature. Sir, clubbing of income, when income is clubbed. Sir, whatever I say, just you need to understand that. Don't ask beyond this because, sir, normally clubbing has never been asked in exam in past attempts. Only certain adjustments are being asked in total questions. Otherwise, no clubbing questions have been separately asked since the final examinations. So whatever we study is a bonus only. It is just an addition. It is just an add-on. Sir, for example, Rahul has a flat. Rahul is earning rental income from that flat. Sir, what if I transfer that income to my wife, or transfer that income to my friend, or transfer that income to Ankit? Sir, provision says whenever you transfer any income without transferring the assets, sir, that income shall be clubbed in my hands. This is the first thing. Sir, what if I transfer my flat to Ankit? Sir, provision says then in that case, whatever rent has been received by the Ankit shall be taxable in the hands of the Ankit. But sir, I transfer the flat with a condition that I can take the flat whenever I want. Sir, if it is a revocable transfer, provision says in that case, income will not be clubbed in the hands of Ankit. It will be clubbed, it will be my income only. Simple point. Yes, sir, simple point. If transfer income without asset transfer, sir, income will be my income. Income will be my income. Sir, if I transfer the asset, income will not be clubbed. Sir, but if it is a revocable transfer, I can take the asset whenever I want. Sir, in that case, it is not clubbed. It is not. It is clubbed in my hands. Sir, we got that point. Sir, if any asset is transferred to HUF, if any asset is transferred to HUF. Sir, for example, if I have an asset, if I have a house, if I have a house, and that house has been given to HUF, rent is being received by the HUF. Provision says that that rent will be taxable in my hands. Whatever the rent has been received by the HUF will be taxable in my hands. Second thing, sir, if HUF's partition takes place, if any of the members of the HUF receive such flat, if any of the members receive such flat, provision says, sir, such income shall not be clubbed in my hands. But if my wife receives such flats, or if I am receiving such flat after partition, then it shall be clubbed in my hands. It's a simple point. Sir, if I transfer any of my asset to my spouse or my son's wife, if I transfer any of my asset to my spouse or son's wife, provision says clubbing provision in this case would clearly apply. If I transfer my asset to spouse or son's wife, clubbing provision shall apply in my hands. Got it, sir. But sir, for that matter, there should exist the relationship at the time of transfer and at the time of income generation also. For example, I transferred my house to my wife. I transferred my house to my wife. On the next day, she took divorce from me. Provision says in that case, clubbing will not apply to the income generated from the house, because ultimately she should be your wife also, no, while generating the income. She should be your wife. Got it, sir. Also, sir, if I have given the house, if I have given to a house to my wife, she has not taken divorce, but she started living away from. She started living in that house. In that case, she started to live apart. In that case, provision says it shall still not be clubbed. Sir, for example, if I transfer any of my property to minor child for inadequate consideration, provision says it shall again be clubbed in my hands only. Sir, remember, sir, if I use any of the money given by my spouse, for example, if I use any of the money given by my spouse in my business, provision says whatever the money that has been invested in the business on 1st April, in that proportion, whatever the profit is being earned by the entity, that proportionate profit will be given to the partner only. Shared proportionate profit shall be given to the spouse. For example, spouse has given me 5 lakh rupees money, and I myself have 10 lakh rupees, sir, on 1st April. 1st April, we have capital of 15 lakh rupees. 1st April 2024, we have a profit of capital of 15 lakh rupees. Out of this, 5 lakh has been given by spouse, and 10 lakh is my capital. During the year, I earned a profit of rupees 9 lakh. Provision says 1/3 of the profit would be taxable in the hands of spouse, and 2/3 of the profit in the ratio of your own capital contribution will be added to your capital. Sir, are we clear on this front? Yes, sir, we are clear on this front. We are clear on this front. Sir, if I don't transfer property to my spouse or son's wife, if I transfer it to third person for the benefit of the son's wife or spouse, provision says again transfer provisions and clubbing provision would apply. Okay, sir. Sir, for example, if I am the one who holds any substantial interest in any entity, substantial interest imply, sir, if I hold any 20% or more profit sharing ratio in an entity, if I hold any kind of if I hold exceeding 20% of shareholding in an entity, I supposed to have substantial interest. If I have substantial interest in any entity, or any of my relative, mother, father, brother, sister, lineal descendant have any substantial interest in the entity, okay, and my spouse, who does not have any technical qualification, any kind of diploma, any kind of degree, receives a salary from that entity just because she is my spouse, provision says clubbing provisions would apply, and whatever the salary she is receiving, that will be clubbed in my hands. Remember. I have substantial interest or my relative has substantial interest and my spouse is receiving any income from that entity, sir, clubbing provision shall apply. Remember. Second thing what is said is, sir, if she's qualified, then clubbing provision would not apply. If she's qualified, then clubbing provision would not apply. Sir, but what if you both are substantially interested? Then provision says, if I am also substantially interested and my wife is also substantially interested, then what to do? Sir, whoever's income is higher before clubbing provision. Whoever income, see, if you both are qualified, then in that case, income will be taxable in both of your hands. But sir, if you both are not qualified and you both are having substantial interest, then in that case, what will happen? Sir, whoever's income exceeds before clubbing provision, sir, in hands, it will be clubbed. In those hands, it will be clubbed. Sir, income of a minor. Sir, what happens if minor earns an income? First of all, it is a thumb rule. Whatever the income that minor earns, whatever income minor earns, okay, that will be clubbed in the hands of the parents. That will be clubbed in the hands of the parents for sure. Whatever the income the minor earns, it will be clubbed in the hands of the parents. But here are certain exceptions. For example, we have Ankit. Ankit is of 17 years of age. Ankit is of 17 years of age and he went to concert of Taylor Swift. He went to Taylor Swift concert. There was too much of rush, too much of crowd, and all of a sudden somebody steps on the legs of Ankit. Ankit shouts, ah. I mean, the sound of his ah was so loud, was so loud. Everybody went silent. Even Taylor Swift called Ankit on the stage and asked him to sing the song ah ah ah. Nikli jo dil se karke. I mean, he started singing. That sound was so mesmerizing made by the Ankit that he started earning from that sound. Provision says. Ankit earned rupees 10 crore during the year by just making that sound, that bad sound, that sound of those songs, that mesmerizing sound that he started making. He started earning from that sound. Provision says, whatever the minor earns based on his talent or skill, so that is taxable in the hands of the minor. Sir, whatever the earning that minor earns on basis on that talent or skill, that is taxable in the hands of the minor only. Okay, sir, we got that. You were not. Why this example? Why this example was required? Just this example was required to freshen up your mind. I know things are getting too heavy, so these examples freshen up the mood. Sir, if any of the minor earns by the manual work, for example, in train, we have miners who clean the shoes. We have miners who sell goods in the trains. If you have ever traveled in general ticket or general bogie, or if you have ever traveled in sleeper bogie, you must have seen people coming, cleaning shoes, singing songs, whatever the manual work that a minor does, that income will be taxable in the hands of the minor. Or if minor is suffering any disability, whatever the income minor earns, that will be taxable in the hands of minor only. My question to all of you is all of you. For example, if we have Ankit. Ankit is singing like nobody else, like he's singing like Arijit Singh. He is just 17 years of age and he's singing like Arijit Singh. And I'm not aware about South Indian singers, but I am aware of Arijit Singh. So Arijit Singh, he's singing like Arijit Singh. During the previous year, 24, 25, 22, 20, 23, 24, he earned rupees. He was 16 years, okay. He earned rupees 10 crore rupees. He did a fixed deposit of this 10 crore and earned interest on this fixed deposit at the rate of rupees 60 lakh rupees. My question to all of you is, see, whatever the income this Ankit has earned 10 crore, this will be clubbed in the hands of Ankit. Sir, my question to you is whether this interest of 60 lakh rupees, whether this will be taxable in the hands of Ankit or it will be taxable in the hands of parents. My question to all of you is whether this income on income is taxable in the hands of Ankit or it is taxable in the hands of the parents. Question to all of you. Sir, this will be taxable. This will be taxable. This will be taxable. This will be taxable in the hands of parents, not Ankit. Sir, why? Why it will be taxable? I see most of you have written answer, Ankit. It is not taxable in the hands of Ankit. Why, sir? Because ultimately, now, see, we discuss these things in our regular batches, our power batches also, we discuss this thing. What happens is now, whenever you earn any income, it is taxable in the hands of parents only. A minor earns any income, it is taxable in the hands of parents only. Why, sir? Because the basic provision is any income is taxable in the hands of parents. Only three exceptions are there. So income because of skill, income because of labor, income because of any disability. So it is taxable in the hands of parents. Otherwise, no income is taxable in the hands of the yourself. So whatever interest income you're earning will be taxable in the hands of the parents. So income earned by investing, such income is also clubbed. See, this book incorporates every point that I'm talking. Okay. Whenever parent is earning, whenever parent in whose hand it is being clubbed, whenever on whose hands it is being clubbed, whenever minor's income is clubbed in the hands of the parents, and parent is opting for old tax regimes, then he is allowed 1500 rupees exemption. Oh wow, sir. It is a kind of ehsan, it is a kind of benefit that government is giving, sir. 1500 rupees per annum. 1500 rupees per annum exemption that government is giving per child if income is clubbed in your hands, and this exemption is only given in old tax regime. New tax regime, this exemption is not given. Sir, provision says if marriage does not subsist, then in whose hand this income will be clubbed? Provision says whoever takes the custody of the child, it will be clubbed. Sir, normally in whose hand it is clubbed? Sir, if both the parents they exist, in that case, sir, the parents whose income exists higher before clubbing provision, in their hand it will be clubbed. Cross transfer. Sir, understand this example. For example, this is Rahul and this is Ankit. We both are true brothers. We both are bloody brothers. No, no, no. Real brothers, real brothers, real brothers. Brothers by blood. Not brother from another brother, but brother from blood, brother by blood. Sir, for example, Ankit has a wife, Mrs. Ankit. And I have a wife, Mrs. Rahul. Sir, if Ankit, instead of if we give loan to each other, then clubbing would apply. If we give loan to each other, then clubbing would apply. What I did, I give loan of rupees, I give gift of rupees, I gave gift of rupees 10 lakh rupees. I gave gift of 10 lakh rupees to Ankit's wife. I gave gift of 10 lakh rupees to Ankit's wife. Sir, and Ankit's wife invested this at the rate of 8%, 10 lakh at the rate of 8%. And in return, Ankit gave my wife 8 lakh rupees and she invested at the rate of 10%. Ultimately, what happened is, sir, I was supposed to give money to my wife now. I was supposed to give money to my wife, but instead of that, I gave it to Ankit's wife. That wife gave to Ankit, and Ankit gave to my wife. Sir, ultimately, we are just removing the money now. We are just doing cross transfer just to entertain, play with the money. Provision says this cross transfer will become taxable in your hands. Ultimately, your wife has the money now. Your wife has your money now. So whatever the common amount is, sir, what matters is the common amount. Common amount. Sir, common amount in this case is 8 lakh rupees. So whatever the 8 lakh rupees is taxable. 8 lakh rupees is with Mrs. Rahul. 8 lakh at the rate of 10% will be taxable in the hands of Rahul. And here 8 lakh at the rate of 8% will be taxable in the hands of Mrs. Ankit. So whatever the common amount is, so that will be taxable in the hand. Interest on that common amount will be taxable in the hands of the husband. This is cross transfer. Next provision we have, sir, whenever incomes are clubbed, losses are also clubbed. Sir, whenever there happens to be a capital gain, if I gift my house prop to my wife, and wife sells it later on. Provision says whenever I gift my wife any assets, sir, in that case, whatever the clubbing provision would apply to capital gains also. If she sells such house at loss, then sir, clubbing on losses would also apply. That loss I will be getting. Sir, if my wife loves me, I am giving my house to my wife as gift. And she loves me out of nowhere. She has affection to me. She loves me. She is giving that house to me out of natural love and affection. Don't you think this should be a consideration? Don't you think that this should be consideration? Why tax is being charged? Why clubbing is being made? She loves me now. Provision actually Supreme Court says in this case. So even though wife loves you, so this is a consideration. Yes, it is a consideration. Your wife's love is invaluable. How can you put a value to it? How can you put a value to it? Your wife's love maybe consideration. It is a good consideration, but it is not adequate consideration. How can you put a price tag to your love? Therefore, it is inadequate consideration. Sir, natural love may be consideration, but it is always inadequate consideration. Sir, all the clubbing provisions apply. Sir, all the clubbing provisions do not apply to second. Sir, gift to wife is exempt, na sir? Yes. Yes. Gift to wife is exempt. Gift to wife is exempt, but to avoid the clubbing provision I am talking about. For example, if I have a house, if I gift this property to my house, to my wife, I will not be charged any taxes in my hands. But sir, if my wife further sells such property, that capital gain that she is incurring will be taxable in my hands. Whatever capital gain she is earning will be clubbed in my hands. This is what I'm talking. There are difference between two things. Even though it is exempt in my hands, but sir, clubbing provision would apply. Whatever income that she is earning from the house, it will be taxable in my hands. Whatever capital gain she is earning, that will be taxable in my hands. I am talking to avoid this clubbing, of capital gain in my hands. Sir, wife is saying, I have bought this house. I have not actually got this house for free of cost. Wife is saying, I have not got this house for free of cost. I have paid him in the form of love. So my wife is avoiding this clubbing of capital gain in my hands by seeing that she has acquired this property at natural love. So that clubbing provision is being overruled. That provision is being overruled. So last point for the session, for the topic, sir. For example, see, clubbing does not apply on the second generated income. Sir, for example, what I am saying is, if I have debentures, of rupees 5 lakh rupees. Rahul has debentures. Sir, Rahul has debentures. Okay. Rahul has debentures. Sir, it earns interest at the rate of 10%. Sir, I gifted this debentures to wife, Mrs. Rahul. I gifted this debentures to Mrs. Rahul. Okay, sir. I gifted this debentures. Okay, gifted. Out of love, I am gifting her. Provision says, sir, 50,000 will be interest. Sir, 50,000 interest will be taxable in my hands, but eventually it will be received by Mrs. Wife on my wife only. Na? If proper consideration, then no clubbing would apply. If proper consideration, then no clubbing would apply. See, if you see in real life, na, you might have seen that in real life, we actually pay the check. We pay money through check. Therefore, it is actual consideration only. We do not do any kind of free or gift. We do not give any kind of gift deed when we give an asset to wife. So we do not have any gift deeds. But we are studying marathon, Baba. It is not a regular class. Why are you asking me these doubts? No, real life doubts are not allowed. It is our setting. You can ask. Okay. What I'm saying. See. Sir, debentures gifted to wife. Sir, whatever interest is received, sir, will be received by wife but taxable in my hands. Right answer is yes, sir. Well, okay. Sir, if wife has received this interest, she must have invested it somewhere else. She invested it in a FD. She invested it in a business. She invested in any debentures. Sir, wherever she has invested, she is earning again 3,000 rupees on this interest. Sir, will this be clubbed? Right answer is no. Sir, income on income is not clubbed. Income on income is not clubbed. Sir, it is only clubbed in the case of minor, but otherwise income on income is not clubbed. Sir, are we clear on that front? Yes, sir, we are clear. Sir, come on to question answers. Sir, we'll do question answers of clubbing also. Arey, you are underestimating me. You are underestimating me. I have come to make you solve all question answers. Whatever the question answers are possible, I will make you solve. Question number 27. Tax assessment of Raghav was completed on 25th December 2025 and tax due was 28 lakh rupees. Sir, make it 128 lakh. It's not 28 lakh. Make it 128 lakh. He had a fixed deposit with Canara Bank rupees 24 lakh. Sir, can that be seized? Right answer is yes, sir. This can be attached. Any property with me can be attached in the proceedings. Sir, there was a receivable of 27 lakh. Can this be attached? Right answer is yes, sir. This can be received. Sir, I had gifted a land to my son. My son, this Raghav's son, is also 45 lakh, and he was major. He was given a land which is worth 28 lakh rupees. Sir, can this be attached? Sir, any property given to my son cannot be attached. Only property given to my wife and minor, oh sorry, son's wife can be attached. Any property to son cannot be attached, even though he was major. If he would have been minor, then it could have been attached. But if son is major, then it cannot be attached. He gifted a diamond necklace to his son's wife. This son's wife diamond necklace can be attached. Right answer is yes, it can be attached. He owns a residential apartment in Australia. Sir, can this be attached? Right answer is yes, this can be attached. So this is the answer that is given. This is the answer that is given. Come on to next topic, that is 304. One more topic and we'll do a break. One more topic and we will do a break. Sir, we got your point. We got your point. Tax audit and ethical compliances. Tax audit and ethical compliances. Very small topic, but topic has very much too much of depth. So do you need to read all the provisions? Right answer is no, you do not need to read all the provisions. Only limited provisions you have to read. Only limited provisions. And I will tell you which all provisions you need to read. Which all provisions you need to refer. Sir, but this is very important topic, continuously, regularly being asked in exam. You cannot skip out this topic, sir. As per 44 AB, who is required to get his books of accounts audited? Who is required to get his books of accounts audited? Sir, we have mentioned under section 144 AB, there are certain people who are required to get books of accounts audited. Sir, when they are required to get books of accounts audited, first of all, sir, 1 month prior to ROI. So if your ROI date is 31st October, prior to 1 month, that is 30th September, you have to get your books of accounts audited. If your audit date, if your ROI date is 30th November, then 1 month prior to that is 31st October, you have to get your books of accounts audited. While getting audit done, sir, your audit is done under 3CA oblique 3CB. Audit is done under 3CA or oblique 3CB. Sir, along with that, sir, a mandatory report is issued under section 3CB. It has to be either 3CA or 3CB, plus mandatory report under section 3CB is definitely issued. Mandatory audit report under section 3CB is definitely issued. Sir, are we clear on that front? Yes, sir, absolutely clear. Whatever under section audit we are being done, 3CA oblique 3CB plus 3CD will be issued. Sir, when we are required to get our books of accounts audited, just give me a second. Sir, when we are required to get our books of accounts audited, sir, provision says in case we have a business. In case we have a business. Sir, whenever our turnover from business exceeds 1 crore, sir, we have to mandatorily required, we are mandatorily required to get our books of accounts audited. Sir, provision says if during previous year, our cash payments are only 5% of the total payments, plus our cash receipts are only 5% of the total receipts if both the conditions are satisfied. If both the conditions are satisfied, our cash payments are only up to 5% of the total payments. Cash receipts are only 5% of the total payments. If both the conditions are satisfied, in that case, our 1 crore limit would become 10 crore for the purpose of tax audit. Our 1 crore limit would become 10 crore for the tax audit limit. Sir, we got that point. We got that point. Sir, what it says. So in case of profession, what it says, sir, if you are doing any professional work, sir, like you are a chartered accountant, company secretary, lawyer, in that case, sir, if your gross receipt exceed 50 lakh rupees, then you are mandatorily required to get your books of accounts audited. Sir, ठीक है. Achha, this total payment when you are looking at, whenever you are looking at this criteria of total payment. For example, when you check the total payment of cash payment up to 5% of total payment, cash receipts up to 5% of total payments. So this is what you have to check. Whenever you are receiving total receipts and total payments, sir, all the payments you have to add. Whether payments for example, purchasing house property, if you are doing payment for interest, if you are paying anything, sir, that has to be clubbed, not just purchases of goods, every payment. And in total receipts also you have to include all the receipts. Whatever receipts for houses, whatever receipts for interest, whatever receipts for rental you have paying, not just sales receipt, or whatever receipts you are receiving, sir, you have to take a receipts totality. Okay, sir. Sir, if you are any SSC who is opting for 44 AD and declaring sir less than 6%, 8%, then in that case you have to get your books of accounts audited, provided that your net total income exceeds basic exemption limit. Sir, you have to get your books of accounts audited. So if you are SSC opting for 44A, BB and triple B and paying less than the prescribed limit, then you have to get your books of accounts audited. And at last provision says, sir, if you are opting for presumptive taxation, then no audit is required. So if you fail to get your books of accounts audited, sir, you will be charged penalty at the rate of 0.5% of the turnover, or sir, 1.5 lakh rupees, whichever is lower. Whichever is lower will be penalty charged to you. Sir, computation of turnover. Sir, computation of turnover. There are certain things that are to be considered while calculating the turnover for the purpose of tax audit. Certain things to be considered. Sir, what are those things? Provision says any discount in sales invoice shall be reduced from the turnover. Any discount in the sales invoice shall be reduced from turnover. Any discount in the sales invoice shall be reduced from turnover. Sir, for example, you must have seen 40% off on shops, 40%, 50% on the shops. Provision says whatever the fixed discount that you are given, whatever the fixed discounts you are given, sir, that is always reduced. Those are always reduced. Whatever fixed discount you are given, always reduced. Whatever cash discounts are mentioned, sir, cash discount which are not percentage of the turnover, sir, these are not to be reduced. Sir, whenever we have sales returns, sir, sales return are to be reduced in the year in which sales are actually returned. Sir, you don't have to check. You don't have to check in sales return for which previous year sales pertain to. Sir, sales return pertain to. So, in whatever year you receive the returns, you have to reduce it. Sir, if you have any kind of turnover discounts, if they are part of the turnover, sir, if they are part of the trade, if they are of the trade discounts, reduce. So, if you are giving any special rebates, sir, if it is in the nature of the trade discount, then reduce. If it is in the nature of the cash discount, then do not reduce. Ultimately, trade discount is reduced, cash discount is not reduced. Whenever you have stock in trade, whenever you have shares and securities, so if such shares and securities are held as a stock in trade, so they shall become part of your turnover. But if you have share securities held as capital asset, they shall never become part of your turnover. So important point I'm telling. So provision says if you are any of the SSC, who has more than one business, for example, I have a business of garments, I have a business of footwear, I have a business of garments, I have a business of footwear. Provision says I have to club the turnover of all the businesses to determine the limit of 1 crore or 10 crore. I have to club the turnover of all the businesses. And sir, whenever I am clubbing, sir, do not club these three businesses 44B, 44BB, and 44BB. Sir, all the presumptive incomes like non-resident shipping company, non-resident, sir, aircraft company, and non-resident, sir, cruise shipping company are not to be clubbed. This is the calculation of turnover. Any doubt to anybody? So continuing further with tax audit report, which tax audit reports are to be furnished to. Try understanding it. Whenever a tax audit is undertaken, two reports are always furnished. First of all is either 3CA, 3CB, either of two, plus 3CD, 3CA, 3CB, plus 3CD, 3CA, 3CD, plus 3CD, either of them have to be furnished. 3CA or 3CB plus 3CB. Sir, when 3CA is furnished, when 3CB is furnished, sir, this might be asked in MCQ. I seriously think this is the area examiner can test. When your books of accounts are already under audit under any other act, for example, under Companies Act, whenever you are under audit under LLP Act, whenever you are under audit under, for example, Cooperative Societies Act, Whenever you are under audit under any of your respective acts, sir, in that case, financial statements are already under audit under any of the respective acts. Therefore, 3CA is issued. In this audit reports, a chartered accountant is not required to express opinions. In a chartered accountant is not required to express opinion on the financial statement, because opinion on financial statement is given under the respective acts only. CA is not required to express any opinions. But sir, if you are not getting your books of accounts audited under any section, for example, only in income tax you are required to get audited, then in that case, chartered accountant is going to issue 3CB. Along with that, tax auditor is required to give opinion on financial statements. And tax auditor is required to get opinion on financial statements. So, got that point. Mhm. Mhm. Got that point. Provision says, sir, whatever is issued, sir, 3CA and 3CB, sir, 3CD is mandatorily to be issued. In 3CA, 3CB, the tax auditor is required to tell whether the statements are true and correct or not. True and correct, not true and fair, but true and correct opinion is to be given. Sir, while fulfilling 3CD, sir, 3CD, after furnishing 3CA or 3CB, 3CD is to be furnished. Whenever furnishing 3CD, sir, tax auditor has to consider the following pointers. So, if any of the clause is not applicable, for example, a proprietorship, sir, changes in shareholding may not be applicable. So, in that case, he has to write the not applicable clause. Sir, whatever the information that is given in books of accounts, sir, that has to be considered while fulfilling the 3CD. 3CD. The 3CD is only filled as per books of accounts. Sir, if one of the treatment is applicable to multiple provisions, in that case, what happens? Sir, assessee has to choose the most suitable option. Sir, sometimes what happens is tax audit is done based on old year, but our current year financial or audit report may not be applicable for that year also. So we have to choose the most suitable option. You can ignore this point. Sir, we have clause 3CD. We have 44 clauses. We have clause by clause explanation. So you don't need to remember most of them. Clause 1 talks about names, ignore. Clause 2 talk about address, ignore. Clause number 3, PAN number, ignore. Clause number 4, GST number, ignore. Clause number 5, status, ignore. Clause number 6, ignore. Clause number 7, ignore. Clause number 8A. Sir, under which of the regime you are going to pay tax? Sir, are you going to pay tax under regular regime? Then choose regular. If you are going to pay taxes under 115 BAA, BAB, BAC, BAD, BAE, then opt for that. Clause number 9, sir, do you have any change in PSR? Sir, ignore. If you are a partnership firm, do you have any change in profit sharing ratio? If there is any change, sir, what is the details, sir? You have to ignore. Clause number 10, sir, if you are doing more than one business, then tell the nature of the business, sir, ignore. Clause number 11, sir, do you maintain books of accounts and where such books are kept? Ignore. Sir, if you have any of the profit in the P&L that is accessible to 4480, do tell, sir, ignore. Sir, clause number 13, sir, talks about ICDS or method of accounting. Sir, clause 14 talks about valuation of stock. You have to ignore that. Sir, clause 15 talks about, sir, if you convert your capital asset into stock in trade, sir, then whatever the FMV is, sir, you have to mention. Sir, date of conversion, date of sale of stock in trade, you have to ignore this point. Clause number 16 is important. Clause number 16 is the first clause that is important for you. I will tell you the list of clauses that you need to learn. Sir, items that are not credited to P&L that should have been credited. Items that are not credited to P&L by the assessee that should have been credited are given in this clause. So, for example, any item that fall under section 28, section 28 is the charging section. Any of the income that should be taxable as per 28 that has not been taxed, just we have to report here. Any pro forma credits, duty drawback, refund of customs that have been admitted by the department, so that shall be considered. Any escalation claims during the previous year shall be considered. Sir, any other items of the income or any capital receipts that have not been considered shall be considered here. So, ठीक है. Clause 17, sir, if you are selling any property, what is the SDV, sir? If you are considering for 43CA, 50C, sir, you have to report. Clause 18 is important. Sir, what it says, whatever the depreciation that you are charging, sir, you have to use WDV method. As per WDV method, sir, you have to choose every block 1, block 2, block 3. In that opening plus closing, you have to mention the details. Sir, clause 18 talks about that. Clause 19. Sir, if your any of the expenditure has any kind of income that is allowable 100%. Sir, for example, if you have 33 AB deduction, if you have 33 ABA, sir, if this special deductions, if you have, sir, just to tell us that we will disallow that. It is not relevant. Sir, clause number 20 is relevant. I have told you only two clauses are important till now. First one is 16, second one is 20. 20 is the second most important till now. Sir, whenever you distribute any sum to the employee as a part of the profit, sir, for example, many of companies have whatever the profit is reported during the year, 10% of that profit would go to employees. That is how some companies work. Some companies operate in that manner. Sir, if 10% of the profit is distributed to the employees, what would happen in that case? So that has to be reported in clause 20. Along with that, sir, another thing that to be reported is a very important thing. This is what makes this clause important is, sir, if any of the sum has been received from the employees towards the employee contribution towards PF. If any of the sum has been contributed by the employees towards the employee contribution to the PF, employee contribution to PF, ESIC, RPF, so that has to be reported here. Remember, sir, this was the contribution that was supposed to be paid up to the due of that fund. This is not the fund. This is not the contribution that is to be paid up to ROI. This is the fund that is to be paid up to the date of fund. If you did not pay this contribution up to the date of fund, such expenditure is disallowed. So this is important clause. This has not been tested right till now, but can be tested and will cause you troubles. Clause number 21, most important of all times. Sir, items that are inadmissible as per PGBP. Items that are inadmissible as per PGBP. Sir, what are those items? Provision says, if any of the amount that has been debited to P&L that is of capital nature, that is of personal expenditure, any advertisement expenditure related to political party or any kind of violations, sir, these are already disallowed as per PGBP. Sir, if you have debited to P&L, just drop it down, we will disallow. Sir, if any of the item on which TDS was required to be deducted, but you did not deduct TDS, sir, it is important. Sir, it is important. If we have any item that debited to the P&L in the nature of interest, salary, bonus, commission, so that is not allowed. See what happens if a partnership firm pays certain interest remuneration. So it is allowed up to a certain limit, beyond which it is disallowed. Whatever you have paid beyond it, sir, report it here. If any of the payment is made in cash exceeding 10,000, sir, report it here. We will disallow. Sir, if any gratuity has been debited to P&L, any provision, Arey Baba, provision is not allowed. Just add it back. Sir, if any employer has contributed towards unrecognized provident fund, that should not be allowed. Now add it back. Sir, if any contingent liabilities is debited to P&L, add it back. If any expenditure relating to exempt income is debited to P&L, sir, add it back. If any of the expenditure under proviso to 36, sir, for example, if you are acquiring any asset, you are paying any interest to till the date of put to use, sir, whatever the interest that is being paid till the put to use date is being charged to cost of asset. If you acquire any asset and you pay interest till the date asset is put to use, provision says that interest is being charged. That interest is being charged to cost of asset, not to P&L. So, sir, whatever the interest is, sir, you have to report it here. So, these are important disallowances. Subsections are not important. Rather, sir, internal content is important. Sir, any expenditure of personal expenditure debited to political party added. Any kind of expenditure on which TDS should have been deducted but did not deduct. Any kind of expenditure in the nature of salary, interest, excess paid, any kind of disallowance under section 40A3, any kind of gratuity paid or payable, any kind of employer contribution under section 40A, any kind of contingent liability paid, or any kind of expenditure for the exempt income, sir, every of these expenditure are to be added. This is important clause, sir. Important clause number 21 is really important. 22 you can skip out. 23 is important. 23 is important. You remember section 48.2? Hey, you are my relative now. You are my relative, sir. 48.2 implies. Sir, it implies. Sir, wherever we pay any sum and debited to P&L, and we pay to our relative. Relative implies a mother, father, brother, sister, LALD, and spouse. And sir, we pay more than FMV, then excess was disallowed. Excess was disallowed. So this is where we have to report the payment made to specified person. Excess AO will disallow. Clause 24 not relevant. Clause 25 not relevant. Clause 26 a bit relevant. Clause 26 a bit relevant. Sir, what clause number 24 says? Sir, for example, if any of the deemed PGBP has been mentioned in P&L, so any deemed PGBP under section 33 AB, ABA, sir, if you remember, as per section 33 AB, ABA, if we deposit any sum to NABARD, if we deposit any sum to site restoration account, if we withdraw that sum, sir, we have to use that sum within previous year only. If we did not use, then it shall become deemed PGMT. That will be reported in clause 24. If we misutilize that sum, that will be reported here. Any kind of sum taxable under section 41, sir, for example, bad debt recovered, clause 25 reporting will be done, sir. You don't have to remember this. Clause 26. Sir, whenever any expenditure is allowed on payment basis, if you remember section 43B, presumptive taxation, if any of the expenditure is allowed on payment basis, sir, that should be reported here. If you have paid it up to ROI, sir, mention it. If you have not paid it up to ROI, that you have to mention it. Sir, if any of the expenditure that was disallowed in last year, if you have paid in current year, that should also be reported here. That should also be reported here. Clause 27 talks about GST or prior period items. Clause 28 omitted, 29 omitted, 30 omitted, 31 not important, 30A not 30 not important, 30A is important. Sir, if any of the primary adjustment is being done in your books of accounts on account of transfer pricing, we have to learn the clauses. Ankit, you have to learn the clauses that I am saying. Only 5 or 6 clauses I will tell. You have to learn those clause numbers. Rest you can ignore. Sir, if primary adjustment takes place, if any of the primary adjustment takes place in your books of accounts, then tell the amount of primary adjustments. Sir, then whether excess money is repatriated, if not, how much interest that you have charged. Clause number 38 talks about that. Clause number 31 is really very important. So really very important. Really very important. After clause number 21, the most important is clause 31. What it says. Sir, if you have received any money in contravention to 269 SS, if you have repaid any money in contravention to 269T, if you have received any money in contravention to 269ST, sir, you have to report here. Okay. Clause 32 talks about the losses carry forward. Clause 33 talks about deductions under chapter 6A. Clause 34, again, third important very section. Sir, this section talks about 3 things. The payments on which TDS was deductible, payment list, the amount of TDS to be deductible, amount of TDS deducted, amount of TDS paid, and the due date of TDS payment, date of TDS payment. So this list you have to attach. Sir, whatever the return of TDS that you were supposed to file, did you file on time? This is the second thing that you have to report. And third thing that you have to report is, sir, whatever the interest or penalty that you have paid on a TDS, all these things are to reported in clause number 34. So clause 35 you can ignore. Clause 36, clause 35 talks about the quantitative details of the stock that you have. Clause 36 talks about, sir, if you receive any deemed dividend. Clause 37, sir, cost audit done, you can ignore. Clause 38, sir, any kind of excise audit done. Clause 39, ignore. Clause 40, you can ignore. Clause 41, you can ignore. Clause 42, it says, if you are the entity liable for SFT reporting, sir, we understood the SFT reporting in the last miscellaneous topic. We understood if you are the entity who has paid any interest, you are the entity paid any dividend, if you are entity who has issued shares exceeding 10 lakh to a single person, sir, you are liable for SFT reporting. Sir, you have to report whatever SFT reportings you have done. Sir, whatever your reporting ID is, sir, form that you have furnished, due date of furnish and the form and actual date of furnishing the form, you have to report that in form 42, in clause 42. Clause 43 talks about, sir, CBC reporting. If your entity is liable for CBC reporting, then you have to mention. Clause 44 talks about whatever the payments that you have done. Sir, tell us the GST breakup, whether it is leviable for GST or whether it is not leviable for GST. You have to report such payments. Sir, you have to report such payments. Sir, we have clause 40 clause 44. This, sir, these are the 6 clauses that you must learn. Clause number 16 talks about, sir, items not credited to P&L. Clause 21, inadmissible items. Clause 20, Clause 23 talks about, sir, related party payment. Clause 26 talks about, sir, 43B. Clause 31 talks about TDS, sorry, 26 and SS. And clause 34 talks about, sir, TDS. So these are the 6 clauses that you need to remember. Sir, if you can add to it, sir, clause 20 is also relevant if you remember. Clause 20 is also relevant. So 7 clauses you must remember. 7 clauses you must remember. Revised tax audit report. Revise the tax audit report. Sir, when can a tax audit report be revised? See, there are only 3 instances on which tax audit report can be revised. Sir, what are those instances? See, this chapter is not important because of clauses. This chapter is important because of finding out who is liable for audit, who can file a revised report, and what are the ethical compliances. These are the three things that are important for this chapter. Clause numbers are not. Neither the content of the clause is important. Important is ethical compliances. Important is who is required to get books of accounts audited. Important is revised tax audit report. Sir, who can get tax audit revised report revised? Sir, only in three instances tax audit report can be revised. Only in three instances. What are those three instances? Sir, first of all is, sir, if you have any expenditure referred under section 43B. See, what happens 43B says you can pay expenditure till the date of ROI. But tax audit is signed a month prior to ROI. So it is possible now. Some of the bonus, some of the commission is not paid up to the date of tax audit. It must have been disallowed by the tax auditor, but it is paid up to the date of ROI. So it should be allowed now. So tax auditor has to revise the report if an expenditure is paid after the due date of ROI, after the due date of tax audit, but before ROI. Second thing, if any of the expenditure on which TDS was deducted but not paid up to the date of tax auditor must have disallowed this. Later on, tax auditor can revise his tax audit report if it is paid before the date of ROI. Third thing, sir, if assessee has opted for other tax regime and the tax regime is being changed before ROI, so tax auditor has to revise the ROI has to revise the tax audit report. In three cases, tax auditor has to revise the report. Otherwise, whatever revision he does is invalid. Whatever revision he does is invalid. Sir, ethical compliance is the only topic which I want you to study keenly, but I will teach after break because I think I require a break and you also require a break. I also want to discuss the question answers of this topic because this chapter is not easy to score marks. Easy to understand but difficult to score marks. So I want to tell you the basis on which examiner gives you mark, basis on which how you have to answer the question, basis of ethical compliances. It is 150, take break till 220. 30 minutes break. 30 minutes break. After break, I will complete ethical compliances. So if you go on a break, it's your duty to come on time. Otherwise, you will miss out the ethical compliances or you will miss out the next topic. And next topic is going to be very important. Next topic is for sure going to be very, very, very important. So guys, see you guys after the break. Have a break. Have a Kit Kat. Hello. Okay. So, guys, welcome back from break. Welcome back from break. So, there is a message one of the day. Sir, in DT September 25 QB, how many questions we have in capital gain? Chapter 45 or 43? I have two books. I'm confused which one to refer. See, there are two books circulating of mine only. One I had shared for May 25 attempt. For May 25 attempt, whatever the book I have shared is now has 43 questions. But sir, whatever book I have shared for September attempt, it has 45 questions. There are certain questions additions in that capital gain. If you have the May 25 book, then I have also shared a separate PDF which incorporates all the additions. So if you have old book, you can refer the additions along with. If you have new books, you have 45 questions, then you don't need to refer anything extra. I hope you got the point. Now, continuing further, before going to break, we started off with the tax audit chapter. And now, sir, we have to understand the ethical compliances. See, this half of the chapter is equally important to tax audit, or I should say, it is more important. So, what happens is ultimately, as a tax auditor, has to be ethically compliant, and you have studied this ethics in your audit syllabus. But in this syllabus, we have in this in CA final income tax, CA finality, you have two clauses to be studied. So, before understanding this clauses, sir, we need to understand there might be a situation where tax auditor thinks that TDS should have been deducted under section 194C, whereas assessee says that it should be 194J. There can be a difference of opinion between assessee and auditor. So in that case, auditor is not going to force assessee to follow certain things. He is just going to report both the things in 3CD. In 3CD, he shall be reporting both the things. Along with that, whatever reporting he is doing, sir, he shall be appropriately defining such things in 3CA or 3CB. Whatever the difference of opinion is, he should state both of them. And along with that, he should mention such difference of opinion 3CA and 3CB so that tax authorities would make proper decision making. In any of the case, as auditor's scope is being restricted. Auditor is not provided with sufficient appropriate audit evidences. Sir, auditor cannot base his opinion, sir. In that case, auditor should qualify his opinion, sir. Auditor should qualify the opinion. Provision says, provision says, sir, if auditor has not complied or he has failed to do the reporting requirements, if he has failed to mention the difference of opinion, sir, if he failed to qualify the report on which he was not provided furnished, he was not provided evidences, sir, in that case, sir, he shall be ethically non-compliant. He shall become ethically non-compliant, and he shall be guilty under CA Act. And under CA Act, we have two clauses in which we can make him guilty. Sir, CA Act has two schedules. Sorry, two schedule. Schedule 1 and Schedule 2. Schedule 2 has two parts. Every schedule has two parts. Schedule 2 has two parts, part 1 and part 2. Of this part 1, sir, we have to choose the clause number 7 and we have to choose clause number 8. What is meant by clause number 7 and what is meant by clause number 8? Sir, for example, if auditor has not done due diligence or he was professionally negligent. See, he could have done more efficient test checking. He did not do. He was grossly negligent. He did not do due diligence. Sir, he was not efficient enough in his working. So in that sense, he shall be guilty under clause 7. Sir, he shall be guilty under clause 8 in two situations. Sir, either he has not obtained sufficient and appropriate audit evidences in first case, and in second case, he shall be guilty under clause 8 when he obtained certain audit evidences, but later on government came to know about certain things which negate his opinion. In that case, sir, he shall be guilty under clause 8. So what did I just say? Understand. Try to understand this thing. We have only two clauses to be mentioned in our answer. It has to be either 7, it has to be either 8. It has to be either 8 or it can be both also. So take care. Clause number 7 is to be referred when he was grossly negligent. He did not exercise due diligence. We have to refer these cases then. But sir, clause number 8 is to be referred only in situations. Clause number 8 is to be referred only in situations where, sir, he did not obtain sufficient appropriate evidences, or even if he obtained, sir, opinion was negated later on by the department based on certain new discovery of facts. His opinion got negated later on. In these two cases, he shall be considered as professionally misconduct. He shall be considered to have done professional misconduct. Important factor here is, sir, we have to answer it also in the similar manner in the examination. We have to answer the same thing in examination. How do we answer it? Sir, to answer this question, why not to take to a question? Why not to come to a question on tax audit? Also remember, see, sometimes what happens is, we are not able to recall the clauses. We are not able to recall the clauses. Sir, what if we are not able to recall the clauses? Then what to do? See, if you are not able to recall the clauses, if you are not able to find out which clause is applicable, see, if you are able to find out clearly, just write down. If you are not able to find out clearly, sir, you think both are applicable, write down both. If you are not sure about 6th, it might be 6th, it might be 7th, it might be 8th, sir, never ever write the wrong clause. It's okay not to write the clause. It's okay to write both the clauses in some vague language, but it is not okay to write a wrong clause. Sir, let me tell you how answer is to be written. I have to teach the answer writing with this question. A search was conducted under section 132 of the Income Tax Act in case of Element Jewelers, okay, a gold jewelry retail chain, on 28 Feb 2024. As a part of court's search inquiries from the data of the billing software was analyzed, and analysis on this data, it was found that company was in violation of section 40A3 in the major way, in tune of 40 crore of the purchase of the pure gold. What it says, sir? Old gold. So there is company called Element Jewelers. This Element Jewelers and was searched, and in books of accounts it was found that it has done 20 crore rupees of purchases in cash in violation to 40A3. What it happens is, a gold jewelry business is this only. The jewelry business is this only. Sir, they purchase old gold from their family households. They pay them cash, and against their old gold, they convert it into fresh. They make new jewelry and sell it in the open market. This is what they do. Simply, this is what they do. Sir, but issue is, sir, whenever they are paying to the customer, they should be paying via banking channel. Sir, if they pay in cash, it is disallowed. It should be disallowed. In order to verify the findings of the digital data, some of the customers whose whereabouts were available in the computer records were contacted and their statement were recorded. See, for example, it was sold to customer 1. Customer 1 was caught by the department and he was being called, and sir, customer 1 admitted that they had received money in the cash. In fact, sir, most of the times they did not. They paid in cash only. Oh my God, sir. Customer 1 on oath, he said that I was paid cash more than 10,000 rupees. So on that inquiry, department got to know that 20 crore purchases have been made in cash. That is in violation of section 40A3. However, when it was asked to the tax auditor, so tax auditor is required to report this section, this thing in clause number 21. If you remember, any payment done in cash exceeding 10,000 should be done by account pay check, account pay demand of electronic clearing system. Tax auditor said yes, every payment done is in account pay check. Tax auditor says every payment done is in account pay check. Oh my God. On whether the expenditure covered under section 43A3, yes, he said yes, it is account pay check. Auditor submitted the standing instructions were given by the management of the entity to the employees making, okay, only through account basically. He says auditor says, according to management, every employee salary is being paid in banking channel only. So he assumed that this is also done via bank channel. Along with that, he has copy of instructions. Along with that, he has also submitted that he has got written representation. And he also did test check, which did not reveal a violation. See, what auditor is saying, he has done test check. He has taken written representation, and he has also seen other transactions where some employee salary are being paid in banking channel only. So he assumed that this payment would have been done in banking channel only. Sir, he did not check such thing. Sir, it is apparent from the answer that auditor is wrong. It is apparent from the answer that auditor is wrong. Sir, why didn't he check? Isn't this his duty to check whether payment should be done in banking channel or not? See, he understands this fact now that it is a jewelry business. It is a key risk area. It is a key risk area. It is the area in which the risk of material misstatement is high. In a jewelry business, the major risk is on cash payments only to the customer for the purchase of old gold. This is the major risk area, and he should have checked it more oftenly, more frequently, but he did not check. So he is professionally guilty. He has a professional misconduct. He should be liable for two of these sections. Sir, it has to be either, sir, it has to be gross negligence, and it has to be clause 8 also, where he did not obtain sufficient appropriate audit evidences. But sir, important here is, sir, you have to mention down the complete answer, and you don't have to just reach to the conclusion. You have to follow the steps in which you have to write the answer. And what are those steps? First of all, you have to define the 48 to 48.3. You have to define that as per section 48.3, any payment done exceeding 10,000 to a single person single day should be done via account paycheck, account pay demand of electronic claim system, otherwise it will be disallowed. Then you have to define that as per clause 21D, you have to report such transactions. Then sir, you have to tell about guidance note that there are certain practicalities. So auditor is allowed to just check. But sir, auditor has to check. Auditor should understand this is a key business area. Auditor must understand that this is a key business area in which people are bound to make mistakes. People are bound to do fraud. In that case, auditor should have taken more care. The auditor should have considered the nature of the business in this case, since this business is having more risk areas, auditor should have done more checks. Therefore, he has failed. Therefore, in this case, he shall be guilty for clause number 8 and 7 and 8, both as per CA Act. He shall be guilty under both the clauses. So you have to first of all explain the provision applicable of Income Tax Act. Then you have to explain the clauses. Then you have to relate the provision and the clause with the given case. Then certainly you have to explain in the given case, and at last you have to give the conclusion that he is guilty. You don't have to reach to the conclusion immediately. That is how questions of tax audit are to be attempted. Next chapter, that is black money law. Next topic, that is black money law. What this topic is all about. Sir, black money law, what is important in this topic? Sir, whenever assessing officer finds out any of the undisclosed foreign asset or undisclosed foreign income, assessing officer finds out any of the undisclosed foreign asset or undisclosed foreign income that you have, sir, he can charge it to tax at the rate of 30%. He can charge it to tax at the rate of 30%. Important here is, sir, undisclosed foreign assets. Undisclosed foreign asset will be charged to tax in the previous year in which assessing officer notices it. Undisclosed foreign asset will be charged to tax in the previous year in which assessing officer notices it. Sir, but undisclosed foreign income would be charged to tax in the previous year in which it is earned and not in the year in which it is noticed. Sir, we got that point. Sir, we got that point. Sir, what is undisclosed foreign assets? Sir, asset which is not disclosed to income tax department. What is undisclosed foreign income? Income from whose source has not been declared to department. Sir, who is an assessee? Sir, this is important. Every time when a black money question is being asked, it is asked, sir, whether assessee is assessee or not. Whether the person to whom proceedings are to be initiated is assessee or not. See, whenever assessing officer notices the asset, whenever the assessing officer notices the asset, you have to check whether such person is resident of that previous year or not. Resident as per Income Tax Act. So if you are resident of the if you are resident in the previous year in which assessing officer notices the asset, then in that case you are assessee. If the previous year in which assessing officer is noticing the asset, whether you are assessing that previous year, so whether you are resident in that previous year, then you shall become assessee. But sir, if you have stayed outside India, you have left India a few years back, then you may not become resident. Then in that case, what you have to check, sir, whether you were resident in the previous year in which you acquired the asset. See, you have to be resident in either of the year. Either you can be resident in the previous year in which assessing officer notices it. If not, if you are resident in the year in which you acquired the asset, in either of the year, if you become resident, sir, assessing officer can proceed with black money proceedings against you. So what did I say? Two things. I said two things. First of all, you can be resident in the year in which you assessing officer notices it. Second thing, you can be resident in the year in which, sir, you acquired the asset. So in either of the case, sir, you shall become assessee. Sir, any notice served to you shall be valid notice. Sir, got it. Sir, what is relevant previous year? Simply, relevant previous year is the year in which, sir, asset comes to notice of the department. Assets come to the notice of the department. Sir, why black money law was came? See, just understand. Under Income Tax Act, income escaping assessment or block assessment, you can do maximum assessment for 5 years. For block assessment, you can do assessment for 6 years only. But sir, if you have acquired any assets in 1980s, 1970s, 1990s, and in this year assessing officer notices such asset, sir, we can even tax this. Because ultimately tax is being charged in the year in which assessing officer notices us. So if assessing officer notices this asset after 35 years, 40 years, 50 years, still he can tax it. So it is a very big power given to department. Sir, we got that point. Sir, whenever assessing officer notices the asset, he will charge taxes. He will charge you taxes. He will charge you taxes on those assets. Sir, on what value he is going to charge? For that matter, we need to understand the valuation of the assets now. So, for example, he found out the Facebook shares. I have Facebook shares. I have property in Dubai. On what value he is going to charge? For that matter, we need to have valuation rules for determining the value of the undisclosed assets. So, the valuation is to be determined based on valuation rules as per section 3.2. Okay. So if you have any kind of jewelry, precious stone, artistic works, so these are to be taken at cost or your cost value or your NRV. Your actual cost or your NRV, whichever is higher, shall be taken. Sir, for example, you have property in United States, for example. So how NRV will be taken? Sir, for NRV, you have to use the registered valuer report of the recognized valuer of that government. Whatever the government recognized valuers are, sir, use the valuation report of them on the date of valuation. Sir, what is the valuation date? Normally, sir, 1st April of the previous year is the valuation. On 1st April, this valuation is to be done. For example, if Rahul has Facebook shares in United States, or if I have shares of any like Google, in that case, what to do? Sir, I have to take the cost of acquisition, or I have to take the highest or average, sir, highest or lowest, average trading price. I have to take the average trading price on the established security market, whichever is higher. This shall become my value of quoted shares. Sir, got this point. This shall become value of the quoted shares. Sir, for example, on 1st April, trading has not been done. So on whatever previous day the trading has been taken place, so take the average price of that day. Sir, for example, I have shares of any company which is unlisted. For example, if I have shares of any company, HL Private Limited, then in that case, what will happen? The vision says you have to find out the valuation as cost or NRV, whichever is higher. In this case, NRV would turn out to be, sir, A plus B minus L divided by PE into PV. The same way we do valuation in exit tax is the same way valuation we do in this black money law. Sir, we have to check the balance sheet of the unlisted company. We have to check the balance sheet company in which Rahul holds the share. Sir, whatever the jewelry that unlisted company has, whatever the bullion, precious stones, artistic work, shares, the securities, and more property that this company has, take fair market value of the property. And all the other assets that are there, sir, all the other assets, for example, other assets can be, sir, debtors, other assets can be cash, other assets can be inventory. Take book value of all the other assets, sir. Do not take deferred revenue expenditure, do not take advance tax refund. Sir, A plus B minus reduce the liabilities divided by PE, that is the total share capital that this foreign company has, multiplied by foreign capital that you have. This will give you, this will give you, this will give you, this will give you, sir, value of unquoted shares. Compare it with cost, and whichever is higher, you have to consider for taxation purpose. Sir, whenever you have an immovable property outside India, you have unquoted securities, unquoted shares, sir, which are not equity shares. In that case, what will happen, sir? Cost on NRV, whichever is higher, would be considered. Cost on NRV, whichever is higher, would be considered for determining, sir, valuation. Okay, sir. Sir, if you have any foreign bank account, how would you value that bank account, sir? It is important. This is important. This is technical. What this says, sir. For example, if I have bank account in Dubai, sir, whatever the total of credit side are, you just have to take. Sir, for example, I had deposited 1 lakh, sir, 1 lakh credit, add it. Sir, 2 lakh credit, add it. 3 lakh credit, add it. Sir, 1 lakh minus, sir, don't ignore this. Sir, whatever the deposits are, you just have to check that. Only deposit you have to check. Whatever withdrawals you do, sir, you don't have to check. Sir, what happens is sometimes we have 1 lakh deposited, 2 lakh deposited, 3 lakh deposited. Sir, I withdrew 2 lakh rupees from it and again deposited the same. So if any of the deposit is made out of the withdrawal from the same account, you withdrew certain sum and again deposited back the same sum, then in that case, sir, it will not be considered as twice, it shall be considered only once. If any withdrawal is made and deposited back again, then it shall be considered only once. Or sir, sometimes what happens is I had deposited 1 lakh, 2 lakh, 3 lakh. I had 6 lakh rupees balance. I declared it to income tax. Then later on, what it says, whatever the further income is, sir, whatever the further deposits are, I shall be considering that only once it is being declared. Any deposits after that shall only be considered while calculating the bank account value. So what I said, just take the deposit. Any deposit done out of the withdrawal from the same account shall not be considered. And at last, what I say, sir, if bank account is declared, any money deposited after such declaration shall only be considered. Sir, we got that point. Sir, many a times what happens, sir, we have certain assets that we have already sold down. Sir, for example, we have with us Ankit. For example, we have Ankit. Ankit had bought a property on 1st April 2012. Sir, for 15 lakh. And he sold for 22 lakh. Don't you think government should charge tax? See, Ankit would have bought so much of properties, sold so much of properties. Don't you think government should charge tax on that also? Because ultimately, sir, he had asset, but he had sold this asset prior to assessing officer noticing it. He sold this asset prior to assessing officer noticing it. So Ankit should be charged. Provision says if you have any asset that is being transferred before valuation date, then whatever the cost of that asset is, whatever the sales price of that asset is, whatever the FMV of that asset is, so whichever is higher shall be taken. So for example, Ankit transferred the house of 22, FME was 20 lakh rupees, sir. Whichever is higher will be taken. 22 lakh will be taken as valuation. Sir, I am coming to an example. I want you all to focus a lot on this. I want you all to focus on this example. For some time, this example is beautiful. Just give me a second. Okay. Hello. What I was saying, sir, for example, we have with us Ankit. Try understanding this example. For example, we have Ankit. Ankit bought a house on 1st April 2002. For rupees 15 lakh, he bought the house. On 15th Jan 2010, he sold the house for 22 lakh. And sir, FMV of that house, yeah, NRV of that house was 20 lakh. Government saw this transaction. Government saw this transaction and charged Ankit higher of all the threes. Government charged 22 lakh rupees to tax under black money law. Sir, government charged to tax. Very sad for Ankit. Very sad for Ankit. Government charged Ankit to tax of rupees this much amount. Very bad. Very sad of you, Ankit. Very sad. Sir, what Ankit did, sir, whatever the sales price was deposited to bank account. For example, Ankit deposited this 22 lakh rupees. He had other deposits also. 13 lakh. He had other deposits also, sir, 25 lakh. Sir, he had other deposits also. All in all, sir, his deposits turn out to be, sir, 60 lakh. Assessing officer said, your deposits are 60 lakh rupees. I am going to tax this also. Sir, Ankit had taken 35 lakh rupees from these deposits and bought a house on 1st 4 2022. 35 lakh rupees, whose NRV today is, sir, 48 lakh rupees, whichever is higher. Department says you have a house, now we'll tax all that also. Do you think, sir, department is doing justice? Earlier he had 22 lakh rupees. 22 lakh is being charged. Sir, his bank account tallies to 60 lakh rupees. 60 lakh is being charged. Sir, he bought a house. Sir, 48 lakh rupees is being charged. Sir, don't you think there is injustice happening with Ankit? Don't you think there is happening an injustice with Ankit? Just think is, sir, whatever the 22 lakh rupees that you are trying to charge on the sale of this house, don't you think that this value is already included in bank account? Don't you think the value is already included in bank account? Provision says if the value of any of the prior sold asset is included in the bank account, sir, whatever the value is included, sir, you will not be charged to tax on that amount. Whatever the value that is included in the bank account, if any of the allowed charge, absolutely. See, if any of the asset is being sold prior to the date of transfer and value of such asset is being reflected in bank account, sir, you are not being charged. You will not be charged on that one. Whatever the value that is being added to the bank account, sir, you will not be charged. You will not be charged to tax, sir. But just to think of this, sir, out of the 60 lakh rupees of bank account, sir, 35 lakh rupees is the value that is already included in the house also now. That means out of this 48 lakh rupees house, 35 lakh rupees is the amount that has already been taxed in bank now. So provision says out of the bank account, if you are withdrawing certain sum for the house, so such amount of bank shall also not be charged, because ultimately value of such amount of bank has already been included in house now. This 35 lakh rupees, this 35 lakh rupees amount that has been taken from the bank, is included in the house now. So we'll not charge it to bank again. So bank will be 25 and the house will be 48, and this is how things will turn out to be. This is how things will turn out to be. That is how things have to be taken care of. Sir, we got this point. Sir, if any of the asset is transferred prior to that, if any of the asset is transferred prior to valuation date, then you have to check. If, sir, value of such asset is included in bank account, then do not tax on that. If value of such asset is included in bank account, and sir, if such bank account is also included in latter asset, then bank account shall also not be taxed. I hope you got the point, sir. I hope you got the point to the fullest. Sir, for example, if Rahul has any kind of partnership or interest in partnership firm, then what to do? If Rahul has an interest in partnership firm, then what to do? See, provision says, for example, if Rahul has capital contribution in any of the firm, there are three partners, ABC. Partner A has 20 lakh rupees capital contribution. Partner B has 25 lakh capital contribution. Partner C has 50 lakh capital contribution. All the three partners. No. Opposite you are saying, Ankit. Ankit, you are saying opposite. Whatever the value, see, ultimately value is in the house, so house will be charged to 48 lakh only, and bank will be charged 35 lakh only, 25 lakh only. This is how things will go. Why this is how? Because ultimately house is the final thing in which value is stored. So house will be taxed at 48 lakh rupees, and so out of the 60 lakh rupees, so 35 lakh rupees have already been included in the house now. So 25 lakh house will be charged. The bank will be charged. I hope you got the point. See, this 28 lakh will reduce us because the value of this is included in the bank now. So this will become zero. The value of this bank is included in the property now. So this shall also reduce. If value of bank account is included in the property, so value of bank account will reduce. See, this is an example I have written. You just read it down. You will understand. So it is not difficult at all. Sir, for example, I have a share in partnership firm. If I have a share in partnership firm, for example, A, B, and C. If I have share in partnership firm A, B, and C. A's capital contribution is 20 lakh rupees, B's capital contribution is 25 lakh rupees, C's capital contribution is 5 lakh rupees. Sir, what do I assume the value of my share? Sir, for example, I want to assume the value of A share. How do I assume the value? Sir, in this method, what you have to do, you have to find out the net assets of the firm. Net assets of the firm you have to identify. Sir, what is the fair market value of assets minus fair market value of liabilities? So this will give us net assets. Of this net assets, you have to distribute them in the ratio of their capital. First of all, sir, their capital is to be set off. See, for example, net assets is 80 crore, capital is to be distributed 50 crore, 50 lakh. Whatever 30 lakh remains, sir, that has to be distributed in the ratio given in question. Normally, it is dissolution ratio, and sir, if not given, sir, it is profit sharing ratio. This profit sharing ratio is to be distributed. So every partner would be entitled. Partner A would be entitled 30 lakh, partner B would be entitled 35 lakh, and partner C would be entitled 15 lakh. So what you have to do? Whenever any individual has a share in partnership firm in foreign firm, then sir, whatever his capital contribution is, take that, and whatever the amount remains, whatever the net assets remains after distributing the capital contribution, so that shall be distributed in dissolution ratio, or that shall be distributed in profit sharing ratio. Sir, whatever the ratio given in the question is, it is as good as profit split method that we had studied yesterday. Now that we had studied yesterday, transfer pricing profit split method, it is as good as that. Sir, with that we will be able to find the valuation of an assets. With that, we are able to find the valuation of the assets. Sir, with that, we are able to properly identify the valuation of the assets. Sir, but sometimes what happens is, sir, whatever the value of assets are being derived, for example, I have a house in Dubai. So valuation would be derived in dirhams. Now, it would not be in rupee. If I have received any house, if I have received any property in, say, United States. So whatever the value derived will be United States dollar, US dollar. If I have any property in Japan, sir, value derived will be Japanese yen. Sir, value derived will be in their respective currency now. So how would we tax it in India? Provision says we have to convert such currency in India. And sir, what conversion rate to be chosen? Provision says on 1st April, whatever the dollar rate, whatever the conversion rate has been given by the RBI, just to take that. For example, on 1st April, rupee per dollar is 80 rupees. So 80 rupees, with 80 rupees you have to convert the dollar. Sir, for rupee per Chinese yen, if you have rupees per Switzerland currency, you have rupees for Australian dollar, rupees for dirhams, or whatever the currencies, you have to use the reference rate of RBI as on the date of the valuation. So it might be possible that I have assets in Somalia, if I have assets in Nigeria, where RBI's reference rate is not directly available. For example, I have found a property in Nigeria whose value is Nigerian dollar rupees 10 lakh. So how do we convert in India? Provision says, first of all, convert that Nigerian currency into dollar on 1st April of the previous year, and that convert that dollar into rupees. Through that, you will be able to identify the value. Remember, whenever you find out any property, remember, this is the important point. Listen carefully. Whenever you find out any property whose fair market value you have derived, you have derived the fair market value. For example, you have found out the quoted shares, and out of these quoted shares, sir, say for example, value you had acquired this quoted shares for 5 lakh rupees, and NRV is 25 lakh rupees. Okay. Quoted shares you have acquired for 5 lakh rupees, NRV is 25 lakh rupees, whichever is higher, sir, you will be taxed at 25 lakh rupees. But sir, what if out of this 5 lakh of cost of acquisition, sir, 2.5 lakh was invested via white money, and sir, 2.5 lakh was invested via black money. Sir, out of this 5 lakh, 2.5 lakh was invested via white money and 2.5 lakh was invested via black money. Sir, what should be the amount that should be charged tax? What should be amount that should be charged tax? We should get certain deductions. Now, ultimately, sir, if we are buying property out of white money, sir, we should be getting certain deductions now. Provisions is you will get deduction. How much deduction you will get? Sir, whatever the white money you have invested. Or sir, but it's wrong now. Sir, out of the cost, 50% was our white money. So out of the total value, 50% shouldn't be taxed now. No, sir, no, this is not what they are saying. They are saying whatever the absolute white money you have invested, just reduce that. Whatever absolute white money you had investing, sir, just reduce that. This is a topic that has not been asked in exam. This can be asked in exam in MCQ. Believe me. Sir, whatever the white money that you have invested in absolute terms, that can be reduced. Sir, it is assumed that whatever the growth has been done is only on the black money. Sir, no growth has been seen on white money. Therefore, sir, if 50% of the money, that is 2.5 lakh rupees, have been invested for the white money and today's value is 25 lakh rupees, provision says you will only get deduction of 2.5 lakh. In case of, sir, any asset, this is how things go. But sir, in case of immovable property, you will get a proportionate rise in cost of acquisition. How it says, for example, you acquired property of rupees 1 crore. Of this 1 crore, sir, 20 lakh was white money, or sir, 80 lakh was black money. This 1 crore became 10 crore today. So I will not get deduction of just 20 lakh, rather 20%, rather 2 crore I will get deduction. So if this 1 crore became 10 crore, so this 20 lakh would become 2 crore. So I will get deduction of proportionate amount. So whenever I am buying any property, whenever buying any asset, so some portion is from white money, some portion is from black money. Provision says whatever the portion of white money is, you will get deduction. So but white money never increases. Whatever the money that you have invested in the form of through banking channel, same shall be reduced. No appreciation on white money is allowed. But sir, if you are buying any property, so corresponding appreciation on white money is allowed. Sir, whenever you are computing income under black money law, sir, always remember no deduction of any expenditure is allowed. Sir, what is the scope of total income? See, whenever income from outside India is not, whenever income is not disclosed in ROI, if income is not if income tax return is not filed ROI, or sir, asset is located outside India, that shall be included in the scope of black money law. See, if you have asset outside India that have not been disclosed in income tax return, sir, if it was disclosed, you did not file the return, sir, these incomes are included. Sir, if you have already declared this income under Income Tax Act, or if you have already declared this income under black money law, then it is not called undisclosed assets. Penalties, sir, whenever you have undisclosed foreign asset, or sir, undisclosed foreign income, sir, you are being charged 30% tax on that, and whatever taxes you pay, sir, 3x the penalty, sir, 3x the penalty. That means sir, 90% of the assets value is being charged to penalty. So 30% tax, 90% penalty. Oh my god, sir, or I should say 30% tax plus, sir, 3x of the taxes penalty. Remember, sir, whenever we refer to tax in black money law, sir, no surcharge is added to it. No education cess is added to it, sir. No interest is being charged, nothing, sir. It is flat tax at the rate of 30%. Sir, if you did not furnish return relating to forex assets, sir, in that case, 10 lakh rupees is the penalty to be charged. Sir, if you furnish the return inaccurately, sir, in that case, 10 lakh penalty to be charged. Provision says if your foreign bank account is up to 5 lakh rupees, then in that case, penalty will not be charged. If you default in paying the taxes, in that case, 100% of the taxes, you will be charged penalty. So if you fail to answer any of the question laid down by the income tax authorities, or if you non-comply with the summons or produce books of accounts, then penalty from 50,000 rupees to 2 lakh rupees will be charged to you. Also, sir, there is a point, sir. So this is an amendment, very important amendment for all of you. Very, very, very important amendment for all of you. Sir, what it says, sir, if you have any of the assets, Up to 20 lakh rupees outside India. If you have undisclosed foreign assets up to 20 lakh rupees outside India, sir, this shall not be leviable to penalty, no penalty. So many times what happens is that people in India get ESOPs for example, if person was outside India, for example, if person was a US resident, he was working in Microsoft, he was working in Google, he stayed in America, he got ESOPs of Google. He came to India and did not declare any asset of that. So should that income be taxed? Right answer is sir, it should be taxed, but sir, no penalty will be charged. No penalty will be charged, sir, if any of the asset has been acquired, sir, or if any of the undisclosed foreign asset is being found, sir, no penalty is being charged if the value of assets is up to 20 lakh rupees. If the value of the asset is up to 20 lakh rupees, sir, no penalty will be charged. Sir, remember one important thing. So this provision is not applicable to immovable property. If you have any kind of immovable property now, and that is undisclosed, even that property is of 1 rupee, sir, you have to disclose. If you did not disclose, sir, you will be charged penalty. This provision is only applicable for the other assets. So for example, you have shares, you have jewelry, you have bullion, you have any other assets that can be up to 20 lakhs, and no penalty will be charged. But if you have any kind of immovable property, that should be declared, otherwise the penalty will be charged to the fullest. Penalty will be charged to the fullest. For immovable property, zero limit, you have to declare. For other assets, up to 20 lakh you can declare. Up to 20 lakhs are exempt. If you did not declare, so no penalty on that. Important segment, important. Come on to question answers of black money law. Sir, what does it say? Mr. Deepak, age 45, has settled in California, USA since 2015. Prior to that, he has always acquired residential house property in California. In 2009, see, he settled in California in 2015. Prior to that, he has always been in India. He acquired a property in India at 20,000 rupees US dollar. He kept at a bank account. Acha, he had 10,000 rupees bank account in US dollar. Okay. When he was resident, he acquired the house property and he acquired the bank account. Notice under Black Money Law and Imposition Act 2015 was issued on 2024. The fair market value of the residential property as on 1st April 2024 was 24,000. This property's value rose up to 25,000. So that shall be considered. And sir, value as on 1st April 2021 shall only be considered. So if you consider, sir, 25,000 into 71 will give us the value of the property. Apart from that, sir, what it says? Apart from that, what it says? Sir, bank account along with interest is 12,000. This 10,000 has been shot up to 12,500. Sir, we just want the value as on 1st April 2024. Valuation date is on 1st April 2024 only. Valuation date is that only. Sir, valuation has to be okay. Sir, what it asks, compute the value of undisclosed foreign asset. Sir, this 10,000 is the total thing. This 10,000 is the total bank account value. Interest charged on it is 2,500. Interest charged on it is 2,500. Can I simply say that asset is 10,000 rupees, that shall be converted to 71, and 2,500 is the income, and that shall be charged in the year in which it was accumulated? That is what it has been interpreted in this answer. Sir, whatever the asset is, the asset shall be taken in this year. Whatever the income that has been earned, that shall be taken in that year only. Sir, we got this one. This is a beautiful, beautiful question. This is a beautiful, beautiful question. Question number 86. Try solving it along with me. Mr. Rohit is an Indian citizen returned to India in March 2013. Is an Indian citizen returned to India on March 2013. You assume the role of CEO at ABC Private Bank, an Indian company. Okay. He came to India on, sir, March 2013. He served from 1st April 2020, 1st April 2023, 2013 to 31st March 2020. He served as CEO in India. Prior to that, from May 2002 2013, he was working in Red Chillies. From May 2000, he was in USA, and this is the period where he was in India. And again, he went to USA after 31st March. He went to USA after 31st March and permanently settled therein. Rohit visits India every year only for 1 month. So that means he is non-resident. He found it was found that when he was CEO, he accumulated certain wealth. Oh, this is USA. This is India. Now, sir, we have to check whether he is resident or not. First of all, sir, assessing officer finds out income on 1st April 2024. Sir, whether he is resident, right answer is non-resident. The year in which assessing officer finds out it is in that year he is non-resident. Only thing we have to check is, so the year in which asset was acquired. If he shall become resident, then things are to be considered. Otherwise, such things are not to be considered. Sir, he acquired shares of listed company in USA on 10th April 2012. 10th December 2012. So 10th December 2012. These assets were acquired when he was resident of USA. Therefore, this shall not be considered under black money law. Only that asset shall be considered which were acquired when he was resident. He was non-resident at the time of acquiring such shares, so that cannot be considered for black money law. Acquired one apartment in London on 20th April 2015. So when he was resident, he acquired London, so that can be covered under black money law. But sir, okay, that can be considered. He established a leather manufacturing unit in Malaysia on 15th Feb. So as soon as he stayed outside India, sir, he became resident for that year. See, he became non-resident for that year. Sir, he started a business. Sir, he is non-resident in the previous year in which AO finds out the income. He is non-resident in the year in which sir asset was acquired. In both the years, if he becomes non-resident, sir, black money proceedings cannot be started in that year. He also earned income by taking commission from various buyers located outside India during the previous year 2013 to 20. Okay. He has been commissioned. The undisclosed foreign asset came to assessing officer in April. He issued notice in July. Okay, sir. Can assessing officer issue? See, for this shares he cannot. For the shares he cannot. For the shares he cannot. For apartment he can. For leather manufacturing unit he cannot. For commission, sir, commission. For that matter, I must tell you, sir, black money law came into picture. Black money law came into picture from previous year 15-16. Black money law came into picture from previous year 15-16. Any income earned prior to that cannot be taxed now. Ultimately, sir, if black money law was not there, and income can be taxed only in the year in which you have earned. So if you have earned it prior to 15-16, it cannot be taxed. Any income that is earned prior to 15-16 cannot be taxed. Any asset acquired prior to 15-16 can be taxed because it is taxed in the year in which AO notices. Income is taxed in respective year, but asset is taxed in the year in which AO notices. Now, so income can be only taxed if it is after 1st April 2015. Asset can be taxed any old. Sir, set off and carry forward. Sir, is this really important chapter? Are Baba, questions have been asked from this chapter that you cannot even think of. Such questions have been asked from this topic that you cannot even think of. Any doubt to anybody? Any doubt to anybody? Any doubt to anybody? No doubt. No doubt whatsoever. Sir, there are certain areas in this chapter that you must understand that we will study. Only the limited portion of this chapter I am going to tell, not entire chapter I have to tell you. Only limited portion of this chapter to be taught that is being asked in exams frequently. So try understanding that topic. So first of all, losses first of all have to be set off and then only they have to be carried forward. You cannot think of carrying forward losses before setting off. So always they have to be set off. Whenever the set off is done, sir, always entire adjustment is done first. That means loss from one source is to be set off against the income of the same source under the same head. For example, I have garment business, I have footwear business. If I have profit in footwear and loss in garment, this loss has to be set off. This will be set off intra-head only. So normally intra-adjustment is done. But there are 4 or 5 instances where you cannot do intra-head adjustment. There are 4 to 5 departments, 4 to 5 areas where you cannot do intra-head adjustment. Sir, what it says? Sir, loss from one source can be set off against another source in the same head. Sir, for example, loss from capital, sorry, exception. There are certain exceptions. Loss from capital gain losses can be set off against capital gain income only. Capital losses can be set off against long-term capital losses can be set off against long-term capital gain income only. So if you have horse racing loss, then that can be set off against horse racing income only. So if you have speculative loss, then that can be set off against speculative income only. So if you have a specified business loss, that can be set off against specified business only. So if you have online gaming loss, sir, that can be only used for internal set-offs, sir. It can never be used to set off against any current. See, for example, if you have online gaming, you have loss somewhere, you have profit somewhere, sir. Only net taxes you are being charged, net income you are being charged. So except for these exceptions, sir, all other entire adjustment is allowed. All other entire adjustments are allowed to you. Then after entire adjustment is done, sir, we come with inter adjustment. We are supposed to do inter adjustment. In this inter adjustment, sir, what we have to do? Sir, we have to set off loss from one head to another head. Sir, normally any head is set off, any head set off is allowed except for these 7. Sir, any long-term capital loss can be set off against only long-term capital gain. See, if inter-adjustment they are not allowing, do you think that they are going to allow inter-adjustment? So no inter-adjustment is allowed in this case. Sir, horse racing loss can be set off against only horse racing income. Sir, got it. Speculative business loss can be used against speculative business income only. Specified business loss can be used for specified business only. Sir, short-term capital loss can be set off against short-term capital gain only or long-term capital gain. Sir, PGP loss cannot be used against salary head. And sir, last we have, sir, if you are opting for old tax regime, then loss from house property can be set off against other heads up to 2 lakh rupees only. Loss from house property can be set off against other heads up to 2 lakh rupees only. But sir, if we are opting for new tax regime, then loss from house property cannot be set off against other head of income. If we are opting for new tax regime, then house property losses cannot be set off against any other head of income. They cannot be carried forward also in new tax regime, remember. Sir, whenever we do class set off and carry forward, first of all, we do inter-adjustment, then we have inter-adjustment, then we carry forward. IFOS losses cannot be carried forward. House property losses cannot be carried forward, new tax regime. And sir, brought forward unabsorbed depreciation. Unabsorbed depreciation can be carried forward infinitely. So remember, there is a catch. Whenever we have, sir, any losses which are carried forward, any losses which are being carried forward. Sir, in the previous year of incurring such losses, sir, such losses can be set off at interhead also. For example, business loss can be set off against IFOS income. Business loss can be set off against capital gain income. Sir, any income you can set off except for salary. Sir, you can do inter-adjustments or losses. You can do. But once that losses is carried forward for next year, once such loss is carried forward for next year, remember, sir, you cannot set off such losses with any other head. Only intra-head adjustment is allowed once losses are carried forward. Remember, sir, this is an area where examiner asks you in MCQs. Sir, whenever a loss is being carried forward, so it cannot be done intra-head adjustment cannot be done. Only intra-head adjustment is allowed. For on a brought forward losses, no inter adjustment is allowed. Only inter adjustment is allowed. Only within the same head you can set off. Once a business loss has been brought forward from last year, so you can set off this business loss against only business income. No other income is allowed. No other income is allowed to set off. Sir, what is the time limit for which we can carry forward? Do we need to file ROI on time for that matter? Sir, if you want to carry forward house property losses, sir, you can carry forward for 8 years. Sir, ROI on time is not required. You can even delay your ROI for that matter. Business loss can be carried forward for 8 years. Remember, sir, ROI on time is mandatory. Speculative losses can be carried forward for 4 years. Sir, ROI on time is mandatory. Sir, specified business loss can be carried forward for indefinite periods. Sir, ROI on time is mandatory. Capital gain losses can be carried forward for 8 years. Sir, ROI on time is mandatory. Losses from owning and maintenance of horse races is mandatory. Sir, for 4 years you can carry forward. ROI on time is mandatory. Unabsorbed depreciation can be carry forward for unlimited period of time. ROI on time is not mandatory. So this is the gist. Normally you are allowed to carry forward for 8 years and ROI on time is mandatory. But there are two instances where 4 years is considered. Sir, horse races and speculative income is the area where you have to take 4 years. Where, sir, in case of specified business or in case of unabsorbed depreciation, you can carry forward for indefinite period. And sir, in two cases, sir, ROI on time is not required. Sir, unabsorbed depreciation in house property. This is how you have to understand the carry forward of depreciation. Sir, other pointers. Sir, if income is exempt, then losses shall not be carried forward. Sir, if we have any income from these four heads, sir, no loss can be set off against this income. No loss can be set off against this income. Sir, if we have casual income, no loss is allowed against it. If we have online gaming income, sir, no losses, even income from the same head is even not allowed, sir, even from the same head. Mayank Raj, he is the best guys. Thank you so much, Mayank. See, Mayank was one of our oldest student. Thank you so much, Mayank, for your kind words. Because of him, I was able to clear second group in just 20 days. Thank you so much, Mayank. Sir, there are four incomes. There are four incomes against which any loss is not allowed. Sir, if you have any undisclosed income that we studied in a cash rate income, we studied sir other incomes. We studied incomes like unexplained investments. So against such incomes, no loss is allowed. Sir, if we have any kind of virtual digital assets, sir, against these incomes, no losses are allowed. Sir, we have three kinds of losses which can neither be carried forward, which can neither be set off against any income. Sir, first of all is any kind of lottery income. If you have any lottery income, if you have any kind of losses on such lottery income, it cannot be carried forward, it cannot be set off against any other head. Sir, if you have losses on account of virtual digital assets, sir, it cannot be carried forward, it cannot be set off against any other head. If you have losses from exempt income, sir, you cannot carry forward nor set off. Sir, if you have losses from online gaming, you cannot carry forward, you cannot set off such losses. Sir, if you have any kind of IFOS losses, it cannot be carried forward. So this was the topic that we had studied in CA Inter also. Sir, this was important, but sir, what I am telling you now is more important and which is being tested in exam. Whenever there happens to be an amalgamation, sir, for example, Rahul merges with Rahul Pinky Private Limited. Rahul merges with Pinky and becomes Rahul Pinky Rapi. They become Rapi. Provision says whatever the losses of Rahul were, sir, shall be carried forward by Rapi for 8 previous years, sir, 8 fresh years. Remember, whenever there happens to be an amalgamation, sir, carry forward of losses shall be given for 8 fresh 8 years. So in case of conversion, for example, if proprietorship converts from proprietorship to company, if unlisted company converts into LLP, in that case, sir, fresh 8 years are given. But sir, in case of demerger, remaining of the period is given. Sir, for example, Reliance was a company and from Reliance Geo Financial Services demerged. So whatever the losses that Reliance has incurred, sir, remaining period only shall be given to Geo Financial Services. No fresh 8 years are given. See, normally fresh 8 years are given, but sir, for other entities, 0 year is given. For normally fresh 8 years are given, but for demerger, sir, remaining of the period is given. Remember, very important point, sir. Sir, whenever there happens to be a amalgamation, a demerger, sir, only business loss are carried forward. You might be having capital gain losses, they cannot be carried forward. You might be having any kind of other losses like horse racing losses that cannot be carried forward. You might be having house property losses that cannot be carried forward. Only losses that can be carried forward in case of amalgamation are business loss, and that too, you cannot carry forward the speculative business losses. You cannot carry forward the speculative business losses. Remember, you cannot carry forward. People will try to confuse you. Examiner will try to give speculative business loss. You have to ignore it. Also, sir, unabsorbed depreciation can be carried forward for unlimited period. So in case of demerger, for example, Reliance Geo Financial Services demerges from Reliance. In that case, only a proportionate portion shall become taxable. For example, Reliance had net assets of 1,000 crore. Out of that, 100 crore came to Geo. So only 10% would be loss given to Geo. Section 72 not relevant, not relevant, not relevant. Deemed income. Section 79 is important. What it says, sir, whenever you have, for instance, try understanding this provision. It is technical a bit. Sir, whenever you incur loss in that year, whatever shareholding you have as on 31st March, whenever you incur loss, whatever shareholding you have as on 31st March, at least 51% of the shareholding shall remain same in the year in which you want to set off the losses. What I am saying is try understanding it. Sir, if you have incurred losses in any of the year, sir, you can set off such losses only if, sir, 51% of the shareholding remains same in the year in which you want to set off the losses. 50%, 51% of the shareholding shall remain same. Sir, for example, here we have Mr. XYZ holding 100% shareholding as on 31st March 2024. Case 1, sir, case 1. Mr. X still holds, Mr. Y still holds, Mr. Z sold 30% of the shareholding to Mr. A. In that case, sir, they can they set off losses? Right answer is yes, they can set off losses. But sir, assume case 2. Mr. X had sold their shares, remaining only 8%. 26% it had sold. Mr. Y had also sold 28%. Mr. Z had also sold 20%. All in all, 74% of the shares by the existing shareholders are being sold. In that case, the losses of this year cannot be set off against the losses of this year. 51% shareholding has to be remain same, as compared to year of losses and year of set off. 51% shareholding has to remain same. This provision is applicable to closely held companies. Closely held companies implies an unlisted company. If you have unlisted company given in question, this provision shall apply. This provision shall apply only to brought forward losses, not in case of unabsorbed depreciation. In exam, examiner might give you certain things to confuse you. He might give you certain things to confuse you. What things he can give? For example, he might give you, for example, it is a listed company. He might give you unabsorbed depreciation, you just have to ignore that. Sir, whatever the losses are, the year in which losses are incurred, you have to check the period of shareholding. And sir, whatever the year in which you want to set off, you have to check the shareholding. Sir, many a times a point is given in question. Sir, A is the shareholder. He held shares from 10 years and now he sold 70% of the shareholding. He was a 70% shareholder. He sold all of his shares. In that case, you will not be allowed to set off the losses. That is what they imply. Sir, this provision is applicable for closely held companies. Sir, there is another exception to this. Sir, exception is eligible startups. If you have eligible startups, then sir, 51% shareholding criteria is not to be fulfilled. Sir, the year in which you are incurring the losses and the year in which you are setting off the losses, sir, 51% shareholding criteria is not to be fulfilled. So only criteria is to be fulfilled. Whatever the shareholders were, whatever the shareholders were in the year of loss, so that shareholders shall remain that shareholders shall remain shareholders in the year in which they want to set off. Percentage becomes irrelevant. So shareholders become relevant. If there were 5 shareholders, A, B, C, D, E, those 5 shareholders shall remain shareholders in the year of set off. So even though they have only 1 shares left, so those 5 shareholders shall become shareholders. So for example, in this case, 34, 36, and 30% were the shares held by XYZ. They have sold certain shares, they have sold certain shares, they have sold certain shares, but all the 3 shareholders are shareholders. Now, in second case, in that case, this company would be allowed to set off losses if this company would have been an eligible startup under Section 80 IAC. Sir, they would have been allowed reduction. Sir, are we clear on this front? Yes, sir, we are absolutely clear. This provision is only applicable to losses and not to unabsorbed depreciation. Sir, in case of succession, what happens? Sir, normally if any of the person, if any proprietor is there, he dies, his share of losses cannot be carried forward if business closes. But sir, if his legal hire continues the business, in that case, legal hire can carry forward the losses. Sir, if we have a partnership firm, if there is a partnership firm and any of the partner retires for some reasons, partnership firm, out of the partnership firm, any of the partners retire, provision says retired partner losses cannot be carried forward by the firm. Whatever the share of retired partners cannot be carried forward by the firm. If partner dies, sir, his share shall also not be allowed. But if partner dies, his legal hire continue, then his share can be carried forward by the firm. Any losses against undisclosed income is not allowed. Any losses shall not be allowed against the income which is taxable under 133A survey or taxable under 132 search. Sir, come on to chapters deduction. Last second topic of the day. Sir, deductions is a big chapter. Honestly, it's a big chapter, but here you have to do certain selective studies. Sir, whatever I tell you is only relevant. Please try to focus the study on this chapter. This is not the chapter where you should be giving too much of your time. Try understanding, sir. See, what happens is you have 2 questions in which deductions can be tested. First question can be PGBP, in which you are being asked the total income of a company. So you should be aware of the deductions that are relevant for company. That is the first thing. Second thing that you should be aware is, so deductions asked in DGAA. So as per DGAA, what deductions can be asked? See, if you analyze the pattern, now you are being asked a question in case of new tax regime. So you need to understand deductions are not relevant as of now. And most of the old deductions are not relevant. So you just have to understand the deductions only up to a certain limit, not to the benefit, because this will take your time and will not fetch you any extra marks. Sir, deductions cannot exceed GTI. Absolutely correct, Ankit. Only 2 questions that we have. DDAA we have PGP. Only in these 2 questions we are being asked deductions. So deductions cannot exceed GTI and cannot be carried forward. Sir, no chapter 6A deduction is available under against any specially taxed income. Any income which is taxed at special rates. Any income that is being taxed at the special rates, sir, against which deductions are not allowed. Against such income, deductions are not allowed, sir, not allowed at all. Sir, 80 DD, 80 DDB, 80 U, 80 RRB, 80 QQB, 80 TTB. These are 6 sections which are allowed only to resident individual. Rest all deductions are allowed to resident and non-resident both. Only these 6 deductions are there which are allowed to resident. Rest all are allowed to resident, non-resident both. Sir, instead of copying this, I want you all to copy one thing. A humble request. Try writing it down. Try taking a screenshot. Have a quick screenshot of this PDF. Have a quick screenshot of this PDF, dear. Try having a quick screenshot of this PDF, so this will help you out. Have a quick screenshot of this PDF. Sir, taken. Even if you are being asked any question in DGAA, examiner may try to fool you, may try to confuse you, sir, you will be able to answer with this table. Sir, done? Okay, sir, done. Absolutely done. If you want to take a screenshot of this also, this is also done. Huh? This is also good. If you want a screenshot of this, you can take screenshot of this also. It will also help you out. If you want a screenshot of this, you can take screenshot of this also. This will also help you out a lot. Okay, sir. Done. Done, 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 done. Sir, 80C, 1.5 lakh deduction would be allowed. Sir, individual, spouse. See, do you think that government is going to incentivize you for buying LIC for your parents? Sir, for your parents, you should buy medical insurance, not life insurance. So government is never going to incentivize parents under 80C. No parents are covered under 80C. Sir, you might have life insurance, you might have multiple things. I'm not going to get into details of that. Important section. 80CCD2, 80CCD2. This has not been asked in DTAA. If asked, it will confuse you. It is going to be difficult to answer. Sir, 80CCD2 is important. Sir, whenever employer contribute to NPS for employee, whenever employer contribute to NPS of the employee, first it shall become taxable in the hands of the employee. First, it shall become taxable, and then employee is allowed deduction based on the regime he opts. If he opts regime under section 115 BAC, he is allowed employer contribution or 14% of the salary, whichever is lower. But he opts for old tax regime, in that case 10% of the salary or actual contribution, whichever is lower to allowed. But if he is a government employee, then in that case 14% of the salary shall be allowed to him. So in old regime also. This is important. Why? Because this is the first reduction that you are going to get in both the regimes, even in new, even in old. Sir, other than that, we have 80CCH. Again, it is a bit important. Why? Sir, it is important because sir, it is also allowed in new tax regime. If you are any of the Agniveer who participates in Agniveer Corpus Fund, in that case, sir, 100% of the contribution that you make to the Agniveer Corpus is allowed to you as deduction. Along with that, whatever the contribution that government makes on your account to Agniveer Corpus, sir, provision says that shall first taxable in your hands, and you will get deduction under 80CCH2. You will get deduction under that section. Also remember, sir, you have to contribute 30% of your salary to the Agniveer Corpus, and similarly, government will contribute the similar amount. Sir, similar 30% government is going to contribute. Whatever the money received on account of Agniveer Corpus is exempt, sir. You don't need to study anything else. So 80D is allowed on parents, but it is not allowed to dependent children. So 80D is not allowed on it is not allowed on children. 80D, I don't want to stretch it much because it is not the thing that is going to be asked. 80D deduction allowed is 25,000. Sir, if you and your parents, if you are senior citizen plus 60 years of age, in that case 50,000 deduction would be allowed. Sir, if you also have parents, then 25,000 deduction on them also will be allowed. Sir, 50,000 deduction would be allowed if any of the parents is senior citizen plus resident. Sir, 80D, you are aware, I don't need to stress that. 80DDB you can ignore, 80U you can ignore, sir. 80E you can ignore, 80EE you can ignore बिल्कुल blindly, बिल्कुल completely blindly. 80EEB you can ignore. So 80G, very less likely to be asked. Sir, if you donate to any kind of charitable trust, sir, 50% deduction is allowed. So 50% up to what? Provision says 10% of ATI. 10% of ATI you have to take. You have to take eligible donation, whichever is lower. Whatever lower turns out to be, take 50%. So this is also not the thing that has been ever asked in exam. So you just have to find out the 10% of ATI or eligible donation, whichever is lower. Sir, whatever the donation turns out to be, take 50% of that. You will be given deduction of that. Sir, 80GG is not the area that is going to be asked. 80GG is not the area. So 80GGB and GGC are important, sir. Why they are important? Because whenever you donate to a political party, you are being allowed 100% reduction on that. And you being a company, if donating in or if paying for expenditure, if you are doing any expenditure by an Indian company for advertisement in souvenir, brochure, pamphlet, newspaper by in the newspaper of a political party, in that case, sir, you are given 100% deduction on such expenditure. whatever. Sir, not deduction of expenditure. Whenever you are a company, you are spending any sum in advertisement of political parties, newspaper, brochure, pamphlet or souvenir. So deduction is disallowed 100%, but you are given deduction under section 80 GG. Deduction is disallowed in PGBP, but you are given deduction under 80 GGB. For other person, if they want to donate to political party, they are allowed 100% deduction, sir. But if they want to spend any expenditure on political parties advertisement, sir, no deduction is allowed to them. So income based deductions, sir, we need to be very careful. Whatever the income based deductions are, sir, 80 IA to 80 RRB, so these are to be separately calculated. Sir, books of accounts are separately maintained for these deductions. Sir, ROI must mandatorily be filed before 139(1) due date. Sir, on these income-based deduction, sir, these income-based deduction shall not be allowed if you are claiming 35 AD or 10 AA on the similar business. Sir, important point. If any income is increased, then you will get additional deduction on these sections. Important of all, 80 double J double A, 80 double J double A, 80 double J double A. What does it says? What does it say, sir? 80 double J double A simply says if you are a person who hires new employees for your business. Any person who is liable for tax audit employs new employees for his business. Sir, whatever the additional employees that he is recruiting, sir, he shall be allowed 30% of additional cost on such employees. For example, he had 100 employees, he hired 50, sir, 70 resigned. Sir, at the end of the day, he has 80 employees. Provision says no deduction would be allowed. Sir, for example, he had 100 employees. So at the end of the day, they had 150. Sir, 50 are the new additional employees. Sir, whatever the salary expenditure on these employees are, sir, 30% will be allowed. So this expenditure is available for 3 years. So 3 years does not imply, sir, whatever employee we are hiring, we will be given 30% deduction on that employee for 3 years. No. Sir, we will be given deduction for whatever the new employees we hire every year. This year we are hiring 500 new employees. We will be given deduction on 500 on this year. If next year, sir, whatever employees we are hiring, we will be given deduction on that. After to that year, sir, whatever the employees we hire, we get deduction on that. Sir, whatever the new employees we hire every year, we get deduction on that for first year. Whatever the employees we hire, we get deduction on that for the first year. Not every year we get deduction on those employees. We get deduction only once. We get deduction only once on those employees. Sir, employee salary must be paid. Employee's deduction on which you want to claim. Deduction on whose salary you want to claim. Remember, such employee shall be paid salary only via account paycheck demand of electronic clearing system. Sir, what happens is they do a trick. Examiner do a trick. Sir, they say that you have employed 200 employees. Their salary is 20,000 rupees. And out of this 200 employees, 10 employees are there whose salary have been paid in cash. Sir, remember there will be two adjustments done. First of all, you will not be allowed deduction on these 10 employees. Along with that, sir, you have to disallow the salary expenditure while computing the PGBP. Sir, don't forget that. Okay, sir, we got that point. Other than that, sir, whenever you want deduction on an employee, sir, he should fulfill the 4 conditions. First of all, salary of such employee shall not exceed 25,000. That means salary paid to him should be up to 25,000. Second thing, such employee shall contribute to RPF. Sorry. He shall participate in RPF. Third thing, sir, he shall be employed for at least 240 days. He shall be employed for 240 days. But sir, if you are doing any leather business, you are doing any apparel business, if you are doing any kind of footwear business, in that case, even if you are employing him for 150 days, sir, that is allowed. Fourth case, sir, his share of NPS shall not be paid by the government. His share of provident fund, his share of pension fund shall not be paid by the government. So if all the conditions are fulfilled, then he shall be eligible for deduction. His share of salary shall be eligible for deduction. Sir, what happens is sometimes what happens is we employ for less than 240 days. If I want to hire certain employees on 1st Jan, so sir, it is for sure now. If I hire him today, I will not get any deduction because he is hired for less than 240 days. If I hire any employee in this year, if I hire any employee for this year on 1st Jan, he will be staying in our business for just 90 days now. So I might not get deduction on such employee. Provision says if you hire any employee for less than 240 days or less than 150 days, but he continues to remain in employment next year also, he shall be assumed to have been employed in next year only. You will get deduction on such employee in next year only. Sir, we got the point. 80 IAC. So eligible startup not relevant. Sir, I don't think eligible startup has been ever asked. Sir, I don't think that is going to be asked. Sir, just remember if you are eligible startup, sir, whose turnover has been up to 100 crore since the date of incorporation, sir, you can get 100% profit deduction in any of the 3 years out of the first 10 consecutive years. 80 IBA. Sir, only one thing is being repeatedly asked from this topic. One thing is being repeatedly asked, sir, if you have any rental housing project that has been started, sir, before 31st March 2022, any rental housing project that has been started prior to 31st March 2022, and that should be completed within 5 years, you are allowed deduction on such rental housing project. Remember, sir, whatever the rental housing project you do, you are allowed deduction only on the work that you initiate and complete. If you take any of the work as works contractor, then deduction is not allowed. Deduction is not allowed. For example, if land has been owned by Ankit, I just do the construction work, selling work, marketing work, whatever the work is done by Ankit. Provision says I will not get any deduction on this. I have to own the land, I have to do the construction, I have to find the buyer, I have to get their property registered. So then only I will be allowed deduction. Otherwise, I will not be allowed deduction if I am doing work as mere worker contractor. So I have to undertake the entire project. So 80 IA to 80 IE. Sir, these 5 sections constitute, sir, all the big businesses on which 100% was deduction was allowed, sir, prior to 31st March 2017. Any business started 31st March 2017 or prior, sir, was allowed this deduction. Right now, we don't have any such businesses. Sir, very, very, very important section, sir, very important section, that is 80 LA. Very important section 80 LA, sir. Why it is important? Sir, offshore banking unit, sir, SZ, sir, irrelevant thing. Important is IFSC unit. If any of the unit is located in IFSC, sir, if it is opting, if that unit is opting for old tax regime or new tax regime, sir, in whatever case, sir, if it is company, sir, regular regime, 115 BA, BAB, sir, whatever regime it is opting, sir, it is allowed deduction at the rate of 100% for first 10 years, for any 10 years out of the first 15 years. Out of the first 15 years, it can choose years and claim deduction at the rate of 100% on business income, of course. Sir, any income on account of aircraft also is eligible for exemption. 100% is deduction is allowed out of the first 15 years. Sir, project must have been approved by IFSC authority and CA certificate in Form 10 CCF has to be furnished before ROI. Sir, I want to take you through the more detailing about IFSC, the state TLA. I want to take you through. Assessee opting for IFSC. Sir, if he is opting for regular regime, so 80 LA is allowed. Assessee opting for 115 BA, BAB, BAC, BAD. Sir, for 115 BAB and BA IFSC, this ATL is not available because IFSC is meant for service sector. So if anybody is doing manufacturing and IFSC, he shall not be allowed ATLA. Okay. So, sir, eligible business are ATLA. Sir, whatever regime you opt, sir, you can opt for ATLA. Yes, sir. 100% deduction would be given. Yes, sir, 100%. Sir, if you are opting under regular regime and adopting ATLA, sir, you have to comply with MAT and AMT at the rate of 9%. Sir, if you are under new tax regime, sir, you don't have to comply with MAT and AMT under any regime. This has to be taken care. Any other thing that need to be studied, sir? No, nothing else. Sir, very important section 80M, very important section and 80M. First of all, whenever you earn dividend, on that dividend, sir, you are allowed deduction at the rate of 20%. Whatever dividend you earn, you are allowed deduction at the rate of 20%. So 20% on whatever the interest that you have paid to earn the dividend. First thing, you are allowed interest expenditure on the dividend earned. Whatever the dividend you earn, you are allowed an interest deduction at the rate of 20% on such dividend. You are being allowed. Okay, I see. Sir, but you are never allowed interest expenditure on the dividend that is referred under section 222F. If you are having any kind of dividend in the form of buyback, sir, no interest deduction is allowed on that. Yes, sir, we got that point. We got that point. We got that point. We got that point. Sir, as soon as dividend is reduced, interest is reduced from dividend, whatever the income turns out to be will become our net income. So that shall be considered as dividend received. Sir, whatever the dividend we received, sir, whatever dividend we received, sir, take that. So dividend received on account of sir foreign company, business trust. Sir, deemed dividend, whatever dividend we receive, sir, take the dividend received, or sir, take dividend paid. Whatever dividend you have paid up to the due date of ROI, 1 month prior to due date of ROI, whatever you have paid, sir, whichever is lower shall be allowed as 80M deduction to you, and it shall be allowed in all the regimes. Even if you are paying old tax regime, you will be allowed. Even if you are paying under new tax regime, you will be allowed. Sir, understanding this for an example. With an example, sir, for example, this is Rahul. Rahul Private Limited. Sir, it earned final dividend of 1 lakh. It earned interim dividend of 1 lakh. It earned buyback dividend. It earned buyback dividend of 2 lakh rupees. It earned business trust 1 lakh. It earned dividend from foreign company 1 lakh. That means all in all, he earned a dividend of rupees 6 lakh rupees. 6 lakh would become IOF first. Okay, sir, we got that point. Sir, he has paid 1.5 lakh rupees to earn that dividend. He has paid 1.5 lakh rupees to earn the dividend. Sir, how much section 57 deduction would be allowed? Sir, how much 57 deduction would be allowed? Sir, 20% of the dividend received. 20% of the dividend received. So dividend received will not be 20% for the purpose of deduction. Sir, sorry, 66 lakh. Dividend received would be 4 lakh because 22F we are not allowed any deduction. For 222F, we are not allowed any deduction. So for that matter, the dividend received for the purpose of deduction would be 4 lakh only. So we will be allowed only 80,000 as deduction. So our actual dividend received would turn out to be 5.2. Our actual dividend received would turn out to be 5.2. Sir, whenever this 5.2 lakh dividend is received, sir, we have to take this dividend as whenever we are comparing the 80M. Whenever we are calculating 80M, sir, whatever the dividend receipt has been taken, whatever the dividend received that has been taken towards the net of interest, whatever dividend received have been taken, so that shall be considered for the purpose of 80M. Whatever the dividend that they have paid shall be considered, and this will give us 80M deduction. Are we clear on this front? Are we clear on this front? Are we clear on this front? Let me draw an example for you. For example, I have 4 lakh dividend plus 2 lakh deemed dividend under section 222F. I have paid interest 1.5 lakh. I have paid dividend 4.9 lakh. How much will be allowed to me? How much will be allowed to me? Let me show you how calculation is done. Sir, first of all, received portion is 6 lakh. Section 57 would be allowed 20% off 6 lakh. But sir, on deemed dividend portion, that is 222F, we are not allowed any deduction. That means 20% of 4 lakh would be 20% of 4 lakh would be 80,000. This would give 5.2 lakh. This will be IFOS income. Sir, whenever we will consider 80M, whatever the IFOS income is, net of interest, we will take 85.2 lakh. We will compare it with dividend paid. Dividend paid is 4.9 lakh. Whichever is lower will be allowed to us, and this will become our NTI. 30,000 will become NTI. Are we clear on this front? How 57 is calculated interest and how 80M is calculated? I hope you got the point. Another important deduction, ATP If you are any of the cooperative society, you are being allowed 100% reduction on the following businesses. What are those businesses? Sir, if your business is to give credit to the members, sir, if your business is to give credit to the members, sir, ATP is not given to any bank. Remember, ATP is not given to any bank. If your business is to give credit to the members, you are allowed 100% reduction. If you are into cottage industry, you are allowed 100% reduction. If you are into marketing of agriculture produce grown by the members, sir, it is allowed 100%. If you are into fishing activities, you are allowed 100% reduction. If you are into collective disposal of the labor of the members, sir, you are allowed 100% reduction. If you are processing of agriculture produce without aid of power, sir, without aid of power is important, sir. That is 100% deductible business. If you are having any interest or dividend income from investment with other cooperatives, sir, other cooperative imply other cooperative societies, no cooperative banks, sir. If you are earning any interest or dividend from cooperative bank, it is taxable. So income from letting out of godown and warehouse, sir, whatever godowns and warehouses you let out, sir, whatever income you earn, it is deductible. So whatever oil seeds, milk, fruits you supply via primary cooperative society supply to federal government or sir, other government company, that is eligible for deduction. Eligible for deduction. If you are a consumer cooperative society, sir, you are allowed 100% deduction. And if you are other society, sir, if you are a normal society, if you are a normal society, in that case what happens is you are allowed 50,000 deduction extra. But remember, this 50,000 extra deduction is only allowed, sir, if in case this deduction is only allowed if in case, sir, you have business income. If you do not have business income, this 50,000 deduction is not considered by ISEC in any case. In any case, this 50,000 deduction is not considered if you do not have any business income. Sir, I want you all to write down once. Whatever these businesses are now, whatever the businesses are, there are 9 businesses I want you write down. I want you all to write down. Sir, take a paper and pen with you all. We'll write it together. Sir, credit facility to the member. This is the first business eligible for deduction. Okay, sir. Do second, fishing, allied activities. I also don't remember all. I will try to write down 8. You have to write down 7. We have 9 businesses. I will try to write down 8. You have to write down the 7. Fishing, allied activities. Third one we have, sir, cottage industry. Fourth we have, sir, interest, dividend from cooperatives. Fifth we have rent from warehouse and godowns. Sixth, what was, sir, collective disposal of labor. It was something collective disposal of labor of member. Sir, we have marketing of agri produce grown by member. Then we had, after marketing we had, sir, what after marketing what we had, sir, we had, sir, processing of agri produce without aid of power. And sir, if you supply milk, oil seeds, fruits to a primary cooperative society, supplies to federal cooperative society, central government, state government, local authority, yeah, statutory corporation, sir, if you supply any of the things to them, sir, you are allowed 100% reduction. Sir, can you write down 7? Sir, I was able to write down 9 somehow. I don't know how things triggered in my brain. I was able to write down 9. But sir, you should be able to write at least 7, because if an exam it is asked, you might not be able to remember which things are eligible for deduction. So interest on secure, if any of the cooperative has interest on securities or house property, that shall be allowed as 100%. If GTI is up to 20,000 rupees, 100% allowed, sir. No need to worry about that. So 80 QQB, sir, you are being allowed deduction on royalty on books, literary artistic features. So remember, if you are given any films, if you are given royalty on any music, so if you are given any royalty on newspapers, sir, you will not be given deduction on that. Only, sir, books. So 3 lakh rupees or eligible royalty, whichever is lower. So whatever the royalty that you incur, that should be brought to India within convertible foreign exchange up to the due date prescribed by the RBI or within 6 months of the end of the financial year. Sir, this is the list of the sections. Sir, of the sections, sir, there are 80 CCD2, It was available in both the regimes. 80CCH was the section available in both the regimes. 80JJAA is section eligible available in all the regimes. 80LA is also section eligible available in both the regimes. 80M is the section available in both the regimes. Rest all sections are not available in any regime. Last of all, sir, one point to be taken care of. Sir, whenever you pay deduction, normally, sir, normally, whenever the word cash mentioned here is, whenever the word cash mentioned is here is, if for example, if you see 80G and if you see 80GGB, sir, or if you see 80D, sir, there is word mentioned here is cash. Donation should not be paid in cash. So if you pay via bearer check, cross check, will it be allowed? Right answer is yes. For the purpose of deduction chapter, it is allowed. Sir, for 80C, so 80C, nowhere it is mentioned that you cannot pay in cash. Sir, can you pay in cash? Right answer is yes. 80C, you can pay in cash. Sir, for 80 double Z double A, sir, for 80 double Z double A, are you allowed any deduction if you pay any cash? Right answer is no, sir. For 80 double Z double A, you have to pay by account, paycheck, demand draft, and clearing system, electronic clearing system. That completes our deduction chapter also. Come on to ICDS. Only two ICDS I want to discuss, otherwise everything's are very clear. Sir, ICDS apply to every SSC, even to those SSC who opt for 44 AD, every SSC. But if somebody who is not liable for 44 AB audit, if somebody who is not liable for 44 AB audit, so ICDS on such individual HF are not applicable. Normally, ICDS are not applicable to the person who are not eligible for audit. Otherwise, sir, everybody is liable for ICDS. Everybody has to comply with ICDS. Sir, do you think that ICDS are going to help you to compute capital gain, house property, salary? Right answer is no. For computing house property, capital gain and salary, you have to refer respective section. Section 22, section 45, 48, section salary, section 15, 16, 17, 18. You have to, section 15, 16, 17, you have to refer. Sir, can ICDS be followed in cash system? Right answer is no, sir. ICDS is not allowed. Sir, can ICDS going to help in case of maintenance of books of accounts? No, for that matter, we have AS and NDS. So what ICDS do? ICDS only give method of computation of PGBP and IFOS. How PGBP will be computed, what allowances and disallowance should be made, how IFOS shall be computed, that is told by ICDS. Sir, no house property, no salary, no capital gain, no cash system, no books of accounts maintenance has been told by ICDS. So ICDS also apply in case of presumptive taxation. Sir, ठीक है. ICDS do not apply for the MAT calculation. So whenever we calculate book profit for the purpose of MAT, so ICDS does not apply to that book profit. But whenever we compute AMT for the purpose of AMT, we compute ATI for the purpose of AMT. ICDS apply on that. So whenever there is conflict between Ind AS, AS, accounting standards, ICDS, we have conflict between Income Tax Act and rules. So always give preference to Act, then rules, then ICDS, then AS. Sir, ICDS 1 you can ignore. ICDS 2 valuation of inventory is as good as accounting standards, so you need not to study. ICDS 3 construction contract done in PGB. ICDS 4 AS 9 already done. So ICDS 5, 6 are not relevant, sir, need not to study this much. ICDS 7, sir, whether you want to study or not relevant, not asked. ICDS 8 is important, securities. See, ICDS 8 is applicable only on those people who hold securities as a stock in trade. If you have securities held as capital asset, ICDS are not going to apply. If you have capital asset, provisions of capital gain will apply. ICDS are only applicable if you have PGBP income. If you hold securities as stock in trade, so always initial recognition is done with the price that you pay plus the incidental expenditure you incur. Sir, if you are acquiring any asset, then whatever asset you are receiving, sir, FMV of that shall be considered. Sir, if you are buying any bonds, remember, if you are buying any bonds, for example, you are buying bonds rupees 1,000 rupees plus, sir, 6 months interest is also included in that. Sir, you understand this X bond, X interest and post interest bonds. So whatever the price X bond is, that shall only be considered for the purpose of valuing. Sir, initial recognition. How subsequent measurement is done. The subsequent measurement is important. Why? Because every year, sir, we have to take it to cost or NRV, whichever is lower. Cost or NRV, whichever is lower, sir. But in ICDS, sir, we do not follow the individual asset system, sir. We follow category of asset system. How does that mean? Sir, for example, if we have share of rupees 100 cost, so NRV is 70, sir. Whichever is lower turns out to be 70. If you have share B, which is 200, so NRV 210, sir, security wise, it turns out to be 200. So overall security wise, our NRV turns out to be 270. But if we take entire AB, total cost 300, entire NRV of AB, sir, it is 280. So category wise, it turns out to be 280. In ICDS, we do not do individual asset system, rather we use category of asset system. All the shares, take the cost of all the shares, take the NRV of all the shares, sir, whichever is lower shall be taken. No individual shares are being taken. So that is what the essence of this is. ICDS 9, as we have done in the PGBP only, that is only to be considered. ICDS 10, if you have any provisions. See, normally income tax does not allow any provisions. Income tax does not allow any provisions. Sir, remember, income tax does not allow any provisions. Any kind of provision for warranty, provision for leave encashment is disallowed in Income Tax Act. But sir, you are given certain advantages here. Sir, for example, every 3 years you are revising the wages of the employee. You are aware that wages are going to be increased with this year. So, if there are reasonable certainty and fair estimates, then in that case, sir, provision is allowed. Sir, if there is reasonable certainty and it is based on fair estimates, sir, then as per ICDS, then you are allowed. Sir, you are being asked multiple times this question in PGBP. Sir, contingent assets, sir, contingent asset recognized when there is reasonable certainty. Contingent liabilities are not recognized. Provision for gratuity is always disallowed. Provision for assets is always disallowed. Sir, provision on expenditure is allowed only if we are certain, only if we are certain, and only if it is permitted by Accounting Standard 15. Accounting Standard 15 normally permits the provision on the employee benefit expenditure if we are already certain on that. So provision on employee benefit expenditure is normally allowed. Otherwise, no other provision in income tax you will see as allowed. That completes your ICDS. That completes a relevant portion of ICDS also, and that completes your 10th chapter for the day. I think that's all for you to study. Already this video has already been very long. It is difficult for somebody to watch it last day. It may become big enough for somebody to watch it. So I would like to end it today only. Thank you, and end it at this point only, not today. Okay. Thank you so much for becoming part of this session. I really enjoy teaching in English, and because of you all, this environment in the class becomes more lively. If you have any doubt, in the subject, I'm there for you. If you want any content, I'm there for you. Whatever you want, whatever you require for improvement of your studies, I'm there for you. Okay. Only duty that you have to do is just study. I have provided every material possible to you for examination. I am taking marathon in such a manner so that you are able to revise things in more better way. This marathon is not less than any kind of revision series, and this marathon can be referred even a last day before examination also. So do take benefit of it. See, as soon as this video ends, do like the video also and drop a comment on how you took this video. If you really liked my work, if you really liked the way I am doing, the way I am teaching, do share it with your friends. Because your share, your hype, that hype button that you have, your share, your hype, your subscription, your small gestures do motivate me a lot, and it pushes me to come up with more of such content. So, guys, thank you so much for becoming part of this session. Thank you so much for continuously sitting and letting me speak for 6 hours in a row. Thank you so much for such a wonderful session. Bye bye. Take care and enjoy studying. See you guys in some other session. Many thanks for watching. Signing off. See Rahul Satija.